Yo, Stocks 5150. We are back. We are live. What's going to happen today? I don't know, man. Um, I will tell you this. DJT is at it again. He's trying to set it up for the auto industry. So he's saying now he's going to back down on the tariffs for us, the automotive industry. Yeah, we expected this, right? So stay bullish because the only thing the United States has, to be honest with you, that the world wants, in my opinion, is the stock market, money. So that's why it's a big deal that the dollar is not a reserve currency. But that's also why the stock market keeps going. And as soon as that's over, then it'll be over. But until then, we're gonna keep this thing pumping, right? Because otherwise it's dumping. And I don't think nobody wants it to dump. Everybody wants it to pump. You know what I mean? So let's take a look at the charts, man. See where we at. We are I'm gonna have to go get my glasses. I can't see. I said it is true. Yeah. All right, stocks 5150. Yo, so we are sitting at 55.35 right now, and the market is moving along pretty good. I was thinking about, I'm trying to wrap my mind around actually going into a real contract. You know what I'm saying? Like not an option, but a contract. Um, Let me know what y'all think, man. I mean that I risked it for the biscuit once before, but then I ran into a margin problem. And I don't know, they closed my position. I was down though, and they closed it. So I got to one figure out what I'm really doing. That's one. Matter of fact, and this is on the MS, the ES, the mini, micro mini. I'm gonna chart this out and see where I'm at. So this is a 1 month, a 1 minute, 2 day. Let's go to a 15 minute. Do my son it again. All right, so let's see. We should have some jobs data coming out at 10 p.m. Matter of fact, I was working on a beat. That's what I'm gonna call that, Jolts. I'm naming this beat Jolts. I'm gonna export Jolts. All right. Actually, I should abort that. I hadn't even set that up yet. All right, so back to where we was at. Let's see the stock market stuff. I need to look and see about this Jolts report. That'll come out at. It'll be in 10 minutes. I mean, in 15 minutes or so. So what I'm thinking about is doing an actual contract. And you can see we're below the 200. Like if we look at it, let's go to the 15 minute. Go to the 4 hour start at the top. All right, so this is our high. Low. See, we're above the 200, but we're trending down. I should do like Tory Trades and do what's that thing called? Do some trends, right? Just be like, this goes here and that goes there. She makes some money though. You got more money than me. Let's try it. Trend line. Let's lose the ray. So we can go here. This is the low, right? And bring that across to there. Bring this one from the high. This is coming across like so. And then where does she usually have like a price level or something? So we are sitting right here. This is where we're finding support. That's already on there. So I don't need to do that. So if we stay above and we continue to go, if we break below, then we need to wait, right? I don't know how she does it. I need to watch that video again with her and her sister. Her sister's hot, she's hot, but I'm too old for both of them. But beauty is beauty. Shout out to Tory Trades. So let's see. So if we follow this trend up, like right now, you see we're in a kind of bullish, but not really. And this is the 4 hour. So let's go down to the 1 hour. Let's go to the 1 hour on the same one. It's following it up. We're touching it, but we're heading down. You see what I'm saying? This is a down. This is a down market. We've been going down since we started. Since 6 a.m. We've been heading down. So I don't know if I would go into anything right now. Everything seems bearish at the moment. Yeah, I'm waiting for the JOLTS report. Probably pulling back because they're waiting on the JOLTS report, the job numbers. Right now, everything is still muted. You know what I'm saying? Yeah. So we'll see. But right now, March numbers are probably going to be down. That's why the futures went up. Futures are up. You see, like overnight, you see we were heading up, right? And see, so this is because they're pulling up, and then they'll probably just bring it back down to around this level, back to the low, like we had. Put this on the week today. I don't know what trend that was. I had that on, but get rid of it. Remove it. I'm not doing no Tory trade stuff. I can see though. Not saying she's wrong. Her stuff is good, but she be making some money. So what I'm thinking about is doing a futures contract. So I need to go back to the month. I need to go back 3 months. 3 months, and I'm looking at an hour. Look at the 4 hour. Oh, look at this. I've been looking at it already. And seeing I was looking at it on the fib. I was basing it off of this move here, the complete move. And right now, where we're sitting at is at 50%. We're at the halfway point for the overall point. So if we go back to just April 2nd, when DJT made his big announcement, if we go to April 2nd, bring that to the top, right? All right, bring us down to April 2nd. See, this is April 2nd right here, right? So right there, when the tariff talk, I don't know what to call it, whatever he called it, man, Emancipation Day bullshit, whatever. But from there to there, that's that, right? Well, we've already made back. We've came up to this point, and now we're sitting at 78.6. So the next move would be to reclaim this if we go up, or to pull back and come back down to 50%, or maybe 51 right here. This makes more sense. What level is that? That's 5,400. Yeah, that's 5,400. So if we pull back, we'll probably pull back and close some gaps right here, 5,400, and then go up. I don't see us. I don't see they got to have some room for earnings, because you got Amazon and all those big dogs doing earnings this week, and I don't see the market running up in front of the earnings. So I mean, we already done reclaimed that move right there reclaimed most of yeah that did that right there reclaimed most of the tariff talk right there. So that was this big steal, and then it gave it back, and now so we're here. So right now we're back at this level. So if you follow this back right here where we trading at the 78.6%, this is pretty good right here. This is actually where we were on that day. What day was it? April 2nd, right? Infamous day. Is that April 2nd? That is. See, look at that. So see, we're right back. So we closed that gap. So all of that is in the past now. So now we're sitting right back where we were. And the decision will be whether we go back down and trend here for the summer, or if we run up and we go into the summer and we disprove the seller may and go away. We shall see. But for right now, what I'm thinking about right now it's looking bullish according to the cloud. But I'm trying to figure out is how to, and we're sitting above the 200, but I want to do a position, right? But I don't want to lose because messing with futures, man, it's a lot of money and you lose a lot of money if you ain't careful. You know, I'm thinking like checking out my positions in general. I still have 24 days, 51 days, 51 days, and 1 day. This one right here, that's a L. I'm taking an L on my SPX, which is a crazy, crazy thing to say because I literally was up on this. Um, well, I don't know. I was up. That was a day. I might have been down overall, but it seemed like I was up. At one point, I have to go back and check the video, and I was up on that, and now I'm down, and it's a wrap. But I've been sitting in this for 22 days. But I did this kind of by mistake. I did this actually back when he crashed the market because I can't afford SPX stuff, but it's all good. I had it, I was in it, and now it's out. It's over. Like all these trading crap, I'm just giving money away. P&L for the year to date, 646. Come on, man. Gotta do better. P&L for the day, $6. Yay, yay. All right, we got anything working on here? We got this one right here working. So far away. Same for this. So far away. This is because I'm figuring that if we go up during the summer, I should be able to get some profit. This Nvidia, yeah, it's working its way, but it really doesn't want to get above 111. Nvidia is weird. Like it's just sitting and waiting on something. And this is a 135 call. I got that for May. That'll be out in a little while, so I don't know, man. I don't even think that's gonna hit. You would thought that Nvidia would have been up to 130 by now, but it's not. 15 minutes or so before we get the job data. All right, so check it out. Let's go back to the chart. Who drew this? Who drew this all over my charts? What kind of malarkey is this, man? This is Nvidia. Yeah, that's what I expected to happen. And look, bam. Very fun. That's why. Look, this is what's crazy because I was trying to trend this, and I was like, okay, we're running up. Boom, 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 and I was feeling good. This is when I went in that position, and then bam, that happened. See, so I was feeling. I thought following this trend, and I see I should have got out, and I didn't because I got an option. I was like, oh, we're running up. Now we're gonna get above the 200, and we didn't. Boom, and we're back here, but running out of time. And we're definitely not up here where I was expecting us to go. Like, see, that's only 135. That was my target. I was figuring that we would come up here and get back to business. And that has not happened. So that was that for NVIDIA. Yeah. This TSLL, I'm in a covered call on my other account on that. And those shares, what is this? This is at 1031. I did a $8 an $8. I sold an $8 put on that. So far so good. I'll probably come out of that. Um, I'll probably get the premium on that actually because the way this is trading, it looks like it wants to do something. If it gets above that 200, I'll definitely get the premium, and then I'll just do it again, and I won't purchase the shares. But 629 is the low for that. What else I got going on? Oh, UPro. Yeah, I did one for UPro. Let's look at that. UPro 45 was the low. Right now it's sitting at 68. I think I did a 61 um solar 61 put on that one. So I'm still sitting good at 66. So hey, that's good for me too. That is good for me too. And just make the premium. I got 2 more days. I think, yeah, to the second. 1, 2, 3 more days. Oh man, a lot can happen in 3 days. But we'll see. I'm I normally will be playing some music. I might actually have the music on. No, I don't have no music on yet. But I'll put it on after the jobs report. Because we're waiting for that to come on. Right now, I'm just gonna ramble and chart a little bit. What else am I thinking about, man? I'm gonna tell you. Um, I really gotta figure out how to be profitable over here with futures. You know, and if I can, like, check this out. Let's look at this. Matter of fact, let's see what how she does it. All right, she got a trend line class. How to trade trend lines in under 17 minutes, and we have 10 minutes. Let's see. Let's go. We're gonna pull this up.
And adapts to shifting markets. With an expert team behind the scenes, Active doesn't just ride the index, it seeks to outperform it.
Let's see how
Do you ever wonder why some traders are consistently profitable and others
does her
aren't
thing.
using trend lines? The difference between the two is how each one uses the trend lines or utilizes the trend lines. Hi traders, welcome to my channel. I am Tori Trades and I have been trading the markets for over a decade now. I'm here to share valuable insights to help elevate your trading. So in this deep dive masterclass, we're going to be going over understanding trend lines, what they are and why they're indispensable, drawing accurate trend lines step by step, and then the strategy, how to implement these trend lines to ultimately make decisions in the market. I'm also going to show real world examples, real-time examples with real trades and real-time market data, and even some advanced tips. So if you don't already know, trend lines are the foundation of technical analysis. They represent the direction and speed of a specific instrument, and they ultimately help traders identify trends and possible reversals. So what types of trend lines do we have? We have two types of trend lines. We've got an upward trend line, which connects higher lows, indicating bullish movement, and we've got a downward trend line which connects lower highs and signals bearish movement. Bullish trend lines, bearish trend lines, upward trend lines, downward trend lines. Now, how do we draw accurate trend lines? This is the fun part. So let's get into actually drawing these trend lines and how I utilize them. You have to start with a time frame. Now, what does that mean? You could be a day trader, swing trader, a long-term investor. How do the time frames come into play when drawing our lines? And the next thing is reliable tools. What tools are we going to be using to draw these trend lines? I'm going to be using a platform such as TradingView, and I'll be using the drawing tool to help me draw these trend lines. Now let's get into some actual chart time. Here we go. All right, we are opening up TradingView. I've got a naked chart on the screen right here in front of your eyes. I'm going to show you guys how I mark up my charts, how I use time frames, and the tools and which highs and lows I use to utilize my trend lines and how I draw them. I'm going to start by prefacing, anytime I mark up my chart with a completely new instrument, I will always do a top-down analysis. I am always going to start on the highest time frame that I possibly can. So right now we are looking at the YM. This is actually the MYM. This is the Micro E-mini Dow Jones. This is a futures instrument, and this is the micro version of the Dow. So if you guys know what the Dow Dow Joneses. It's an index. And through the futures market, you are able to trade the indexes here, or the indices. All right, so we're going to start in the monthly time frame. So we're going to hit the M up here in the top left. And now when drawing my trend lines, the reason I go to the higher time frame is because I want an overall view. I want to know overall from the far left to the far right, the hard right edge where the price is trading at right now. I want to know overall which way is this trending. And I want to go ahead and mark up my chart as well. So we're going to start from the beginning, marking up our very first trend line. Now, ironically, you would think I would use the trend line tool in TradingView, but I actually don't, because the trend line tool in TradingView gives a point A and point B and it stops. I want a point A and a point B, and then I want the line to go indefinitely in one direction. So I actually use the ray tool when drawing my trend lines. All right, when drawing our very first upward trend line on a chart, we're looking for the lowest point we see on the screen. That's point A. Point B is going to be a higher low where the price has not yet intersected, and the most recent higher low. So let me see if I can help you guys understand this. We're not going to use this higher low here because price has already crossed the line. It's already intersected. So I like to visualize this line as though it's truly holding the price up. Now here would be pretty accurate, but I like to take this point B and drag it to the most recent touch point, which would be right here back in October 2nd, 2023. So now we have our very first upward trend line. Point A, point B, point C, 3 touch points. But when using the ray tool, it only gives us 2 points to adjust. All right, we have drawn our very first upward trend line. Now, this isn't the end. So we have just simply drawn one trend line on the monthly time frame. We need to continue doing our top-down analysis. So that means we need to work our way down to the lower time frames. So we're at the monthly. Let's go down to the weekly. And essentially what I'm trying to do is modify my lines to make sure they're a little bit more accurate. As you can see, it's a little bit off now, so I need to adjust it to this new low. And then what I'm doing is I am capturing as much of the movement of the price as I possibly can. So I'm going to continue to connect these trend lines, and it will start to look like a fan of trend lines. Each new line will use the previous point B as its new point A. And let me show you what I mean. So I'm going to continue to mark up my charts and draw steeper trend lines. I'm now in the weekly time frame. I'm going to go back to that ray tool. And now my point A is going to be my previous point B, that previous recent touch point. Boom. And now same scenario. I'm looking for the next low, the next most recent low. Now you'd think it would be here, but there's an even more recent low over here. So I'm going to take this point B and boop, move it right here. So now we've got yet another 1, 2, 3 touch point upward trend line, same as the last one that we drew in the monthly time frame, but now we're in the weekly. And now we have truly capitalized or identified as much movement as possible. So we've got one trend line and we've got another trend line here. We are truly following the price in this direction that it's going in. We're utilizing all of the movement here. All right, we're in the weekly. We got to continue to go down. We're going to go to the daily. Now there's going to be some instances where you move down in time frame and there's not anything different you can do. There's no other trend lines that you can draw, so you'll continue to simply move down time frames. So we're in the weekly. Let's move down to the daily. All right, in the daily time frame, same scenario here. We're going to use our previous point B, which was right here, as our new point A. And then we're looking for the next most recent low. Boop. Right here, without price intersecting. All right, we're at the daily. Let's go to the 4-hour time frame. Now, as far as our upward trend lines go, we cannot come in any steeper. This is an instance where there isn't a change or there isn't a difference. There's nowhere we can draw an additional trend line from the daily to the 4-hour. But what I can see is now we can finally draw our very first downward trend line. So we've got our upward trend lines, but now we need to find our downward trend lines. When drawing downward trend lines, it's the same concept that we use for the upwards, but opposite. So for the downward trend lines, we're looking for the highest point we see on the chart. The highest point I see on the chart is going to be right here at 45,224-ish. So that's going to be your point A. Now point B is going to be a lower high, a recent lower high where price has not yet intersected. That's as far as we can go with the downward trend lines. But I can see a steeper downward trend line that I can draw right here in the 4-hour time frame without having to go down to the 1 hour yet. So I'm going to come in with another trend line. New point A is always going to be previous point B. All right, beautiful touch points here. Now in the 4-hour time frame, that's as far as I can go. But now I can go down to the 1 hour time frame. This is where we're going to stay. How do you know what time frame you stay in or which time frame you stop in? And that's going to be which time frame you have committed to or decided to trade in. I don't jump time frames. I don't go from lower back to higher looking for sooner entries. I commit to one time frame and look for my entries and exits in that specific time frame. But when marking up my charts for the first time, I will always do this top-down analysis. So that's how I know I'm going to stop in the 1 hour time frame. But I do see some adjustments I can make to my lines, and I can see a steeper trend line that I can draw. So we're going to continue to use our previous point B as new point A, and here we go. This is a lower high right here. Now I can even come in a little bit steeper. Previous point B, new point A, and here we go. All right, if the price of the YM can continue down right here, this will be a 3 touch point trend line right here. Now, we've done all of our analysis. We've done all of our chart markups from top down, from the monthly to the weekly to the daily to the 4-hour, all the way down to the 1-hour time frame where I'm going to make my trading decisions. So I have demonstrated how to mark up your charts and how to accurately draw your trend lines. Next, how do we incorporate these trend lines into our trading strategy, and how can they provide clarity and confidence? We're going to go over 2 different types of examples when trading trend lines. There are 2 options. We can trade a breakout strategy or a bounce strategy, or a combination of the 2. So when incorporating the bounce strategy, when price gets to one of our trend lines, we're anticipating that the price is going to bounce off of that trend line, suggesting that this is going to be a trend continuation. And I'll give you an example in just a moment. And then the breakout strategy, which is my all-time favorite. This is when price breaks through a trend line, indicating a potential trend reversal. Okay, so let's go over the concept of trading the bounce of a trend line. So right here where the price is at now of the YM, we're going to go ahead and take a short position, anticipating that this is going to be a trend continuation, that this is simply just going to be yet another touch point to this downward trend, and it's going to continue down. So this is where we would place a sell order. We're in a short position now. Now, how do we mitigate our risk? So we are currently in a short position, anticipating that the price of the Dow is going to continue down and just simply bounce off of this trend line. There's going to be many ways of mitigating risk, understanding the capital that you have to trade, the capital that you have in your account, and how much percentage in conjunction to the capital should you be risking. A great rule of thumb, especially for beginners, is going to be anywhere between 1 and 2% of your capital. Now, let's say you have an account size of $128,000. That means we could risk anywhere between $1 to $2,500 in this specific trade. So now that's a good rule of thumb to know, okay, if this trade doesn't work out, we're willing to risk $1,000 to $2,500. But now let's
really whippy here. 7.19 million for Jolt. CB consumer confidence showed 86, weaker than expected as well. 86 weaker than expected as well. We are chopping back and forth here, but slightly down after this Jolts report goes live. Again, 7.19 million versus about 7.5 million expected. The market is negatively reacting so far to this report. Under the 200 exponential now, but again, 7.19 million versus 7.5 million roughly expected here. We'll put this up on screen. CB consumer confidence showed weaker as well than expected. Weaker as well. 7.19 million for Jolts. $7.19 million versus 7.5 estimate. CB consumer confidence showed 86 versus 87.7. Market is kind of, sometimes the first move is the wrong move, as we say here a lot, and market's popping back up some here. We'll see if it holds. Markets pump it up. Maybe this means more optimism regarding rate cuts. Let's take at the rate cut expectations again. You can see the data up on screen. It's in yellow right now. Slightly better than expected Jolts report here. And the market, honestly, is loving this data here. Look at this move, chat. Wow. Huge pop, huge surge. Wow. Markets are mostly up from this report. Very whippy action here.
Yeah, I'm not surprised about this though. The way the reaction is on the market, but we'll see how it goes.
Market is surging up on stronger Jolts. I'm trying to look at the rate cut expectations now here. So here's the CME watch tool. Maybe it's more optimistic regarding cuts. Still 7 to 93%. NASDAQ pushing up big here.
We're still
I don't know about
right
big,
now.
but it's definitely up. Tesla rebounding back up too. Yeah, it's definitely possible it's chop.
Well, definitely chop, bro. So I don't know. Hopefully my positions turn green before the end of the week, and that's all I need. All right, stocks 5150, yo. I'm gonna let y'all listen to some music and I'm gonna be out, man. But the Jolts report came in and this is the reaction. So mute
Amazon
it.
looking pretty strong though, coming back. Tesla almost green on the day. Almost green. Not quite green for Tesla, but almost green.
Amazon is the play. Amazon is who I like the most. I'm a Beth Bezos dude.
Yeah, maybe it means less inflation. That's what I'm thinking here. It's not really a huge move, but it could mean less inflation.
Nvidia's running up. See what Bloomberg has to say about it.
Fast food are fine as an occasional convenience, but researchers say consuming large amounts increases your risk of an early death. In fact, each 10% extra intake of foods high in fat, salt, sugar, artificial sweeteners, and other additives increases your risk of dying before 75 by 3%. And the study in the American Journal of Preventive Medicine says ultra-processed foods are implicated in 1 out of 7 premature deaths in the U.S. Vicky Barker, CBS News.
Yeah,
Danish
but they
drug
still
maker
feeding
Novo
us that
Nordisk
crap
is
though.
rushing
Everywhere
to
you go.
cash in on a new market for its weight loss drug Wegovy. Now that it's no longer in short supply and compounding pharmacies have been restricted from making cheaper versions, the company says it'll offer its injectable through telehealth providers Hims and Hers and LifeMD. Shares of Hims and Hers are soaring on the news, and Novo Nordisk stock is also up. Deborah Rodriguez, CBS News.
In my opinion, those shots
This is
are gonna knock
Bloomberg
off a lot of y'all,
Intelligence
man.
with
But
Alex
hey,
Steele and
I ain't
Paul
overweight, so
Sweeney.
it
The
ain't
real
my bag.
outperformance has been
Area,
the
man. I
U.S.
gotta carry
corporate
that
high
good.
yield.
Are the companies lean
Yeah,
enough
that's
that they
definitely
trimmed
gonna
all
knock
the
a lot of
fat?
people
The
off. So watch
semiconductor
it.
business is a really cyclical business.
Breaking market headlines and corporate news
get
from
back to the
across the
charts.
globe.
Do investors like the M&A that we've
I'm gonna play
seen?
some
These are
Bloomberg for y'all
two
today.
big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele
All
and
right, we're
Paul
coming up
Sweeney
getting
on
green. I'm
Bloomberg
still
Radio.
down so far though.
All right, good
Still
Tuesday
down,
morning
way
from the
down.
Bloomberg Interactive Broker
I need
Studio
something
in New York
miraculous
City
to
to our
come out. Like I
worldwide
need
audience. We're
DJT to
streaming
come
live
out and
on
say
YouTube
no
as well
more
as
tariffs.
youtube.com. It's our
That's
Bloomberg
it. And the war
podcast
in
live,
Ukraine
and
is
that's where
over.
you'll find us.
And
Busy day coming up.
China
We had some
is my
economic
friend.
data came out
And
today. It's
India is my
consumer
friend.
confidence came out a
And
little
Canada's
bit
my
weaker
friend.
than
And
expected. We'll
Mexico's
break
my
that
friend.
down coming
And
up.
I love
We're also going
everybody.
to check
What do
in
you
with
mean? I
Nathan
love
Dean, Bloomberg
everybody. I
Intelligence
love
Senior
everybody.
Policy Analyst
Everybody's
on
great.
Trump's
That's what I
first
need
100 days. We
DJT
have a
to
lot of
say.
policy
And
decisions
then
coming
just
up here. We
pump the
got to
market
get
up, man, so I can get
some
green on these
legislation passed
positions.
before this government
Then I
funding
feel
and
like a
the tax bill.
success,
So
even though
he's
it'd be
going to be in
because
the
he
studio
said
to break
something. But
that
I'm
down.
cool with
David
it.
Welch,
I just need to
Bloomberg
get this
Detroit
bread.
Bureau Chief. General
I'm here to
Motors
get the bread,
pulling their
man.
guidance, postponing their earnings date. Folks, that
Oh yeah,
rarely,
look at that. That's a nice
rarely
move right
happens, and
there.
it just shows you that they are
That's only on the
scrambling to try
1
to
minute,
figure
but
out
look at this.
what
We're
is
heading back
the
up.
impact on their business from
Heading
tariffs.
back up.
They
So let's
still
go
don't know.
back
Lee
out. Let's
Klasko,
zoom out.
Bloomberg Intelligence
See
Transports
where
analyst,
we're
going
at.
to talk to us about UPS. They came in with some disappointing numbers there for the deliverer. So we got a lot coming up here on the earnings front and on the economic front, and we'll get it all in there for you. Let's start off with Lisa Mateo and a Bloomberg Business.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks, ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more to ibkr.com/around the clock. All right, like you said, more economic data out today. We have the JOLTS
Let's
job
see what
openings
we
for
got,
March.
what we got.
Expectation was for
All right, we're
7.5 million.
bumping
Came
up
in lighter
against
at
the
7.19
78.6.
million.
Haven't
And the
got on my
conference
fib.
board, consumer confidence
And
for April. Survey was for
that's a
88,
move in the
came
right
a bit weaker,
direction. It's kind of
86.
thinning out though.
Early this morning, wholesale inventories. Expectation was for a rise of 0.6%, came in up 0.5%. Then retail inventories, though, fell. The survey was for a rise of 0.4%, came in with a drop of
close,
0.1%. To the markets we go, where stocks are starting to advance. This is after more companies, though, pull their earnings outlooks for 2025 due to the impact of the trade war. Talking about companies like General Motors and JetBlue. General Motors down 2%. We have JetBlue off about 3%. UPS backed away from its 2025 financial guidance. The other news, it expects to cut
20,000 jobs this year, closed dozens of facilities. It's been reducing shipments from Amazon. That's the reason for that. Its shares are down about 0.8%. So we have the NASDAQ up about 0.3%. The Dow up 0.5%. The S&P 500 up 0.2%. The 2-year yield at 3.67%, down 1 basis point. The yield on the 10-year, 4.19%. That's down about 1 basis point. And the Bloomberg Dollar Spot Index up about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. All right, let's get back to that consumer conference data here. So for April, coming in at 86, a little lighter than estimate, and a pretty decent decline from the month before. Joining us now is Stephanie Gouchard, senior economist at the Conference Board on this data. Stephanie, walk us through your takeaway on this.
So yes, the index declined 7.9 points. It's now the lowest reading since March 2020, so since the beginning of the pandemic. And what's really driving the index down is consumers' expectations. I mean, the assessment of the present situation was a bit down by relatively stable, but the
I think we're gonna end the
expectation
day
index
down,
really
believe it or not,
fell
once
by a
this gets
lot.
digested.
And the three components of that expectation index are
Or
in negative
this could
territory,
be a
which
play
means
on
that
the
people
fact
are
that maybe
expecting business conditions to
consumer
deteriorate, they're expecting the
sentiment is
labor
down and
market to
stuff, then J
deteriorate,
Powell might
and
do a
very
cut, do an
importantly,
interest
they
rate
are
cut,
now
because it's like, okay,
also
we got some pain in the
expecting
market now, so
their
let's do a cut.
income to
That could be
deteriorate in the
what's
next
happening
6
too.
months, which means
And the
that,
market
the
is
worry
forward
that they
thinking,
have been
the market is
expressing
forward thinking.
recently about the economy, about the labor market, now they feel much more personal, and they feel like this is going to affect them
Right now,
personally
not
in
much
terms of
going on.
income.
Real quickly, Stephanie, the job market, how does that impact consumer confidence?
So it impacts in two ways. It plays in the assessment of the current situation, and so far so good. The labor market has been weakening a little bit recently, but we haven't seen a massive increase in layoff or a massive increase in unemployment. So that component is quite stable. The other way it's affecting the index is via their expectations, and this is where we see a real decline.
All right, Stephanie, thank you so much. We appreciate it. Stephanie Gouchard, senior economist with the Conference Board. Again, U.S. consumer confidence fell in April to an almost 5-year low on growing pessimism about prospects for the economy. Market drivers today brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. So again, we've got the stock market moving higher here. The S&P is up 10 points. The Dow's up 188 points. Let's see where the action is under the hood with some of the markets. On stocks on the move today. We're joined by Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, there's a couple names I'm keeping in mind. I'm keeping eyes on Amazon. This is actually a big name that people are keeping an eye on this morning, and that's because the White House is saying that Amazon is quote unquote being hostile for saying that it's going to actually report how much tariffs are being calculated into the prices. So when people go on Amazon, they're going to see a product that they're going to purchase, and it's also going to additionally show how much of the cost for that product is due to tariffs. They're saying Caroline Leavitt, she's the White House press secretary, she told reporters today that this is a hostile and political act by Amazon. So we are seeing Amazon shares a touch lower this morning, but I'm also keeping an eye on Honeywell.
I told
This is
you,
one of the,
Amazon is my
bigger
man.
gainers
Jeff
in the S&P
Bezos don't
500
care.
today by a percentage basis. And this is after
Yeah.
the company lifted its earnings outlook, and it said that it's going to be shaking off the impact of tariffs. I mean, this is a really big deal for the sector when we think about aerospace and defense companies and just the broader uncertainty about how tariffs are really going to play a part in some of these firms. But the fact that they were able to raise their full guidance for their EPS, and also saying that it'll offset about $500 million in tariff exposure with their price changes and other actions, they're hoping to protect their bottom line. So, of course, this is great news for investors here.
Yep. Also, the company is planning to split into 3 separate companies, and that multi-pronged approach also helping to offset the tariff impact. We're wrapping it up here with Hims and Hers Health.
Yes, Hims and Hers, keeping an eye there. We have the stock surging. It's up about as much as 33% today. This is after a deal to sell Novo Nordisk's Wegovy at a bargain price. We know that Hims and Hers is really, really great for finding prices at a decent level in terms of a lot of these weight loss drugs. But the fact that they're going to be having Novo Nordisk saying that it will sell, that it was popular weight loss Wegovy, it's going to be a really good thing for the stock. And as we see, it is benefiting off of that. And if you look at Hims and Hers on a year-to-date scale, up about 49% so far this year. So great news for the stock.
All right, Nora, thanks a lot. Really appreciate it. Norma Linda joining us from Bloomberg News. For more conversations like this, listen to our Stock Movers podcast. Subscribe for 5-minute episodes and the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, in studio, this is a treat. This must mean something.
I know, it's big. Something's happening. Somebody's buying somebody a free meal today. That's why I'm guessing Nathan
That's what I'm thinking. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joins us now. We have 100 days for President Trump. He's celebrating with a rally in Detroit and hitting the road. What does that signify to you?
Well, I think what we're thinking about is what's going to be the next bigger thing for the markets, because obviously we've talked a lot about tariffs, but just this morning, Treasury Secretary Scott Bessent was talking about deregulation. So what we're doing is we're telling our clients that's probably the next biggest prong for the next 100 days, because there was a lot of sentiment coming into the election about deregulation, but there's no magic wand. You can't just say, poof, deregulate.
There's no executive order for that?
Well, there are executive orders, but they're somewhat limited in what they can do. So you need to go through this rulemaking process, and you needed agency leaders to be put in place. Those agency leaders are now being confirmed by the Senate. And so in the next 100 days, we think the proposals, if you will, for a lot of the industries we cover, namely energy, technology, and financial services, these proposals are going to come out in the next 100 days. So he wasn't wrong when he said deregulation is coming.
So I was at an event last week in Oklahoma City, and the Interior Secretary said that they're going to change permitting days to 17 days. And actually maybe 14. Either way, that's nuts from like multiple years. And if you include environmental permits, it'll just be a little over 20 days. And he said he can do that because President Trump declared a national energy emergency. Is it that simple?
It is for the energy sector. So out of the sectors that we cover, if you're in the energy space, you have to pay a little bit more attention to these executive orders like you were talking about, Paul. So when the Secretary of the Interior says they can cut these permitting times down, he can. But it doesn't work like that when it comes to financial services. So there's a lot of financial services investors who are like bank deregulation, think of cuts to capital requirements. That has to go through something called the Administrative Procedures Act. Long story short is it takes about a year.
All right, one of the other growth agendas I think that President Trump and his administration came into office supporting or proposing was just a continuation of the tax cuts, the 2017 tax cuts. Where are we with that whole legislation?
Yeah, so the House wants it wrapped up by Memorial Day. Speaker Johnson says he wants it done by Memorial Day. Treasury Secretary Scott Bessent said July 4th is the date that we're going to do it. We're telling our clients that we think it's going to come before the August recess, but the deadline you need to pay attention to is the deadline of the debt ceiling. And whenever that X date is, Treasury says they're going to have a new X date later this week, early next week. Our chief rate strategist, Ira Jersey, has it around late July. That X date is the date that the reconciliation bill most likely will get done. Because if not, then they're going to have to do something else to raise the debt ceiling.
Do you feel that July 4th for passing a budget, et cetera, is that realistic?
I think it's feasible but difficult. So I think more likely than not, it's going to come in late July or before the August recess.
But was it one of those things where like you do July 4th and you don't let anyone leave because everyone wants to go away for holiday celebrations, but they make them stay? Is that the idea?
Yeah, and I think even if they don't get it done by August, they'll keep them around and say, look, you're just going to have to be in the 100-degree heat.
I'm a big July 4th guy. That would be good incentive for me if I were a lawmaker.
Yeah.
So how are we paying for all this stuff? Because he's talking about more tax cuts, and it's in the trillions of dollars. And how do we pay for that?
Yeah, so there's really 4 pillars to this. The first one is you can increase the deficit. And this is what we think is the most likely outcome. The other 3 pillars are cutting Medicaid, SNAP benefits, the Inflation Reduction Act. And just because it's much easier to kick the can on the deficit and to vote for a deficit increase than it is to cut Medicaid or cut the food, the program formerly known as food stamps, we think that Congress, more likely than not, is going to say, let's take the deficit route and we'll just borrow today to spend for more later.
I mean, isn't that what we've been doing forever? So how is this one different?
Well, it's not, because Congress, at the end of the day, they think 1 to 2 year terms. They don't have to do with a 10-year treasury or anything like that. They think before the next election. And when Elon Musk comes in and says, look, I want to cut and get us back our fiscal house in order, majority of the payments that go out from the U.S. government are mandatory spending, Social Security, Medicaid, Medicare, and you need Congress to deal with that. And it's the third rail politics, because if you vote to say that I'm going to cut Medicaid or if I'm going to cut Social Security, then more likely than not, you may be out of office come the next election.
That's politics.
Yeah.
All right. Nathan Dean, thank you so much. We appreciate it. Nathan Dean, Senior Policy Analyst, Bloomberg
Politics,
Intelligence.
man.
Nobody
Politics.
does it better. and he works with us. He's on our team, so that's cool. And he was in our Bloomberg Interactive Broker studio today, so we appreciate that. Markets slightly higher here. The S&P's up 4 points, the Dow's up 130, and Nasdaq's up at 20 points here. Again, some of the consumer confidence data coming in weaker than expected, and a 5-year low actually. So again, some of this uncertainty starting to creep into the hard data. We'll have more coming up. This is Bloomberg. Good morning.
Yep, I told you we was gonna be pulling back down. I knew it. Too good to be true to go up. Yeah. Fickle, fickle, fickle this market is. Fickle, fickle, fickle.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The S&P 500 looking for a 6th day of gains. This is ahead of more earnings. We have 44 companies in the S&P 500 reporting today, so let's get to some of them. Let's start with Honeywell. First quarter profit beat estimates, raised its full-year guidance for earnings per share, and is expecting to offset $500 million in tariff exposure with price changes and other options. And that has shares higher. Their shares up nearly 5%. Coca-Cola posted quarterly profit beat expectations. The company also said it expects tariffs impacts to be, quote, manageable. It also maintained its guidance for sales growth and profit. Its shares are a little changed right now. Kraft Heinz trimming its annual sales and profit outlook. Its shares are a little changed. And PayPal left its full year forecast earnings unchanged even after reporting a stronger than expected first quarter than analysts were expecting. PayPal is little change right now. Things are starting to change. The two stocks now. We'll go to the NASDAQ, down about 0.1%, 21 points. S&P 500 down 0.1%, 6 points. And the Dow up about 0.1%, 77 points. So little movement in stocks this morning. We go to the Bloomberg Dollar Spot Index, up about 0.1%. The 2-year yield 3.67%. That's down 2 basis points. The yield on the 10-year 4.18%, and that's down 2 basis points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Breaking news for you. This is according to the Washington Post. Amazon says that the plan to show tariff costs in a breakdown when you buy something is not a consideration. That was subject, of course, of the White House press conference that happened earlier today with Treasury Secretary and the White House spokesperson.
It's according to the Washington Post.
According to the Washington Post,
Yep.
Amazon says that the plan to show tariff costs is not a consideration. We'll follow that as the news crosses. All right, let's get to earnings and go to GM. So regardless of the quarter, they pulled their guidance and moved their earnings call to Thursday. They also froze their share buyback, all on issues surrounding tariffs. David Welsh is Bloomberg Detroit bureau chief to recap some of those earnings. David, why did they push their call 48 hours? What are they going to learn in those 2 days?
As they were preparing last night for today's earnings call, there were reports coming out from us and others that the Trump administration would relax some of the auto tariffs, but there's no detail in there. There's some out there that they won't stack metals tariffs on top of auto tariffs, for example, and there could be some relief on parts, but until automakers look at the details and see exactly what they're going to have to pay and what they won't be paying, it's hard for them to forecast earnings and sales. And look, they have all kinds of ways to try to plan for tariffs, mitigate them, and also model out the impact on the business. And they can't do any of that until they know exactly what it's going to say. So I think what GM did is they looked at this and they just said, hey, the guidance that they had given out did not count really for any kind of major tariff scheme here, despite the fact that Trump had campaigned on it and said he was going to levy them. They gave guidance that had nothing to do with those tariffs. I think probably the tariffs are bigger than GM thought, much more aggressive than GM thought. So they've withdrawn the guidance. And they had a $6 billion share buyback. 2 of it's already funded and will be done in the second quarter. The other $4 billion's on hold, again, until they can understand what the tariffs will mean for their profits and their cash flow. So this is all about finding out what the details are and then trying to model and plan the business going forward. And they just don't feel they can do it right now.
What are GM and some of the other auto manufacturers doing now, David, in terms of, are they making any changes to production, to sales incentives, or is it just business as usual as they try to figure out what's going on?
There are small changes here and there. It's really difficult to change production or change your parts. I mean, you can't do that overnight. You can't. It can take a year to do that, let alone, we've been at this for a couple of months. But one thing General Motors has done, so they have 4 pickup truck plants. It's their highest volume vehicle, the Chevrolet Silverado and GMC Sierra. 2 of the plants are in the U.S., one's in Canada, one's in Mexico. Of course, those vehicles coming from Canada and Mexico are subject to tariffs, at least on the parts, the non-U.S. parts inside them, and that's pretty substantial. So what GM has done there is they've jacked up production at their Fort Wayne, Indiana plant to get more pickups out of there. They've just increased, they were already running 3 shifts, but they've increased the line speed, so they're working it faster to get more vehicles out. It'll add about 50,000 trucks a year, and that's one way to offset tariff production of trucks and sell American-made vehicles. And you're seeing stuff like that. I think some companies may be slowing production of some vehicles that have tariffs on them because they either can't pass the cost on to consumers, or it's no longer as profitable to sell so many of them. So you may be seeing some of that stuff, but a lot of it's been business as usual, but you're seeing some small moves like GM has made.
Well, really interested to hear that call on Thursday. David, thanks so much. David Welsh, Bloomberg Detroit bureau chief, joining us there. So for the broader markets, the question is, where are those IPOs? Where's all the M&A? What happens to private markets? We heard that report, was it over the weekend, that Harvard wants to be offloading, was it Harvard or Yale? To
Yale.
offload their private equity slots because they really need the liquidity. Joining us now is Ted Swimmer, head of capital markets and advisory at Citizens Bank. Ted, what's your world like right now? Like, what are the concerns? What are the positives?
Well, good morning, Alex, and good morning, Paul. Things have certainly slowed over the last couple of months from an M&A perspective. As we entered the year, we thought with lower regulation, potential upbeats in earnings, that we were going to get off to a really good start in M&A, and it started out that way. There was a lot of really good activity going on, but since Liberation Day, we've certainly seen things slow down a little bit. It's hard to find a buyer and a seller who can agree on what the next 6 months, a year, 2 years look like, and therefore get concerned about whether they should ink a deal or not. After saying that, it is still very orderly out there. We're still seeing a fair amount of conversations going on. Our pipelines at Citizens have never been bigger, so there still feels like a lot of activity, a lot of discussions going on. It just feels like at the moment it's hard to get to a actual final contract on a deal. But it does not feel like the world, the ground is crumbling. It still feels like there's activity. We saw a couple of deals get announced last week. So it's not the end of the world, but it's still not as busy as we'd hoped it would be.
Ted, I know at Citizens Bank, you guys target, and a lot of your clients are middle-sized businesses, and a lot of folks are saying, the mid to smaller companies, they might feel the tariff impact more than the larger companies, the Amazons of the world, the IBMs of the world. Are you hearing that from your clients that, boy, we're a little bit more, this is going to be an issue?
It's certainly industry specific as we talk about it. I mean, we're in the data center space and they're not all that concerned about tariffs, but certainly those who can work with China. We have customers who have drawn on their lines to try to build up inventory pre-tariff effect. So we've seen some higher loan utilization as a result of that. So yes, we're seeing and feeling some of that, but it's really very industry specific on who's having that impact and who isn't.
So what do you make of where the private markets are going to go? I just was mentioning how Yale wants to offload some of their private equity stake in order to get some funding and get liquidity. What are you hearing on that end?
This is a good market for private capital, especially on the loan side. With the banks backing up a little bit on being able to give certainty on underwriting positions. We're seeing some private capital reverse trends that we saw in the first quarter when the syndicated market was going more banks. Now private capital has a little bit more certainty on their deals, so we're seeing that. That impacts the leveraged loan market. On the offset, it gives banks a lot of ability to lend to the direct lenders, lend to the private capital, do equity issuances, do bond issuances as those markets come back. So it works in both ways, but we're seeing private capital have a really good opportunity to put some loans to work on deals that are a more difficult time getting done in the syndicated market right now. So there's some good and some bad, I think, with everything, with what's going on in the market right now.
From my Wall Street days, I remember being taught early on that M&A activity in large part is based upon confidence and certainty. The more a C-suite and a board feels about their business, more confident they feel about the trends in the industry, the more aggressive they can be in terms of making a big capital commitment or making a big M&A trade. That doesn't seem like the environment we're in today.
Again, it's industry specific. So I would agree with you, Paul, in certain areas where tariffs or policy may have an impact. It seems like the M&A processes are being delayed a little bit till there's more certainty around what's going on. In other places, we feel very good about people needing to transact. What's different about what's going on here than we've seen in a lot of other markets is the loan market, the bond market are acting orderly. We're not seeing a time where there's not execution of deals. We've seen people go to the bond market today. We're seeing them go. We saw them go last week. So we're not in a frozen period of time. And so if you're in an industry where it's not going to be impacted by tariffs, we're still seeing not robust M&A flow by any stretch of the imagination, but we're certainly not seeing a shutdown of the market altogether.
What do you think brings back the animal spirits? Like what specifically would we need to see? And I know everyone's going to say clarity on tariffs, but in theory, like what is that your clients are like, press the go button?
I won't say what you just said not to say, which is clarity on tariffs.
I mean, everyone would like that, but something more concrete.
But I think as more of this goes on, look, there's still a lot of money sitting on the sidelines looking to make acquisitions, looking to expand businesses. I think corporates have a decent, we saw Global Payments last week make a very nice acquisition. So we're seeing some of that still go on in today's market. I think we will continue to see those non-tariff related businesses continue to make acquisitions. The headlines are M&A is down, and that is factually correct, but it is still, we are still seeing and feeling conversations going on in a lot of different industries, which I don't think it's going to take a lot to bring those deals to completion and continue to build some momentum into the M&A markets. I think there are going to be certain industries we won't see things happen for 6 months to a year or maybe longer. But I don't know that that's going to impact the whole M&A market like it did during COVID, or it did in 2023 right after the banks filed, or it did certainly in the Great Recession. I think we're in a different market and we're feeling different things right now. Again, we've seen transactions get announced even last week during all the noise that was going on.
How about the IPO market? Let's look at one StubHub. You guys are named a co-manager on that deal. That seems like a deal that would walk out the door. Talk to us about StubHub as just emblematic of what's happening in the IPO market.
I think you need, in the IPO market, to really take off, that's where you really need confidence and you need consistency. There are a couple insurance deals that we hope to get announced shortly that we think would be another area that we could see the IPO market start to pick up. But it's still very tough to test the markets right now, with the fear that something in the middle of your issuance day would hurt crater the stock. So there's a lot there on the sidelines. There's a lot there ready to go. StubHub is a good example of something that could go. I have no idea.
They've been maybe going, could be going for how long now?
Yeah, again, but there are industries that are not going to be impacted like this that I think you will see. As soon as there's a little more stability in the market, test the markets and bring the markets out.
All right, Ted, really appreciate it. Thank you for coming in. Also great to see you. Ted Swimmer, Head of Capital Markets and Advisory at Citizens Bank, joining us in capital markets, IPO, private, all the good stuff. So I guess that's kind of the point, and we see it with the equity market too. It doesn't take a lot to move the needle anymore to the upside.
Yeah, and we saw just a little stabilization in the bond market, and then we had a lot of corporate issuance over the last 3 or 4 days, and people saying, all right, maybe this isn't the best of times, but it's a lot better than it was a few weeks ago, so let's hit the window. We saw a lot of issuers, including some tech names.
Yeah, come out. They got to do it. All right, coming up, we'll break down UPS halting its full-year guidance, also laying off 20,000 workers. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks advancing this ahead of another lineup of earnings reports today. We'll start with the Nasdaq up 0.1%, 27 points. The Dow up 0.4%, 166 points, and the S&P 500 up 0.1% or 8 points. The two-year yield at 3.66%. That's down 2 basis points. The yield on the 10-year 4.18%, and that's down 2 basis points. Heading to commodities, we have COMEX gold down about 0.6%, $3,327 an ounce. We have Brent crude down more than 2.5% at $64 a barrel. WTI crude, $60 a barrel. The Bloomberg Dollar Spot Index up about 0.1%. Want to jump back into earnings? We have Pfizer. The big news here is that it's cutting at least another $1.2 billion from its spending. Remember, that obesity pill failed, so it's looking for the next best thing. Demand for its COVID shot and pill have been falling too. But shares this morning, they are higher. They're up more than 1.5%. Now, we have two different sides of the travel industry. You have Hilton lowering its earnings forecast for 2025, growing uncertainty about the economy, kind of weighing on travel, but its shares are actually higher, up about 0.5%. What is booming is the cruise industry. Royal Caribbean raised its profit outlook, took record bookings in the first quarter, but its shares starting to take a turn for the worse. They're down about 2%, and that's also pulling down shares of Carnival Cruise Line down more than 2%, and Norwegian Cruise Lines down nearly 2%. They both report tomorrow. After the close, we move on to Booking Holdings, also Mondelez, Visa, and Starbucks. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world and want to focus on one of them, UPS. That stock is flat, but the company's cutting about 20,000 jobs this year in a pullback from Amazon. The company also talking about the macro uncertainty as well as it backed away from its financial guidance for this year. Lee Klaskow is Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst, and he joins us now. Lee, just break down for me what is UPS specific, like the Amazon stuff, which we kind of knew was coming, versus what is the macro specific?
If I had to break it out, I would probably say 95% of the, I guess, somewhat disappointing 2Q outlook is really being driven by the macro and not UPS. I mean, UPS, in our view, is and has been doing the things to kind of restructure its network to deal with the realities of their business and how much it's changed over the last couple of years. And they're also focusing a lot more on revenue quality. So that would mean trying to win more share of small to mid-size shippers. Also, you noted they're kind of gliding down, if you will, their exposure to Amazon, to some of their businesses. That just doesn't make sense. I mean, they're still going to do returns for Amazon, which is a good business for UPS from a margin financial standpoint.
Hey, Lee, what kind of visibility does UPS have on their revenue stream? Like, how much is contracted versus how much is just me walking up to a store and, shipping a package across the country?
That's a great question, Paul. I think the reality is that they have somewhat a decent visibility into their business a couple weeks out. I think that's really about it. That's just really because it's their customers are really driven by economic activity, and it's really tough to kind of really gauge those volumes, especially in the current environment, given the uncertainty driven by tariffs, which is why earnings expectations for the second quarter will probably start moving lower as sell-side analysts adjust their models.
But in theory, if we put aside the macro for a second, I appreciate you said 2/3 of it is macro. But the Amazon stuff is a good thing for them long term, right? Even though there's near-term pain, like those are lower margin packages that they don't want to do anymore. They're going to focus on higher margin packages that could wind up being much more stable and profitable, right?
Yeah, and I actually, said 95%. So I was a little more focused on, us thinking that the majority of the shortfall in the 2Q is really the macro. But yeah, to your point, they're really focusing on revenue quality. They mentioned on the call that some of their business out of Amazon's fulfillment centers just really wasn't profitable for them. So it obviously doesn't make sense to take that business. And if they're able to create capacity by getting rid of some of this business and filling it with what they call SMB, small to mid-sized businesses, that's just going to be a good thing for its margins overall, and it'll allow them to generate the kind of returns that they can reinvest in their network. Because while they're doing a lot of investing in now in automation, and they're closing some facilities just to be a little more nimble than they were in the past, they're still going to continue to have to make those investments because technology continues to change, and those benefits will need to be driven by those investments.
Lee, a lot of companies are saying, they're not necessarily seeing the impacts of tariffs now, but they certainly expect to in the coming weeks and months. You cover everything in shipping: rails, trucks, the ocean shippers, the air freight guys. You cover it all. Are you seeing it now? Because I've actually seen some reporting over the weekend that maybe fewer ships are sailing from China to the U.S. Are you seeing it anywhere in your space?
Yeah, we are. And to your point, bookings from China to the U.S. are down 30 to 40%, depending on which press reports you read. Some of that is obviously there was a pull forward effect in our view before the tariffs were going into place, so people were rushing to get stuff out. So we don't know really where that's going to lie. Shippers are going to they're going to take the stance where they're going to be like they're going to sit back and wait to see what happens. Some are continue to do business as usual, and they're just going to try to push off the costs associated with tariffs to customers, which obviously will be inflationary, or a mix of the two. So really, it'll be interesting to see how things progress. And at the end of the day, we might wake up tomorrow morning, there's no tariffs, right? So who the heck knows?
Yeah, but still, I mean, you have to wonder though how fast then the shipping industry can re-rate. Like if there's like one ship hanging out at the LA port, all of a sudden tariffs go away. What does that wind up looking like?
Yeah, shipping companies can do a number of things to manage their capacity during ups and downs time. They can do blank sailings, which really just means they don't go to a port, they skip a port. They can operate slower, which actually is good because it could save them on fuel. And in a worst case scenario, they can just take the ships out of the water because that can be costly. And also, a lot of them, they lease their capacity from other companies. So, once those leases come up, they can just return the ship to the owner of that ship.
Hey, Lee, I know you cover rail and truck companies that do a lot of business across the Mexican border. What are you seeing there these days, or what are they telling you?
Again, there's a lot of uncertainty. They saw a kind of a surge in demand ahead of the tariffs. There is a lot of exemptions in tariffs between the U.S. and Mexico and the U.S. and Canada. So, they are not as punitive as they are with China. So, that might be more of an inflationary aspect versus a stopping of flowing of freight. But the problem is that, if some of the supply chains get mucked up from the tariffs on China, that could impact manufacturing in Mexico and manufacturing in Canada, which will therefore, impact cross-border volumes overall. So there's kind of a wait and see approach here. I know that's not what people want to hear. They want certainty, but given the more protectionist policies out of Washington and how they can change on a dime, it's really hard to get that certainty. So hopefully in the coming weeks we'll get some better definitive outlook on where these tariffs are heading.
It's funny, I don't even know what certainty would be anymore.
Yeah.
I mean, if the line seems to be it's negotiation, so how do you get clarity in a negotiation? You can't. It's just the end game.
Right. You just have to. So I think what the answer is just get some agreements with some of the big trading partners.
Right. Like get one or two, even if it's like a memo of understanding, like at least it's a framework. All right, Lee, thanks a lot. Really appreciate it. Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst on UPS earnings. Natasha Kaneva, she runs the commodity research arm over at JP Morgan, said that there's no Trump put when it comes to energy. He wants those lower prices, ... can he get them? So what does that mean for oil producers? We're going to have more of my conversation from some of the top CEOs in the industry from the Ham Institute for American Energy over at Oklahoma State. I was there last week. Devin, coming right up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Hey everybody, I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio, broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. So last week, I attended Powering AI Global Leadership Summit at the Ham Institute for American Energy at Oklahoma State University, and there were some of the biggest names in the energy space there. And one of them is Clay Gasper. He is the new CEO of Devon Energy. He took the helm in March, and he recently announced a very large business optimization plan, basically trying to raise some money, increasing their free cash flow by about $1 billion to improve their margins. Here's part of that conversation.
We're excited about this business optimization plan with the change in CEO. We're really trying to take full advantage of this opportunity. My belief is there's always another gear to grab, and I think really focusing the company on something like free cash flow and the durability of that free cash flow really excites the organization, and we're finding lots of opportunity there. We have a goal for $1 billion by year-end 26, and we feel really good about being able to achieve it.
Where are the areas where you feel like you have the most control and can really wring out more efficiencies?
On the release we did a few days ago, we set out 4 categories, but one of them is reorganizing around the gas processing and transportation fee structure. And so what we're going to do is reach out to our counterparties, renegotiate some of these opportunities. We're seeing a real material drop in cost for us, and benefits we're able to accrue to them as well.
Oh, that's nice. And then also, is it just sort of back of the office also, just sort of moving operations around and becoming more efficient as well?
So excited about AI. We're here at the AI conference. I think one of the things that really excites us is how do we apply technology to our business with a renewed focus. One of the changes we made organizationally was promoting our Chief Technology Officer to the Executive Committee. And part of his charge is think about all of the things that we're here to solve through a technology lens. And so I think a byproduct could be some reorganization, efficiency, how do we apply that technology, but it's more about that, the focus on the free cash flow and not necessarily starting with an organizational change in mind.
Now, you're not 2 months yet into this role, right? So this is a really big change, and you're just taking the seat. It's been a crazy couple months also as a backdrop for where you sit. Why did this kind of plan make sense now in this environment?
It's a great question, and some people have said, wow, you really timed this well with all of this chaos in the market. And I said, well, obviously we started much earlier than this current set of issues that we're facing. But I think, you know, the tariffs and the environment that we're in, this is a perfect example of why we need to be exceptionally good at these things that we're talking about. The durability and the sustainability of our organization, you know, we ride a roller coaster. That's what we've signed up to be part of. And to make sure that we never know when or how deep these roller coaster dips are going to be, but when they come, that we're really, really ready for it. Starting with our financial footing, our operational savviness, the portfolio, and then most important, having a really strong organization that can make the most out of the opportunity.
So based on that, when we see volatility in oil prices like this, volatility is never great. It's hard to make business decisions. It's hard to know where to invest money, etc. How does this optimization plan help offset that?
Well, it's interesting. We are in a very dynamic part of the oil
That's
business.
a nice way of saying
dynamic, yes. You know, currently about $62 front month. Interestingly, we run our mid-cycle pricing at 65, so it's not a very far disconnect from where we think about how we're doing our business. The volatility, as you pointed out, can be a real headwind, though. When we see a lot of just movement in the market, it causes a little bit of pause. Not as much internally, but certainly with our investors, with our counterparties, all of the partners that we do this symbiotic business with. You know, that angst can cause a little bit of headwind in us ultimately accomplishing what we're trying to accomplish.
So is it fair to say that you don't want to be growing? You want to just optimize what you have? Is that my takeaway then from this?
I think in this mid-cycle price tag, we're committed as a business case to a 0 to 5% growth, which is a low, kind of moderate growth. We've been closer to that 0, call it 0 to 2%. And that's more about the macro, thinking about, is the world demanding more of our product? The way we see it now, the world is very adequately supplied. We contribute to it. We need to make sure that we maintain our ability to continue that productive volume that we have. But we don't see a need to really push more onto the market that doesn't really feel like it's demanding it.
That doesn't really feel like pumping a lot of oil at $50. That was Clay Gaspery's CEO of Devon Energy. Now, yes, they already announced this sort of optimization plan before any of the issues of the tariffs, but it just goes to reflect oil in the low 60s. You can talk positive, but that's really rough if you're a producer.
And where would they like it to be? Is it in that 70s, 80?
So Harold Hamm told me about a month ago 80.
80.
And then at this conference, he told me 75.
Okay.
So, and the White House told me, 50 continuously. And then at this conference last week, Christopher Wright said 65. So maybe we're going to somehow meet in the middle. But either way, I mean, if lower prices are sort of where you need it to be, and that's why the industry is moving towards deregulation. Now they're singing that tune because maybe that will wind up helping, even though oil prices at the margin are still low.
Right. And what about transportation in the pipelines? It's still almost impossible to build a pipeline today.
Well, they're trying to change it.
Okay.
I mean, they're
All
trying to get fast-track permitting. If you have a national emergency, Secretary of Interior Doug Berman said that lets him do stuff. So it's the EPA and it's the Interior. Those are the two departments that are going to really define that for FERC.
So do we have declared a national energy emergency?
President Trump has.
Okay.
So he says because of that, they can lower permitting rules ASAP. And even with environmental permitting rules, all of them can be below 30 days. Cheering when he said this.
Here's some real important news on the energy and gas front.
Landman 2, season 2?
Landman has been cleared, approved
renewed,
for season 2. So that's big.
That is big.
Just letting you know.
Do you wonder if they're going to do some pipeline stuff on
Yes,
that. Anyway, all right, for our listeners in the U.S., here is a reminder. You can listen to us via satellite radio on SiriusXM Channel 121, access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Ship Station. Stay tuned for the latest market news and industry research. The second hour of Bloomberg Intelligence starts right now. Now you're looking at a market relatively calm on this Tuesday. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great second hour lined up for you. We're going to hear from Goldman Sachs CEO David Solomon. He spoke exclusively to Bloomberg News over in Europe. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, will be joining us. It's sort of your bond and your Fed and your jobs preview. Ben Miller is co-founder and CEO at Fundrise. We're going to get the state of the commercial real estate market. And David Gura, correspondent for Bloomberg, will be joining us. He's the host of the Big Take podcast, talking about Canada and the election outcome there. And finally, Poonam Goyal is senior U.S. e-commerce and retail analyst. She'll be joining us from Bloomberg Intelligence, and Elliot Stein of Bloomberg Intelligence as well. They have a great tariff impact matrix thing. That's what I'm going to call it. It's the thing, and they're going to help break it down for us.
All the tariffs are and how they impact different industries. It's a nice place to
That's amazing.
Put it all together. Yeah,
because I sure can't do that. So we have a great hour lined up for you, but let's kick it all off for you right now with the Bloomberg Business Flash. For that, we go to Charlie Pellet.
All right, hi, thank you very much. And here's what's going on. Best level of the morning right now on the S&P 500 index, up 19 now, up by about 0.4%. We got the Dow Industrials up 279. That is a gain of 0.7%, while the Nasdaq Composite Index right now up 54. That's an advance of just about 0.3%. Whole lot more on the markets coming up in just a moment. Your 10-year 4.18%, the 2-year 3.66%, spot gold down 1%, 33.12. The ounce, and West Texas Intermediate crude down 2.2%. WTI 60.70 a barrel. Bitcoin just above $95,000, up now by about 0.6%. Consumer confidence, as measured by the Conference Board, fell in April to an almost 5-year low on growing pessimism about prospects for the economy and labor market due to tariffs. Stephanie Guichard is a senior economist at the Conference Board, and she was a guest right here on Bloomberg Intelligence.
What's really driving the index down is consumers' expectations. I mean, the assessment of the present situation was a bit down by relatively stable, but the expectation index really fell by a lot.
Stephanie Guichard of the Conference Board, interviewed right here on Bloomberg Intelligence. A major change in that Amazon story. The stock right now down 0.5%. Amazon says it never planned to widely display the cost of President Trump's tariffs on products after the White House blasted the reported move. Again, recapping, U.S. stocks are trading higher, with the S&P right now up 19, up there by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us, as Charlie was just reporting. Stocks generally moving higher. Let's take a look at some stocks on the move today. We're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at?
Let's start with Amazon. Obviously, there has been a big turnaround story, but we just saw UBS cutting the target of Amazon to $253 from $272. It maintains the buy rating. What has been happening today brought the stock down as much as 2%, but it's still underwater. Of course, Amazon says it was never under consideration to display the cost of tariffs on products. What we saw earlier today is reporting that this was indeed the case. And the White House press secretary said that this is a hostile act. And obviously there is a lot of volatility with the stock. And we saw retailers like Shein, we saw Temu, we saw a lot of discussions of how are they going to display those prices. And that is really an important thing for consumers. We saw that the questions at the press conference was like, does that mean that consumers will indeed pay more? So a lot of pressure there. The stock is still down for today, but of course, a lot of the earlier losses are reversed.
Yeah, and you mentioned Raymond James downgrading the stock head earnings, right? So
UBS, downgrading.
Yeah, so just like a double whammy there.
Yeah.
Shopify, what's going on here?
Yeah, with Spotify, shares stumbled as much as 8% in earlier trading. Some of that losses have reversed. The streaming company reported operating profit that missed estimate. That said, the report wasn't bad. We saw a big gain in subscriber, which was way more than analysts expected and the company predicted. The subscribers reached 268 million, which is a 12% increase.
That's amazing.
Yeah, it's really good. We know the company has been pushing into audiobooks, podcasts, even video content to compete with YouTube. But of course, that has come at a price. We know that they raised their subscriber fee to $12 a month, but that has been helping. The stock is up 25% year to date, despite the pressure we have seen today. Still a very strong year after 2 years of more than 100 gains.
All right, anything else?
We have UPS. The stock is down today. We're seeing some pressure. Even in earlier trading, we saw some gains. The company expects to cut 20,000 jobs this year as it dramatically reduces shipments. Again, we were talking about a lot of pressure from the administration. The industry is grappling with new challenges. Of course, the tariffs. They have really complicated the cross-border shipments. And UPS is a very good gauge of how things are changing. UPS aims to cut expenses, improve profitability, and the network reconfiguration is expected to generate about $4 billion in cost savings. So that's definitely some relief. The stock has stumbled about 23% year to date. So the small gain today is a little bit of relief.
All right, Denitsa, thanks a lot. Denitsa Sakova joining us there. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, some two headlines crossing here. Russian President Vladimir Putin said to demand control of 4 Ukraine regions at U.S. talks, Paul. So you have Putin demanding control of 4 Ukraine regions at U.S. talks.
At least they're talking. That's kind of how I'm at this point.
Right. Also, want to point out here that ransomware hack is now said to be the cause of a Marks and Spencer outage. It was hit with Dragon Force malware, shutting down key systems. You keep hearing that. Cybersecurity is the #1 issue.
Right. Absolutely. It's going to be a growth business.
Exactly, right? Okay, let's get more from some of the top newsmakers. Earlier today, Bloomberg's Francine Lacroix spoke exclusively to Goldman Sachs CEO David Solomon at the Norwegian Wealth Fund's annual summit conference in Oslo. When asked about the recent market volatility since Trump's inauguration, he says we need another 100 days before we have a better understanding of the policy direction.
We're 100 days in, and I would say there are a handful of policy initiatives that are being put forward. Some of them certainly are very, very interesting and intriguing to the market. But what's been put forward on trade so far has raised the level of uncertainty very significantly. And so I'd say 100 days in, we need another 100 days to kind of see where the policy directives are going and to try to have a better understanding of how what's talked about so far, particularly with respect to trade, is ultimately going to be put in place, how it's going to play out. But the policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. And I think it's going to be important that we get more clarity on the direction of travel from here.
What, for the markets? So if you look at markets, there's been a sell-off, a pretty dramatic sell-off in U.S. assets. It's somewhat come back, but has it been too drastic?
Well, it's not just for the markets. You know, first and foremost, it's for businesses, it's for individuals. When there's a high level of uncertainty, people tighten their belt. They invest less, they spend less, and all those things slow down growth. And so, you know, one of the things that has happened over the course of the first 100 days is that the perspective on forward growth has been decreased. And so when you decrease, that perspective on forward growth, that changes investors' perspective of equity values. So what we've seen is a relatively orderly kind of repricing of equity assets. And what's unusual in the context of this repricing is generally when you have that kind of equity market stress, people run to treasuries or safe haven, but here we're seeing a slightly different rotation because of the nature of the policy. We've seen a weakening of the dollar, at the margin, and so that's been different than I think what people expected.
Well, are treasuries still a safe haven?
I think U.S. Treasuries absolutely are a safe haven, but you can reprice a safe haven asset as people's preferences shift slightly. I think at the margin, we've had for a long period of time a trend of capital flows into U.S. assets. And, at the margin, people are looking at their portfolio constructions and saying, given the uncertainty that's been raised in the U.S., do we want to rebalance that a little bit? And I'd say the rebalancing so far has been at the margin. Investors can rebalance their portfolio in two different ways. If you're over here in Europe and you have a European investor, they can sell U.S. assets, but also if the relationship between the dollar and the euro changes, that rebalances their portfolio weighting too. And so we've seen that over the course of the last few weeks.
All right, that was Goldman Sachs CEO David Solomon speaking with Bloomberg Television anchor Francine Lacroix at the Norwegian Wealth Fund's annual investment conference in Oslo. So very interesting comments from Mr. Solomon. Let's get back to this Treasury market. I'm looking at the 10-year Treasury. It's up 7.30 seconds, pushing the yield down about 3 basis points, 4.17 on your 10-year. The 2-year, 3.66. So rates coming down. Let's see what the rates markets are telling us. We had some economic data today. The consumer confidence came in weaker than expected. The weakest in 5 years since back in March of 2020. So some big moves there on the eco front. Ira Jersey joins us, chief U.S. interest rate strategist for Bloomberg Intelligence, safely ensconced in the offices down in Princeton, New Jersey. Ira, what did you make of some of the economic data we got today, including the JOLTS data? And we got a bunch today. How do you think the market's reacting to it?
Yeah, not fantastic by any stretch of the imagination, but the JOLTS data wasn't terrible, really. But the confidence data is certainly, concerning for the forward outlook. The thing that we've seen, Paul, and we've been talking about this for a long time, and you continue to see it in the data we received today, is that the hard data, so things like JOLTS, is okay, not great. But then you see the confidence data, the survey-based data, seems really bad. So the fear here is that when do consumers and businesses and others actually pull back from the economic activity that they've been doing, and does that push us into a recession or at least a deep slowdown sometime later this year, causing the Federal Reserve to cut rates? And that's why you're seeing this little bit of bull steepening today, where you have short-term rates going down faster than longer-term rates.
I'm looking at 4.17 on the 10-year. We're below that 200-day moving average. Where's the next stop here?
Yeah, 410 to 413 is a very important range for the 10-year yield. Below that, you're probably looking down at below 4% as the next stopping point. Importantly, and I think that one of the things that you've seen over the past couple of weeks, and I think it's something that will continue to be the case, is that I think the beta of the long end is going to be lower than the beta of the front end. What do I mean by that? Well, if 2-year yields continue to rally, say another 15, 20 basis points, then you might only see the 10-year rally another 5 to 10. So you have a situation where the yield curve could bull steepen as the market gets more and more convinced that the Federal Reserve is going to cut interest rates, and you can get a pretty significant steepening of the curve. And quite frankly, that's something that we had expected all year from the beginning of the year. We've gotten some steepening, but it's really been from both ends. So this twist idea of steepening, and that's because of the the angst we had in the long end that we talked about last week.
So Congress is back in session. Supposedly they're going to start talking about and working on a tax bill, a budget, all this kind of stuff, and that naturally leads to discussions about deficits and the national debt. But I don't know. A lot of people just tell me, Ira, as long as people show up at our Treasury auctions, don't worry about it. How are our Treasury auctions doing?
Well, there's 3 pieces to what you just said, so we can take them in reverse order. So last week we had Treasury auctions, and they were a bit weaker, I'd say kind of middle of the road in terms of overall demand. Not absolutely atrocious, but also not particularly good. And so people did show up to those. Tomorrow morning, we actually find out how the government's going to fund over the next 3 to 6 months the continued deficits that you just mentioned. and that's at 8:30 tomorrow morning, where we get what's called the Treasury quarterly refunding announcement, and they'll tell us how many T-bills are going to issue, how many, and what the size of those coupon auctions are going to be in order to refund all of the maturing debt as well as fund new debt, which I don't suspect that there'll be any noise really tomorrow about that. It'll be more interesting from a forward basis. There is a concern that, that you're going to need higher yields than you might think in order to attract buyers. But here's the good thing, Paul. Everyone else's yields are going down faster than our yields are. So if you're a Taiwanese investor or a European investor, or, well, maybe not so much a UK investor, their yields are about the same as ours. But if you go to a lot of those other jurisdictions, you might actually find the US has continued to be the high yielder. So therefore, you still might have significant incremental demand as long as hedging costs aren't too onerous.
That's so interesting. On the flip side, though, you can make the argument that, say, Germany, for example, is going to be spending a lot more fiscally than the U.S., therefore they'll have higher borrowing needs, which potentially mean higher yields. You see the opposite, though?
Well, for now, because the European Central Bank seems to be a lot more dovish than the U.S. And I was actually talking with Hugh Worthington, who's our European strategist, this morning, and one of the things that he mentioned was because of the tariffs, it's very possible that a lot of Asian and goods producers might wind up dumping their goods into Europe, and that could actually lower their inflationary outlook. So that means that they could have even lower interest rates, even with Germany issuing a lot more debt than they were before. Ultimately, that debt that Germany is, that's probably a yield curve steepener, but you could still have Germany with much lower rates, several hundred basis points lower than U.S. Treasury yields.
When do you think the Fed will cut, and is that a given that they will?
Well, it's not necessarily a given, but I think it's more than likely. So our view has been, and I still subscribe to this, is that they're probably, in my view, not going to cut in June unless the data is absolutely atrocious the next month and a half. But it's more likely that they wait until they have to cut, and then when they cut pretty aggressively. So we're looking right now, we have penciled in kind of a November start. So they go November, December, January, and March next year. That's another 100 basis points. We go to exactly where we're currently priced. We just, instead of getting there, 25 basis points a quarter, we get there over the matter of just 3 or 4 months.
Do we think that the jobs data this week will help lead us there in any way?
It always has the potential to.
It's always laughing at me.
Well, it's the non-farm payroll data that we're getting for April. Like we had all this market volatility in April, but it's not like people started to lay off a lot of people this month just because we wound up getting a lot of headlines. So these things take time to develop, which is one of the reasons I suspect that the data is not going to show that we have a big slowdown in the job market until the second half of the year, and that's why I think the Fed will be a little bit reluctant to see what happens with the tariffs, how inflation is going to develop, and you still have some of the survey data still showing that consumers think that inflation is going to be pretty high, and if that's the case, then the Fed is going to worry about inflation expectations becoming unanchored, and that's what you're probably going to hear from Jay Powell next week.
All right, Ira, thank you so much. Really appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. Coming up, we're going to check in with Ben Miller, co-founder and CEO of Fund Rise, on the state of commercial real estate. Then we're going to check in with David Gurr, correspondent for Bloomberg and host of the Big Take podcast. He's been up in Canada the past few days covering the election of Mr. Carney. Good news is Mr. Carney won for him, so it's good news for him, but not much of an edge there. So we'll get the latest reporting. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index holding on to gains, extending its advance into a 6th consecutive day. Right now, the S&P 500 index higher by 4. We're off session highs, but still up 0.1%. The Dow up 193, now up 0.5%, while NASDAQ is lower by 7, a drop there of just under 0.1%. The 10-year yield 4.17%, with the 2-year currently yielding 3.66%. Spot gold down 1%, 33.10 the ounce, and West Texas Intermediate crude down 1.6%, 61.04 for a barrel of WTI. Bitcoin up $300 at $94,801, higher by 0.3%. General Motors shares lower by 2.2%. GM withdrawing its earning guidance for 2025 and putting $4 billion in share buybacks on hold because of uncertainty around U.S. tariffs. And economic bellwether UPS expects to cut about 20,000 jobs this year and close dozens of facilities. UPS up 0.1%, rival FedEx down 0.9%. And just getting word that Wells Fargo has announced a new $40 billion stock buyback program, sending its shares higher. Wells Fargo up now by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much for that. We appreciate it. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker studio, and we are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. If you listen to this program, you know Alex and I really like to stay on top of the commercial real estate business. Certainly one of the businesses that was impacted dramatically by COVID. And it's now long recovery here, now in the midst of higher interest rates. Today, we're going to check in with Ben Miller, CEO of Fund Rise, joining us from Washington, D.C. via Zoom. Ben, I think when you look at the stock market, the bond market, the commodity markets, the common word is probably just uncertainty out there, volatility out there. How about the commercial real estate market? What's the last 3 months been in that space?
The irony for real estate is bad news is good news. Because interest rates have been higher for longer for the last few years, that's been weighing on real estate, especially commercial real estate. And so anything that brings down rates is going to be a boon for commercial real estate owners. And so uncertainty, tariffs, recession, those are all great words for real estate industry.
So that driven primarily by lower rates, I get that. Where do you think the best opportunities are here in commercial real estate?
Well, so the functional effect of tariffs is that it makes existing assets worth more. So my analogy is always, if I had 1,000 cars on my lot, if I was a car dealer, and I had 1,000 cars on my lot, and they put a 50% tariffs on all new cars, right? All those existing cars, all the car inventory on my lots across the country would be worth more because the price just went up. And so all the existing inventory of apartments and other assets are going to be worth a lot more with tariffs. And so it's a tax on flow, and it's a gift to stock, if you know what I mean.
But what about the volatility? So rates are one thing, stock is another, but the volatility and uncertainty, how does that affect sentiment in your market?
Yeah, I mean, real estate is a much slower moving asset. It doesn't trade very often. People don't renew their leases very often. So it's much more it has much more insulation from volatility. I mean, because you can't really trade it, that volatility doesn't matter as much as it does for stocks or bonds.
Ben, if the uncertainty, not necessarily the tariffs per se, but if the uncertainty pushes or slows this economy dramatically, maybe even pushes it into a recession, that can't be good for real estate.
Well, it depends on the kind of real estate you mean. So office, which has already been hit by work from home, is very pro-cyclical. So people only expand office space and new leases when the economy's hot. If the economy's cold, office is going to get hit again. I think office could go from bad to worse. But consumer staples like food, groceries, housing, you got to live somewhere, you got to eat something. Those actually end up doing pretty well in a recession. And so multifamily housing, I think, will really outperform. And low rates matter a lot more than the economy. And so if rates come down, like I think they will, it's going to be a win for most commercial real estate.
Yeah, and then in terms of construction and new building and materials, like either that's going to get a lot more expensive, or as we were talking about, that's going to get a lot tighter, which then if you own already those buildings, that's better, right? What are you seeing right now currently?
Right. I mean, there was a absolute housing boom in 2021, 2022, there because rates were so low and the demand was so high. And so we just are working our way through, I think, the largest supply of new housing in decades. So that hit the market last year. It'll be sort of done by the end of this year, and then we'll kind of fall off a cliff, and we'll end up with no new construction, high rates, expensive construction costs, tariffs, uncertainty, bank lending still pretty tight. I think we'll see sort of the end of new construction for maybe this decade, and that's again, that's great for owners and maybe bad for renters.
Ben, talk to us about Florida. It's been a market that really just goes up and down. It's had such a multi-year growth spurt coming out of the pandemic. What's the state of the Florida, I don't know, the apartment market, any of that kind of stuff?
Yeah, I mean, Florida got hit by climate change too. I mean, it was a really big hit on insurance costs. It caused a lot of owners to have second thoughts. The short-term effect of a lot of new supply in the market and insurance costs hit Texas too. Texas had a lot of challenges. So those two markets have sort of the most growth and had the most negatives. And in the short term, I think Florida really doesn't look as good as some of the other parts of the Sun Belt, like North Carolina, South Carolina, Georgia. But in the more medium term, Florida and Texas just get so much more population growth than any other state. I mean, between the two of them, they get over 1 million people a year moving there. And that over that 3 to 5 year period between migration and population growth, I think that Florida and Texas will be just fine. But in the short term, it's not that pretty.
All right, well, we appreciate the update. Let's keep talking and see kind of how this all evolves. Ben Miller, co-founder and CEO at Fundrise on the state of commercial real estate, the largest direct-to-consumer alternative asset manager in the U.S. Over 2 million active users, over $3 billion in lots of assets like real estate, private equity, and private credit. Thank you very much. All right, let's head to Canada now. You have Mark Carney's edge slips as Canada's election comes to a hectic end. He won, yet by a very, very, very thin margin. David Gurr, correspondent for Bloomberg, host of Big Take podcast. I should say that his party won, but walk us through the results, what we know.
Yeah, an incredibly close race. So Mark Carney emerges here with a mandate, but it is not a majority mandate, which is what he and his party wanted. So what that means, in effect, is in the coming days, he's going to have to figure out how he's going to work with other political parties in this country to pass his ambitious legislative agenda, so much of which centers on the economic predicament this country is in and, of course, the trade war this country's engaged with the U.S. on. And so what Mark Carney said over the course of this campaign is he intends to win that trade war. He intends to go to Washington, present himself in a meeting with President Trump as somebody who's not going to back down on Canada's position in that trade war. That's what we're going to be watching for here in the coming days, when, in fact, that meeting takes place. Again, it's something that he promised would happen in short order. We'll see if that's in days or weeks. But two things sort of upended the course of this race over the last couple of months. The first of which, of course, is Mark Carney becoming the leader of the Liberal Party. The second of which was Donald Trump returning to the White House in Washington and attacking this country really on two fronts. One on the side of trade and the economy, the other, of course, on the country's sovereignty. And Mark Carney has said from the get-go here, he never found those remarks from President Trump about Canada becoming the 51st state as any kind of a joke. He took it seriously, and that is something he said over and over again, Alex and Paul, is not negotiable.
So talk to us about conservatism in Canada. Is it as vibrant as it is in the United States, as it is in some European countries like Germany? Is it to the point where anybody in Canada will be okay with being referred to as the 51st state?
That is definitely not the case, but you bring up a really interesting question, and that is, where does the Conservative Party in this country go from here? So Pierre Poilievre, the leader of the Conservative Party, who is in effect running against Mark Carney, actually lost his seat last night in a district just about 30 or 45 minutes from where I'm standing. So that kind of throws things up in the air in terms of, will he continue to lead the Conservative Party? Is there going to be a situation in which he can kind of convince somebody else in the party who was elected to step down so that he could run in a by-election for that seat? that's all up in the air here. And you ask just kind of about the breed of conservatism that we see here. Pierre Poilievre is somebody who has been compared in terms of political style to Donald Trump, the President of the United States. If there's Make America Great Again in the United States, there's Make Canada Great Again here in Canada, as sort of headlined by Pierre Poilievre. So they had an amazing showing yesterday by all kind of historical records. They did extremely well, yet they still didn't best the Liberals, and that's really extraordinary. Again, when you look at kind of the not so long ago history, just a few months ago, before Mark Carney entered this race, the Conservatives had a 20-plus point lead over the Liberal Party, and that was squandered here over the last few months. So there'll be a lot of soul-searching, Paul and Alex, within the party about what went wrong and what the party can do differently going forward.
So here's an insanely unfair question, considering that you're a reporter. So, take this with a grain of salt. But if President Trump had not come aggressively after Canada, either in terms of tariffs or, more importantly, making it a 51st state, would this election have been different? Were there other issues that got kind of sidelined at this point?
I think no doubt. The fact that Donald Trump talked about Canada as much as he did and made those threats was something that Mark Carney, who is a career technocrat, he headed the Bank of Canada and the Bank of England, for a time served as the chair of Bloomberg Inc.'s board and Brookfield Asset Management. This gave him an opening to present himself as kind of a foil to Donald Trump, to be a foil to that kind of breed of populism that we've seen in the President of the United States. And it really changed the polling, it changed Canadians' engagement with this election. So yes, as that soul searching takes place among the Conservative Party, I think there's also an awareness of the fact that this is a very unique circumstance and that Canadians, as a result of what Donald Trump said and did, really kind of galvanized the electorate here in Canada in a way that they might not have 3, 4, 5 months ago.
David, you've been up in Ottawa for a few days now. What's the feeling of the person on the street here? Because as it relates to the relationship with the U.S., because I don't think I've ever come across anybody in my life that has anything negative to say about Canada. But so I'm just not sure how how President's comments, how reflective they are of U.S. folks. But how do the people in Canada feel?
Just as Mark Carney didn't find the comments from the president about the 51st state as a joke, nobody with whom I've spoken has found them funny as well. So they've taken it as a real serious threat also. And there's a sense as you talk to people here, as I have over the last few days, of just kind of bewilderment, why the circumstances are the way they are. They listen to President Trump, they listen to that rhetoric, and they wonder sort of how they got here in light of what you're talking about, Paul, which is this is an allyship. This is a partnership that's existed for a couple centuries now, a very happy and important allyship of two nations. And to see it kind of changed fundamentally in the way that it has been over the last few months has really astounded people here. And again, going back to what the Prime Minister has said, folks here were surprised by that rhetoric to begin with, but they've moved past that, as Mark Carney says, and now they have to kind of plot a new path forward. That's going to take place in those negotiations in the White House, but also in just the way that the Liberal Party government here under Mark Carney is looking at the world and kind of rethinking relationships with other countries. And we've seen that over his rather short prime ministership so far. He's made trips to Europe, of course, and to England as well. He's trying to find new outlets for Canadian products and sort of new arrangements, new relationships for Canada to engage in as the U.S. kind of falls to the side.
All right, David, really great reporting. Thank you so very much. David Gurr, he's the host of Bloomberg Big Take podcast, also a correspondent for Bloomberg News. All right, coming up, we're going to break down what the tariff impact is on individual companies and sectors. Poonam Goyal, Elliot Stein, both of Bloomberg Intelligence, did all the work for us so we don't have to, and we get to give it to you. So stay tuned for that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Stocks are higher, extending gains into a sixth consecutive session. Bond yields fell after weak economic data this morning, bolstered speculation that the Fed will cut rates to prevent a recession. The S&P holding on to a 7-point gain at 5536, up 0.1%. The Dow up 213, up 0.5. Nasdaq higher by 10, up by about 0.1%. 10-year at 4.17%, with the 2-year 3.66%. Gold down $35 the ounce, 33.08, down 1.1%. West Texas Intermediate crude oil up 2.2%, 60.72 a barrel. Sizing up President Trump's first 100 days, Goldman Sachs CEO David Solomon says investors are craving certainty.
If the level of uncertainty grows from here, yes, you won't see the same amount of capital markets activity. But my own belief is things will settle down. We'll have a clearer policy perspective and some normalization of capital markets as we shift into 25 and 26.
Goldman Sachs CEO David Solomon speaking with Bloomberg's Francine Lacroix in Europe. Royal Caribbean Cruises is raising its profit outlook for the year as cruise demand continues to defy the increasingly dire situation of the wider travel market. Royal Caribbean shares, though, down 1.3%. Rival Carnival Corp down 1.7%. Norwegian down by 1.2%. Elsewhere in the travel industry, JetBlue Airways, the latest U.S. carrier to pull its full-year financial outlook. Shares of JetBlue, they're up today by 2.2%. Recapping, S&P higher by 12, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live. Uncertainty, that is the word you hear out of the mouths of so many people in the marketplace, whether it's the CEOs, traders, economists. People just don't know how the trade policy is going to impact economies and companies and their operations. Tough to put numbers on it, but that's what our good friends at Bloomberg Intelligence are doing. They're putting numbers to the risk here, and we want to get to that right away. Poonam Goyal, senior U.S. retail analyst, joins us here via Zoom. And Elliot Stein, Bloomberg Intelligence litigation analyst, joins us here in the Bloomberg Interactive Broker Studio. Elliot, let's start with you. What is the tariff impact matrix that you guys have come up with?
Yeah, so thanks, Paul. So the BI tariffs matrix is a matrix that we launched just yesterday. It's available on the Bloomberg terminal at BI space tariffs go. And like you said, BI analysts for weeks have been putting numbers on what tariffs mean for their companies. And this is all distilled in the BI tariffs matrix. You go to the matrix, it lists 200 companies, and we're continuing to add more companies across 20 different industries. And it shows you what their blended tariff rate would be based on their exposure to different countries where they're getting goods for their sales in the US and what the tariff rates are on those countries. And then from there, our analysts have calculated how much the cost of goods will increase for all these companies' sales into the US, how much their profit will take a hit as a result, and how much they would have to increase prices both in the US and globally to offset the impact of the tariffs.
That's amazing. That's incredible. Honestly, this is why Bloomberg Intelligence is so awesome. And we'll get to retail with Poonam in just a second. But Elliot, when you were putting this together from all the different sectors, what stood out to you? What did you learn the most?
So, it's really interesting. So we also published a note on this yesterday, and in that note, there's a piece from Anurag Rana and the tech team. And, I like to filter by the blended tariff rate and see which companies are paying more tariffs as a result. And if you look at Apple, because they have such a high exposure to China, their blended tariff rate is still 20%. But a company like Dell has a much more diversified supply chain, and so their blended tariff rate is much lower, roughly, I think, maybe 4 or 8%, I forget the exact number. And so as a result, the amount that both these companies would have to increase their prices to offset tariffs varies quite dramatically, with Apple being close to 9% and Dell being close to 2%.
So Poonam, on the retail side of the business, how much more do you think consumers are going to have to pay at the store for stuff?
Sure. So if we assume that the entire cost is passed to the consumer, on average across the 39 retailers we analyzed here in the US, it's a low double-digit increase. That said, we do expect some mitigation efforts to take place, so we do expect that to moderate to probably mid to high single digits, worst case scenario.
That sounds bad. Is that bad?
I mean, price increases are bad, right? Because they influence demand, and that means that consumers could pull back in where and how they choose to spend. So ideally, we would like to see no price increases, low single digit at best, which we think is manageable. But if it's beyond that, there could be a pullback in demand, especially for discretionary items, right? Things that you can kind of hold off on, you can trade down for. So it is negative. If things worsen and if China tensions don't come down from here.
Are there certain product lines or certain categories, Poonam, that are more at risk? I just think, I remember seeing a story on sneakers, and it seems like all the sneakers come from China in that part of the world.
Well, they actually come mostly from Vietnam. So as long as the Vietnam tariff rates stay at 10%, which we'll know in early July if that's the case or not, I think that headwind is largely manageable. In fact, for the athleisure companies like Nike, Adidas, we've estimated that the tariff rate currently should only be around 10%. And that's because that's the current levy on the other countries outside of China. These companies have diversified a lot since the last round of tariffs, where they've actually moved out of China into the neighboring countries. And as long as the tariff is low there, we think it's manageable. If tariffs do increase in early July from the 10%, it's a bigger risk to these athleisure companies. Paul, you asked about where the impact is greater is across the 39 companies that we've analyzed. I think you have to look at the toy makers, you have to look at the dollar stores, and even some of the specialty apparel stores where they are more heavily exposed to China, in some cases largely exposed to China, and there the tariff rate is greater than 50%, and the exposure is much higher, so a much bigger impact.
Yeah, if you search by U.S. price hike and do, a top down, like Mattel, 31% estimated price increase, Five Below, 39%, Dollar Tree, 27%.
I don't think those people are going to like.
I mean,
people who shop at Dollar Tree, I don't think they're going to like that.
Really rough. I could do this forever. H&M, 20%. Target, where'd you go? Target looking at 20%. Elliot, are we going to see lawsuits, legal issues in relation to this?
Yeah, we already are. And just going back to the Matrix for a sec. So we didn't mention yet, but you can click below the Matrix and to the left of the Matrix as well, because there are interactive calculators for all these companies where you can play around with some of the different assumptions, put in your own numbers, and get the output as a result. But in terms of lawsuits, we've seen multiple lawsuits being filed. My colleague Holly Fromm covers them, but I've been tracking them as well because they're interesting. We've seen lawsuits from importers as well as blue states like California and Oregon. They're filed in courts all around the country, but they're probably all on their way to being consolidated to a court here in New York called the Court of International Trade, which deals with lawsuits over tariffs. And there are two main claims in these cases. One is that the government is exceeding its statutory authority under IEEPA, which is the statute it's using, the Emergency Powers Act. And then the second one is that even if it does have the power under IEEPA to implement these tariffs, Congress delegated its authority to the president improperly. These are issues of first impression. We've never seen a president use IEEPA for tariffs before. And at the end of the day, we think it's a close call, but we think the administration will win these lawsuits and the tariffs will stick.
Poonam, 10 seconds. Amazon in this thing about, putting the tariffs in the price?
Yeah, they denied it. So I think they will have to raise prices to the consumer, especially the third-party sellers, but I don't think they'll show it. Not on the main Amazon website, at least.
Yep, got it. Okay, Poonam Goyal, Elliot Stein, Bloomberg Intelligence. Great work on this tariff import matrix.
All right, coming up, we are going to get some of my exclusive interviews from Oklahoma City. Coming up next, Continental Resources CEO is now a private company. He can really talk about the impact of those lower oil prices. This is Bloomberg.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance right here from our interactive broker studio in Midtown Manhattan. So last week, I went to Oklahoma City. I attended the Powering AI Global Leadership Summit at the Ham Institute for American Energy at Oklahoma State University. I spoke to some of the biggest names in the energy space. During the summit, I sat down with Doug Lawler. I get to talk to him like once a year. He's president and CEO of Continental. It's now a private company. This is the company that Harold Ham founded. And we discussed the recent plunge in oil prices and his concerns around $60 a barrel. You're the oil guy and you can talk about it.
Yeah.
What do you do at $62 oil? Are you worried?
Alex, I'm not too worried. It creates a lot of stress in our systems as we think about our investment plans. We don't think about investing today. We think about a long-term horizon. But we have to be thoughtful because, as you know, we're drilling wells today, opportunities today, that are very competitive, and we're drilling into a lower price environment. So we need to be really thoughtful about that. Moderating capital investment programs, thinking about our investments here in the next 6 months, the next 1 year, 2 years. We're very thoughtful about it. We know that the oil opportunities, that we're going to continue to see stable investment opportunities here in the U.S. for a while. So it's not too concerning, but it's you start getting below $60, it starts creating a little bit different paradigm.
So what happens in a $50 oil world? Like, is that the place where you shut down rigs? Is that the place where you just pause investment decisions? Like, walk me through the psychology.
It is. So in a $50 world, as you're aware, the United States, we have these creaming curves that we'll call it, that basically on a cost of supply per barrel basis, essentially gives us a profitability metric to look at what we'll invest. When you start getting in that $50 window, or in that $50 to $60 window, really, you have to really start questioning whether or not you'll continue to invest at the current pace. As you know, shale investments are not immediate investments. You just can't immediately shut it down, rather. You're going to have programs where you get on a pad where you'll drill 1, 2, 3, 4 wells. And once you start that process, if you interrupt it, it can compromise your long-term delivery or your long-term ultimate recovery. So, we have to be thoughtful about that as well. And as we mobilize capital, when you see $50 to $60, we will start pulling back activity. We'll start adjusting that capital investment program for the next 6 to 18 months.
What sort of efficiencies can you guys still wring out of technology to help manage lower prices? Like, I remember when 2 mile laterals was a big deal, and then it was 3, and then it was 4. Like, what other stuff can you guys do?
Yeah, well, we'll continue to look at our direct operations, how we can be more efficient in our drilling and completion, pressure pumping, stimulation type of investments. And we're seeing good improvements there. The industry, like you said, with drilling longer laterals, we continue to improve there and see more efficiencies. There's more opportunity for that, I really believe. But then what we also need to do is, when these lower price environments, look at the overall supply chain, and the cost structure has to come down. We have to continue to look for ways to squeeze costs out of our investments in order for it to be competitive. If we're not successful with that, if we're not successful with technology, then that just puts more pressure, Alex, on future pricing, that you'll see a whipsaw effect in an increase in price.
That was Doug Lawler, now CEO of Continental Resources. It's now private, so they don't have to disclose their earnings in the same kind of way that they did before. And he has a lot of experience with being crunched. He used to head up Chesapeake after Aubrey McClendon was pushed out of that company and had to deal with so much debt and low natural gas prices. So he's kind of used to navigating that environment. And you take a look at the curve, it's a bizarre looking curve. I mean, you're seeing a lot of the curve signals demand right now, then demand kind of falling off a cliff in the beginning of 2026, and then it rebounds. So as long as you have that forward curve somewhere like above 60, he'd like it to be 65, over the next year or two, they feel relatively confident in drilling.
Where is the industry on new projects these days?
It's tough. With these prices, it's still tough. You're going to see a lot of supply come online now, like in offshore, but not because they feel really great about this current environment, but because that CapEx came a while ago when it was a better environment. So you're going to get that supply. To sanction, say, a new offshore A project at this time with this uncertainty, I don't know, it's going to be really tough.
Do they pull back on their activity? Like, if I'm not going to drill 24 hours a day, I'll do it just whatever, something less than that.
I mean, they can. So if you're looking at onshore, if you have a land lease, sometimes you have to drill, even if you don't want to. So that's a bummer.
Yep.
If oil prices are low, but they can do many things. That they can definitely drill wells, but not complete them. So you kind of wait, and then it's sort of, you had this backlog. So when oil prices improve, you can kind of just press a button, and then all of a sudden the wells come online and you get the oil. It's not that simple, but you get my point.
The companies have been, from what I understand, talking to you and analysts, pretty good about, listening to their shareholders, listening to their bondholders, not going crazy on some of their new projects when times were good.
So the smaller guys, that's where you're really going to see it, and the independent and the small mom and pops. So that's where we're really going to see the stressors. And they don't have the kind of financial flexibility or diversity that, like, say, a Chevron or Conoco will have. Speaking of, we get Chevron and Exxon earnings on Friday, so that's going to be quite interesting. And we'll have Chevron Mike Worth speaking to us on Friday, so we'll be able to discuss all that with him.
Good, excellent. On top of it, I'm
There you
psyched.
go.
I know what's going on.
He does. So when is the second season of Landman coming?
I don't know. They just announced that it got greenlit, so they got to film it, and so maybe not 6, 9,
So he's
12
waiting.
months.
He's waiting for
I'm
it.
patient.
Okay, fair enough. All right, let's take a look at the market. Nothing really happening here. We're seeing a little bit of upside, but from what I keep reading from analyst notes, that might be a short covering. You look at weak breadth, though, and this is not a macro fundamental upside for the S&P. The VIX, though, relatively calm. Big tech, you got tomorrow and you got Thursday. Going to be a big line in the sand for that sector. All right, coming up next, Balance of Power with Joe Matthew after this global news update. Happy Tuesday.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The White House says President Trump will sign an order today easing tariffs on the auto industry. Treasury Secretary Scott Bessent on the current tariff strategy with other countries.
What we are doing is we've created a process. I think the aperture of uncertainty will be narrowing, and as we start moving forward announcing deals, then there will be certainty. But certainty is not necessarily a good thing in negotiating.
Hours after the White House blasted Amazon for a reported plan to list costs added to products because of tariffs, the company says it was considered for certain low-cost products, but will not happen. CBS's Robert Costa says today marks 100 days of the second Trump term.
We have seen through all of his actions, whether it's his sweeping policy on immigration and deportations to his standoff with other countries on trade. This is not the Trump of 2017, just getting adjusted to running the federal government. This is someone who now feels like he is in command of not only the federal government, but he's taking on U.S. allies, U.S. adversaries across the board.
A private report on consumer confidence says it fell for the fifth straight month to the lowest level in 5 years amid concern about tariffs. UPS has announced a plan to slash 20,000 jobs, as we hear from CBS's Michael Wallace.
UPS is cutting costs after agreeing to slash the number of packages it will deliver for Amazon by more than half. Amazon accounted for about 12% of UPS's revenue. UPS says the cut should save it $3.5 billion this year.
Well, CBS's Ian Lee is in Chatham, Illinois, where 3 children and an 18-year-old were killed yesterday when police say a woman's car slammed into a building where an after-school program was in session.
She is not currently in custody, and that is probably along the lines of police saying they don't believe this was a targeted attack, looking more at this was possibly an accident. They are also saying that the toxicology report hasn't come back.
Homeland Security Secretary Kristi Noem tells CBS News the man accused of swiping her purse at a D.C. restaurant with Secret Service nearby is a career criminal.
We were with a big family and 4 kids under the age of 4. I had it right between my feet. But he was professional in how he took it. And, we're just glad that now that he's in custody because of so many other crimes he's committed.
The 49-year-old man faces a string of federal charges. Wall Street, right now the Dow is up 220 points. This is CBS News. High-level meetings going on at the Vatican ahead of next week's conclave to select a new pope.
Just like the film Conclave,
Sede vacante,
or translated from the Latin,
the throne of the Holy See is vacant.
The process of choosing the next pope has already begun, with cardinals meeting regularly, behind closed doors, of course, to discuss what qualities and priorities the next pontiff should have, and to deliver speeches laying out their own vision for the church. No one's calling them campaign speeches, but that's essentially what they are. Vicki Barker, CBS News, London.
The U.S. Navy says it lost a $70 million F-18 fighter jet after it rolled off the Harry S. Truman aircraft carrier in the Red Sea. Officials say the aircraft was being towed when the crew somehow lost control. The carrier has been involved in launching attacks against Houthi rebels in Yemen. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
And on the 100th day, he went to Michigan. Welcome to the fastest show in politics as President Trump marks the big milestone with a big rally in the suburbs of Detroit this evening with an offering for the big three. We meet the moment today with Republican strategist Alex Conant at Firehouse Strategies with Bloomberg Politics contributors Jeannie Shanzano and Rick Davis, providing analysis throughout the hour. Consumer sentiment sinks to the lowest level in almost 5 years. It's not a good look, and we'll dig into the data coming up with Bloomberg economics editor Molly Smith with us in Washington. So let's get to it. We start, as always, on Wall Street. Watching the markets for us in New York is Charlie Pellet. How's it look, Charlie?
Right now, we are looking higher across the board with the Dow, the S&P, NASDAQ, all very much in the green. Joe Matthew, happy Tuesday. Happy for the bulls with the S&P advancing today by 17 points, up 0.3%. We've got just one more session left before the end of a wild month. The Dow up 257, up 0.6%. NASDAQ up 40, a gain there of 0.2%, and should mention that the S&P 500 is extending its advance into a sixth straight day. The Bloomberg Mag 7 Index ahead of key tech earnings up by 0.1%. The 10-year 4.17%. The 2-year 3.65%. Gold is retreating by 0.9%, 33.15 the ounce. And West Texas Intermediate crude now down 2.3%, 60.65 a barrel on WTI. So stocks are higher right now. Ethan Harris is the former head of global economics research at BofA Securities. And on surveillance this morning, he said Treasury Secretary Scott Bessent deserves credit for lowering the temperature on tariffs.
I do think that he's gotten the ear of the president, pointed out that the way we're heading, you're going to have a really bad equity market going forward. And he's, I think, the architect of the recent softening of rhetoric. So he's helping, and because he comes from a more moderate background than a lot of the other advisors.
And you can hear more of the conversation with Ethan Harris on the Surveillance podcast. You can download it wherever you get your podcasts. The economic bellwether UPS is expected to cut 20,000 jobs this year and close dozens of facilities as it dramatically reduces shipments for e-commerce giant Amazon. UPS down now by 0.2%. Rival FedEx also lower today. Right now we've got FedEx down by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you, sir. And welcome to the Tuesday edition of Balance of Power here on Bloomberg Radio, satellite radio channel 121, and on YouTube, where you can dial us up right now. If you haven't already, search Bloomberg Business News Live. Just let it roll all day while you're working or whatever you're doing here. It's the full Bloomberg radio experience with visuals, if you dare, throughout the day. And we've got a lot to cover here as we mark 100 days. This is all anybody's talking about, beyond, of course, the markets and the economic data that are inextricably tied to the Trump administration. It's going to play out like this. He leaves the bubble pretty soon, actually, around 2 o'clock in the afternoon. We'll head over to Joint Base Andrews, and then it's off to the Midwest, to the promised land of Michigan. And he's not going straight to the big rally. We're going to get a big campaign-style rally tonight. And we're all staying up late for this special coverage right here on Bloomberg. But he's starting at Selfridge Air National Guard Base. If you were with us yesterday, you might have heard Congressman Bill Huizenga talking about that. There's been an ask in Michigan for more jets. That's why the governor was in the Oval Office a couple of weeks ago. Updated jets. They're going to be talking likely about a major investment at Selfridge. And then it's on to the grand event in Macomb County at the Community College Sports Expo Center. They tell us 6 o'clock p.m. What they're billing as the 100th Day in Office Achievement Speech. Are we going to get the big one? We get like a Kid Rock concert here? What's going to be involved? I'm waiting to hear more about the choreography because that's going to feel a lot like the campaign. Maybe we'll get a flyover since he's actually the president now, with, of course, a lot of the conversation around promises made, promises kept, right? It's billed as an achievement speech. Of course, one of the big promises was tariffs. Another promise was lower prices. And they keep bumping into each other. We talk about it every day around here. They even pulled out the Treasury Secretary for an early morning briefing. By the way, they've done this twice. You're allowed to chuckle at White House correspondents who have to get up extra early now every morning for the 8:30 a.m. press briefing. Used to be around 2 in the afternoon. Special guest today, the Treasury Secretary, there to answer the big questions on tariffs. When will the trade deals emerge? But more specifically, listen to this exchange. Are we actually talking to China? Because we keep hearing from the White House that we are. Donald Trump even said on the Daily, Beijing says we've never engaged the White House on tariffs. Here's the latest from this morning.
I'm not going to get into the nitty-gritty, again, of who's talking to whom. But as I said, I believe for the Chinese, these tariffs are unsustainable.
And very quickly, 2 days ago, you said you didn't know if President Trump had spoken to Xi Jinping. Do you know now?
Again, I would say Caroline and I have a lot of jobs around the White House. Running the switchboard isn't one of them.
Running the switchboard ain't one of them. So we still have no idea who's on the phone with whom, or anyone for that matter, with the idea of maybe some other countries arriving at deals first. Japan, maybe India would be the big one. But as we wait, it's not helping with confidence on the corporate level or on the consumer level as we bump into the headline this morning. Consumer confidence slumps to an almost 5-year low. We can talk about abstract politics all day long, but if your job is to be Bloomberg economics editor like Molly Smith, you have to deal with fact, data. Bloomberg, she's with us right now, having survived another 8:30 a.m. call, not for a briefing, but for a data dump. You have no mercy on these White House correspondents. Have to be in the briefing room at 8:30. You do it every day.
We've got other things to do. We've been doing this every day.
That's
confidence actually dropped at 10, so that was a little later.
That's true.
But we had
enough.
something else at 8:30.
You did. I know you're an early bird here, and I want to start on confidence here, because if you look back 5 years, what was that, May of 2020?
Dark times.
What was going on right around that time?
Really dark.
So we just went back to the pandemic in terms of confidence?
That's where the level's at right now.
Wow.
And this was the 5th straight monthly decline, and that's the longest stretch since 2008. Another time period that probably rings
boy, oh boy.
A really sad bell.
These superlatives are stacking up. So what are consumers saying in this survey?
It's really just a continuation of this tariff-induced anxiety about how this is going to be raising prices on a number of consumer goods, how prospects for what somebody anticipates their financial situation is going to look like are deteriorating markedly, anticipated odds of a recession, wage prospects, just all of these things about how secure you feel in your financial situation have just really weakened dramatically.
We talk a lot about soft data versus hard data. The data are supposed to capture what consumers are doing. We kind of look, as we're wonks at Bloomberg, we kind of assume everyone's walking around looking at GDP, and consumers say, well, geez, maybe I shouldn't buy this. But it's sort of a chicken and egg thing here, right? Where is the consumer when it comes to talk of a recession? Is that kitchen table talk, or is that for people like us?
No, I think this is very real. And that's where, people talk about this so-called vibe session.
Yeah.
In this idea of the soft data being just so much worse than what the hard data indicates. And that's why when we do actually get the first look at GDP tomorrow, it's going to be so interesting to see how much of this actually comes through in the hard data.
Yeah,
because GDP some economists are, I think the median estimate right now is penciling in what would be a very, very small increase. Would be a huge slowdown from the previous quarter. And a lot of that coming from, one, a big drop off in consumer spending. And the bigger one is trade. And all of this so far being that there's been so much import activity to get ahead of these tariffs. And we saw that with the 8:30 data this morning. That was the advanced trades report showing that the goods deficit widened to another record in March. So the import activity has just been rampant, and that's really going to just subtract the most from GDP tomorrow.
We're seeing this as well in the form of fewer container ships off the port of LA, right? So what are we in for tomorrow when GDP comes out? This will be our broadest measure we've had.
Yeah,
since it's mattered, since Liberation Day.
Exactly. So this is for the government's initial estimate of first quarter GDP. And there are a lot of economists who are penciling in a contraction. You know, we haven't had that since 2022.
Wow.
And that would be really dramatic. Again, a lot of it coming from the trade side. So if you are of the camp that maybe imports are going to normalize after this big rush in the first quarter to get ahead of tariffs, then you might be a little bit more sanguine on the outlook for the current quarter for trade and GDP. But it's really hard to tell right now because there's still so much of this up in the air. As you just heard, Bessent can't even tell us who's talking to who right now. So who the heck knows if there's still going to be more of this front-running activity until we really know where the tariff rates are going to settle.
Yeah, so the idea of front-running and the pull forward that we're seeing right now in anticipation of tariffs, does that guarantee a downturn in the back half of the year?
I don't know if I would say...
How do you sustain that?
I mean, I don't know if I would say guarantee a downturn. I think what the biggest thing for our economy is consumer spending. And that's what drives our economic activity more so than what trade does. And I think a lot of economists would also tell you in looking at how to determine when a recession is actually happening, you have to look at the consumer and you have to look at the job market. And trade is, I guess it's more of an exogenous factor compared to those other two.
Well, we're about to look at the job market on Friday. This is the other big one that we have coming. I keep asking you every month, when do the federal worker layoffs start showing up? What are you expecting on Friday?
So we keep thinking that like we're going to keep getting these like big, more of a moderation in job growth, which has generally been the theme. I mean, except for the fact that the March payrolls report was such a blowout in a good way, that there was such strong job growth. But it looks like that level would drop off pretty materially in April.
This month?
I don't know if I would. I mean, I think that implies that it's really like bad. But like the median estimate right now for payrolls growth is somewhere in like the 115,000 area. That's not bad. That's not a bad number. And the unemployment rate's still holding at 4.2%. Also not bad. But I always like to look at the range of estimates for the payrolls report and how wide the band can be. I mean, sometimes we're looking at a span of like 150,000 from the high to the low. So that median, of course, is who knows where the actual number will lie.
It's interesting what you said to us, though, is we get a contraction in GDP tomorrow. First time since the non-recession, remember, it was two quarters, but it wasn't a recession during the Biden administration. A lot of people think this is the beginning of one. When does that become consensus, or that's not a baseline expectation right now, is it?
I mean, I think right now
we're in one now.
That we're in one now.
Yeah.
I don't know if I would say that. No, I think because again, like there's the idea of what you kind of just alluded to, what we'd call a technical recession of these back-to-back quarters of negative GDP, which could very well be a trade story. But when you look at actual recession, jobs, spending, that's not really, hasn't happened
and I
yet.
learned a lot about that a couple of years ago when we met the technical definition, and Molly Smith taught me otherwise. It takes a lot more to call it a recession. Great to have you in Washington. Bloomberg economics editor Molly Smith with us on the fastest show in politics. Stay here live from Washington, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks higher with the S&P 500 index extending its advance into a sixth straight day. The S&P right now higher by 16, up by about 0.3%. The Dow up 269, up 0.7%. And the Nasdaq Composite Index up 24, up by about 0.1%. The 10-year 4.17%, with the 2-year that's currently yielding 3.64%. Gold is down $28 the ounce, $33.15, down 0.9%. And West Texas Intermediate crude down 2.3%, $60.60 a barrel on WTI. Bitcoin back above 95,000, 95,065 now, up by about 0.6%. Amazon says it never planned to widely display the cost of President Trump's tariffs on products after the White House blasted the reported move. We got more on the topic coming up in just a moment right here on Balance of Power. Amazon shares today, they're lower. Amazon does report earnings this week. Amazon down now by 0.4%. Recapping stocks higher. S&P right now up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
Okay, Charlie, thank you so much. Live from New York, Charlie Pellet, the voice of Wall Street and the New York subway. Ride the train if you want to know what I mean when you say that. The most recognizable voice. We were talking about this the other day in the newsroom. Arguably, the most recognizable voice in New York City. Think about that. Waking up every day as Charlie Pellet. I'm Joe Matthew in Washington, where we don't have a subway, we have a metro. Sometimes it works, much like the apparatus on both ends of Pennsylvania Avenue. We're going to be talking more about reconciliation, the drive to mark up some bills this week, and of course what's happening on the other end. That's the big story today. 100 days. How do you feel having experienced it? As we turn to the anatomy of a retraction, this has been an interesting element today. Having started at 8:30 this morning with another early morning call in the White House briefing room, the press secretary and the Treasury secretary today talking about trade, tariffs, you know, the economic agenda on 100 days. This is a big part of what we're going to hear about this evening from President Trump. But this whole idea of Amazon, you heard about this by now, I'm sure, listing tariff prices. You know, when you go to the restaurant, they've got the calorie count on the menu. Makes you not want to buy anything there. You have to order that if it's 1,000 calories. Amazon had an idea to break it out in terms of tariffs. How come my new Fruit of the Loom are so expensive, you ask? And there'd be a little item on there, right, like a service charge, and it would break out the tariffs. Didn't play well at the White House. We all woke up to this story today. The Amazon was considering this. The press secretary, Caroline Leavitt, was asked about it. Here's what she said.
I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. It's another reason why we are onshoring critical supply chains here at home to shore up our own critical supply chain and boost our own manufacturing.
Yikes. Called it a hostile and political act by Amazon. Fast forward to noon, statement from the company. That was never under consideration. Amazon says the team that runs our ultra-low-cost Amazon Hall store considered the idea of listing import charges, never approved, and was never going to happen. If you're with us on YouTube, you see the response. Rapid response from Amazon. The stock's been lower, and it's where we start our conversation with a noted Republican strategist who's been through the ringer in multiple campaigns, survived the first Trump administration, and is with us right now at the desk. Alex Conant, partner at Firehouse Strategies, was at one time in a different life, 2008, a spokesman for the Republican National Committee. Also helped to run Marco Rubio's presidential campaign. It's great to see you. Thank you for coming back on Bloomberg.
Good to be with you, Jeff.
So someone like yourself working at Firehouse gets a phone call from Amazon and says, Alex, we need help. What do we do here? A reversal like this is remarkable, and it tells us a lot about the influence this administration has over corporate America, doesn't it?
I don't think any business wants to get in a fight with the White House right now, but I think every business in America is also recognizes the reality that tariffs are going to drive prices up.
Sure.
As we saw in the last administration, inflation is the worst thing that can happen to a president. It's something that voters see everywhere. Every time they're going to fill up the tank, buy eggs, go online to go shopping. When they see prices going up, they get angry. And so, look, Biden didn't survive it. Carter didn't survive it. I think Trump and the Republicans are very sensitive that these tariffs are going to make prices go up. That's why you saw the White House so quick to attack this report.
Right.
They don't want prices to go up, but they really don't want corporate America or any businesses to to blame the president directly on why the prices are going up.
Well, so here you are, it's 100 days, and you need to write an achievement speech, as it's being called, for President Trump. We just spoke to Molly Smith, our economics editor, who's pointing to hard data. We're going to see potentially a contraction in GDP tomorrow. You see all the analyst notes. The odds are rising on a recession. We're seeing some creep when it comes to inflation. The bond market's been freaking out a little bit. How do you craft a cohesive message that says we did good in the last 100 days on the economy?
Yeah, look, I can't recall a situation where there's such a disconnect between the mood inside the West Wing and the mood on Main Street, on Wall Street, with the electorate as a whole. If you look at the polls that came out over the weekend, they're really bad for the president, and they're trending badly.
Yeah.
And they're bad because people are losing faith in his ability to handle the economy, which has always been the bedrock of Donald Trump's support since 2015, since 2016. They might not like what he tweets, they might not like some of his personal behavior, but they trust him to handle the economy. If he loses that, he's in real trouble, and that's what we're seeing in the polls. But the mood inside the White House is, look, 100 days in, we're delivering on everything that we promised, everything that the president said he was going to do, he's doing. We got our cabinet confirmed. You know, there's only one nominee, Matt Gaetz, who didn't make it through. The rest were confirmed, for better or worse.
Yeah,
sure. Some of them have had some trouble since then. But the executive orders, he's done more of those than any president in history. His tax reform is moving ahead in Congress. So I think that they feel very, very good about kind of the first 100 days. I think the president's going to be in a really good mood at his rally tonight. But I think the fact that he's doing the rally tonight and that he's doing all the interviews around 100 days is also a reflection that there are voices inside the West Wing. While the mood is good, they can see the storm clouds coming. They recognize he needs to get out there more, sell his agenda. But if the economy's in the tank, a couple rallies isn't going to fix his poll numbers.
I can hear what he's going to say on the border tonight, right? We've locked it down. This is the most secure border in American history. When it comes to the economy, though, is the message just hang on? Give me a little more time. And how much time does he have?
Look, I think, he's going to blame Biden. Right?
Okay, Biden's economy.
Yeah, look, he's going to say, look, the economy was, and the reason he won is because people didn't like the economy, right? Like, people not liking the economy is not a new phenomenon.
That's right.
People haven't liked the economy is why he won. He's going to blame Trump. He's going to say, he's going to blame Biden. He's going to say, look, I inherited the worst economy ever. We're doing X, Y, and Z to fix it, including tariffs, and he's going to try to sell his tariffs.
Yeah.
But at the end of the day, inflation is not something you can spin away. People are going to get upset about that. Falling stock market, people get upset about that. Recessions, if people start losing their jobs, look, they're going to blame Trump. And this is not I'm a communicator, and I love to say, this is not a communications problem. This is going to be an economic problem.
Wow.
If the trends that we're seeing that Molly was just talking about, if that actually comes to fruition, Republicans are going to have a real political problem on their hands.
Has there been a communications problem when you have Howard Lutnick on one network, Scott Bessent on another, then the president's doing an hour and a half in the Oval, and everyone's saying something a little bit different about tariffs, about whether we've talked to China, about whether we're going to have exemptions? There has been some confusion in the message. If you were in the communications office, how would you true this up?
Look, I think there's been, to say there's confusion on the tariffs is, I think, is an understatement. There's been no communication strategy on the tariffs. You're right. You have Howard Lutnick out there saying we are going to do tariffs because we're going to raise all this revenue to balance the budget.
Right.
You've had other people out there saying we're going to do tariffs to get great trade deals so we can do even more trading. You've had other people saying we're going to do tariffs so that we can increase the cost of imports, and force people to bring those jobs back to the U.S. so we can get more factories, more manufacturing in the U.S. All three of those things cannot be true at the same time, right? You can't have great trade deals and raise a bunch of new tariffs. And so, I think the fact that and at the same time you're asking the American people to make great sacrifices. You're asking them to pay more for the things that they buy every day. which is going to be unpopular. If you're going to ask the American people to make a great sacrifice, you have to have a really clear rationale for that, and we haven't heard that from the White House.
What do you do optically tonight? How do you make this different? We're so used to seeing Trump rallies.
Yeah.
Do you have a big opening act here? Is there a flyover? You know he's going to be calling people up on the stage, right? Alex, come here. I love you, Alex. Come talk to the people for a minute. Is this a stem winder like we saw in 2024?
I would assume so. I mean, look, I think Trump's current team has survived because they let Trump be Trump. And if it's up to Trump, he's going to do what he did
So
at the
let it
Republican
rip.
National Convention. Look, he gave the longest acceptance speech ever at the RNC. He gave the longest ever State of the Union speech a couple of weeks ago. Tonight's speech is going to be long.
Yeah, okay. Cancel the dinner plans, James. We're going for the long haul here. We're very excited for another late one. Will there be news becomes a question, and does it matter? Does he need to make news tonight? There's talk about some relief that he might offer in the form of auto tariffs, for instance. You go to Michigan, do you have to bring something with you?
Maybe. I mean, look, that's just right. Like, I'm out of the prediction business when it comes to Donald. When it comes to Donald Trump, like, who knows what he's going to do, what he's going to say. You know, at the end of the day, look, I think we should all expect some sort of tariff walk back over the next 30 days. You see what importers are saying. You see what the Port of Los Angeles is saying. You see what retailers are expecting. This, if all this comes to fruition, Memorial Day is going to be rough. Politically, the economy is going to be rough. And so I would expect over the next 30 days to continue to see the sort of tariff walkbacks that we've seen over the last 3 weeks. And maybe he lays out or hints at some of that tonight.
So lawmakers marching in parades and doing town halls, if they do them,
I mean,
at least Republican lawmakers
Yeah.
over Memorial Day weekend are going to get an earful.
Look, if the tariffs go into effect, as he said, and they're allowed to go into effect over the next couple of weeks, you're going to see an economic response to that. It's going to be very negative, and these things lag, right? First, first you see fewer imports. Then, look, if container ships are not coming into the Port of Los Angeles, then you don't need the truck drivers to drive those goods to the stores. If the stores don't have things to sell, you don't need people working hourly. If there's nothing to buy, prices are going to go up. People are going to get frustrated. This is all very foreseeable. I think you guys on Bloomberg are talking about it every single day. I think people inside the White House recognize this is coming, which is why you have seen the steady walking back of the tariffs. I would expect to continue to see that. If you don't see that, then there is going to be, I think, real economic headwinds this summer, and the White House is going to face the political penalty for
Well,
it.
you hear lines about empty shelves, so that's a horrifying thought for any administration. In our remaining moment, then, you're a political strategist. If you're a Democrat right now, are you writing the menu for the midterms?
Look, it turns out James Carville was right? Like all Democrats needed to do was go into hiding. The president's poll numbers are not down because Democrats have figured out effective messaging. To the contrary, I think the messaging we've seen from the Democrats is pretty lousy. But they're in the opposition, right? And so they're going to benefit in the midterm. Look, if the economy's in the tank and Trump is unpopular, the Democrats are going to have a good midterms, just like Republicans did 4 years ago.
Fascinating. I'm really glad to have you back in the fold here. Alex Conant, thank you so much. Firehouse Strategies, big thanks to Maddie and your team for putting us back in touch. Let's keep this conversation going because this is not one that's going to go away anytime soon. A voice of experience here in Washington, Republican strategist Alex Conant, many thanks here on Balance of Power. I'm Joe Matthew in Washington. Glad you're with us here on Bloomberg Radio, on the satellite, and on YouTube. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are on the way in. Only here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. One more session left before the end of a wild month. The S&P extending its advance into a sixth straight day. Up now by 13 points, up by about 0.2%. Dow Industrials up 240, higher by 0.6%. NASDAQ right now up 26. That is a gain of 0.1%. 10-year yield at 4.16% with a 2-year 3.64%. Gold at $33.24 the ounce, lower now by 0.6%. West Texas Intermediate crude down 2.8%, $60.33 a barrel, and Bitcoin up 0.8%, 95,281 right now on Bitcoin. Earnings news: Royal Caribbean Cruises has raised its profit outlook for the year as cruise demand continues to defy the increasingly dire situation of the wider travel market. RCL Royal Caribbean down 1.4%, rival Carnival Corp down 1.7%, and Norwegian Cruise Line Holdings down now by 1.8%. JetBlue is the latest American carrier to pull its full-year financial outlook as President Trump's trade war erodes demand for travel. And we've got Hilton Worldwide Holdings lowering its earnings forecast for 2025 as growing uncertainty about the U.S. economy weighs on future travel demand. Meta Platforms is out with a new standalone AI app in a bid to compete with other popular chatbots like OpenAI's ChatGPT. Right now, Meta Platforms up by 0.6%. Meta reports tomorrow. Again, recapping, S&P higher now by 0.3%. Balance of power continues right now, and back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie, thank you so much from World Headquarters in New York, the great Charlie Pellet watching Wall Street. He'll keep us safe, and we'll check back with Charlie a little bit later on this hour to see how stocks are faring in the Tuesday trade. Of course, so many questions about trade, and I mean that with regard to our relations, our trade relations with other countries. Not a lot of clarity coming out of that briefing this morning as the White House marks 100 days with a briefing at 8:30 a.m. with the press secretary and the Treasury secretary. They took a lot of questions, but we really don't know much more than we did yesterday. The promise of deals, we've heard a lot about them, soon to be announced. We're on the verge of on the bubble, whether it's Japan, South Korea, or maybe even India. When it comes to China, a lot more confusion. The Treasury Secretary would not answer questions today. Direct questions and repeated questions by White House reporters about whether the administration is in fact engaging or has engaged with China on tariffs. We've heard their daily calls. We've heard there have been some calls. Beijing says there have been no calls. The Treasury Secretary says he's got more important things to do than run the switchboard. Doesn't sound like a deal is about to emerge there, and that's why Wall Street continues to guess its way through this whole process. And of course, it's trade that tipped the scales in Canada. You watched the election yesterday. David Gura up there for us will join us next hour from Ottawa. It's not often, everyone from the U.S. dispatches a reporter to Canada for their elections, but this was a different one. And yes, Mark Carney won over the Conservatives. The victory was pretty narrow. More narrow than some had thought. But remember, before we got into the whole 51st state Governor Trudeau deal, erased the arbitrary line, all the language that we've heard from Donald Trump about actually taking over Canada, followed by tariffs on Canada, completely reversed the course of this race that may well have been won by the Conservatives in any other world. Ask Justin Trudeau. Now, Mark Carney did speak to supporters after winning the race. Here's what he said.
Our old relationship with the United States, a relationship based on steadily increasing integration, is over. The system of open global trade, anchored by the United States, a system that Canada has relied on since the Second World War, a system that, while not perfect, has helped deliver prosperity for a country for decades, is over.
We are never, ever getting back together. Also singing Taylor Swift, the Conservative candidate, Pierre Poilievre. Did I say it right? Cece said it better than me. Poilievre. I have to work on this. If you listen to the language they're both using, you might If you closed your eyes, or maybe if you just read them, you might wonder who was doing the talking, because their message was pretty identical. Listen.
Conservatives will work with the Prime Minister and all parties with the common goal of defending Canada's interests and getting a new trade deal that puts these tariffs behind us while protecting our sovereignty and the Canadian people.
Boy, Donald Trump bringing Canadians together, making Canada great again. We assemble our political panel. Rick Davis is here, partner at Stone Court Capital, our Republican strategist, and Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress, our Democratic analysts. Great to see both of you here. What do you think about this, Jeannie? Mark Carney has Donald Trump to thank for victory. Is that true?
I think that is true. And Joe, I'm secretly happy, not only because Carney's a liberal, but because I too cannot, well, you did a good job. I shouldn't say I too.
I tried. It took me a couple tries.
I can't do it. But, what a comeback. We usually look to our neighbors to the north for some kind of sanity from the craziness of American politics. And of course, it has just gotten infested all the way up there, because this election was all about somebody not on the ballot named Donald Trump. And I don't imagine a world in which we've seen the sort of huge comeback that the liberals had, 22 points in just a few months, in the absence of Donald Trump. And why Donald Trump was calling it the 51st state, why he insisted on calling Trudeau governor, the tariffs and more, it remains a mystery as to what the policy reasons were. But he certainly helped Carney get this big election and helped usher in a fourth term for the Liberals up in Canada.
Boy, if you're Justin Trudeau, Rick, are you wishing you just hung on a little longer here? Because the earth shifted under everyone's feet in Canada. At the same time, Conservatives did better than a lot of people expected, and I wonder how you're reading these results.
Yeah, look, you have a macro cycle that favored the Conservatives and have for quite some time, even before Donald Trump got elected. Trudeau, after having served over a decade, was sort of, the whipping boy for the success of the Conservatives. Trudeau is a smart political operative. He figured out that he was the problem and the impediment to the Liberals gaining power again. And I thought, quite notably, took himself out, creating an opening for someone like Mark Carney, who is the most conservative liberal I've ever seen in my entire life. And so it doesn't surprise me that Pierre Poilievre would start echoing exactly what the Liberals' campaign slogan was. I mean, Liberals were all about making Canada strong, and Poilievre was all about making Canada first. Guess who came in first? So I think now you see a unified approach to Canadian government, which will be to oppose Donald Trump's tariff sanctions, his border sanctions, and all the things that have created so much pressure with the Canadian-U.S. relations.
Yeah. What's the play for the White House here then? Jeannie, if anything different, they got a bit of a reprieve when the reciprocal tariffs were announced on Liberation Day, and the president continues to explore different ideas here with Canada. Will the Mark Carney regime help to end the tariffs on both sides of the border?
Yeah, it's hard to tell right now. Of course, it's going to depend a lot on whether he is able to form a government, a majority governing structure, or whether he has to rely on smaller parties up there in the House of Commons. What he's going to be able to do, because let's not forget, putting aside the Trump of it all, Canada has a lot of frustrated citizens up there. Everything from the economy to issues revolving around housing prices to equity issues. I mean, the list is long. And before Trump, that's partly why they wanted to throw the Liberals out. To Rick's point, Carney is a much more conservative liberal than we usually see, a former central banker, a first-time politician who had the campaign commercial of the year with Mike Myers. But putting all that aside, that was a good one. This was all, though, about Trump. And we're seeing it in other parts of the world as well. We have an election coming up in Australia in just a couple weeks, and there is some concern that the same sort of idea is happening in Australia. The Conservatives, who were set to have a pretty good showing in a few weeks, may not have that good showing. And in this case, we're not seeing Trump, try to claim Australia as a 51st state, but it seems to be a reaction to what the U.S. has done under the Trump administration in the last few months. We have to wait and see. But this could be sort of a chain reaction in some of our allies and former allies around the world.
Yeah, that's an interesting prospect, Jeannie. It's interesting, Rick, that we have this example right on our border. It's right in front of our faces with what's going on in Canada. But are there lessons learned here for the Trump administration when it comes to other trading partners we haven't even begun to engage with yet?
Well, I think the biggest one, and this is really critical to U.S. global leadership, is what's happening in China, because there is reporting that Xi's party is benefiting by national surges politically to his side to defend China from, Trump tariffs, Trump, geopolitical pressure. And so here we are, our approach is actually strengthening our primary strategic opponent in the world. And so, look, as much as we like to talk about the Canadians, I mean, that's really like talking about your cousins. You have fights, but you're still family. China is a different story. And so the idea that somehow what Trump is doing is strengthening the China hand politically in China is exactly the opposite of what our geopolitical pressure should be all about.
Yeah, this is pretty wild. The public sentiment story, the wave of patriotism in China, Jeannie, is something that we're reporting on here on Bloomberg. And this is people from a wave of different backgrounds here. When you're talking about consumers, manufacturers, the elite, they want to back up Xi, as Rick just mentioned, in the face of this onslaught from Donald Trump. Does that sound like a recipe for concessions?
It does not. And again, we are seeing this around the world with both our closest allies and our competitors for decades, like China. And, a lot of the game being played today in the United States is, what's the most consequential thing Donald Trump has done in the first 100 days? And it's so hard to choose because so much has happened. But there is a school of thought that says the most consequential thing he has done is to reorder our alliances around the world. And we're talking about Canada. Look at Europe. Look at J.D. Vance going over there in the Munich Security Conference in February and March. Look at Europe saying, you know what, we can't rely on the United States anymore for economic security. Canada now, the stark comments by both the challenger and the winner yesterday in terms of we need to stand on our own. What Rick was mentioning about in China, there's no coming back from any of this. And so I think there is a case to be made on this 100th day that the most important thing Donald Trump has done, or consequential, would be to reorder the world order for the first time since World War II, both security and economic. And there is going to be a stark fallout for Americans as a result of that. And you read some of these pieces he's interviewed in, whether it's Time or The Atlantic, he is sticking to his guns on all of this, as are the J.D. Vances of the world. So this is a stark reminder of that yesterday in Canada, but they are certainly not alone.
Yeah. So what does President Trump say about this tonight in the big rally in Michigan? Rick, right? He's going to be surrounded by guys in hard hats, different factions who voted for him. He'll have the sort of campaign mood behind him, and he can talk about how America's been getting ripped off the way he did on the campaign trail. But how does he sell the confusion over tariffs that's causing a lot of these people who are going to be in that crowd tonight to pull back on spending and make different decisions in their lives?
I don't think he's going to do anything tonight that he hasn't already been doing, and that is those general prescriptions for how these tariffs are going to make America rich. And there's no real connection between how he's going to do that and what the reality is. I mean, Alex Conant right before our segment said it right, which is, when you have 3 or 4 different rationales around selling of tariffs, no one of them is going to actually solve the problems that are addressed by the others. And so, he's not going to do anything tonight to sort of clear up the confusion about what's happening. I do think he's going to try and start the slow walk back of tariffs. We're going to be bringing these things down, and we're going to make it all better again.
Amazing. We're going to find out together, by the way. That speech set to begin 6 p.m. Eastern time in Michigan. Rick Davis and Jeannie Shanzano stay with us. We have a lot more on this 100th day and our second hour to get to. Kaylee Lyons will join the conversation, and we'll welcome our global television audience to the fastest show in politics. Thanks for being with us, only on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The president heads for the Rust Belt to mark 100 days. Welcome to the Tuesday edition of Balance of Power. As Donald Trump stages a big rally in the suburbs of Detroit tonight, I'm Joe Matthew alongside Kaylee Lyons in Washington. We thank you for being with us. Kaylee, he's going to be showing up, we understand, with an offering to the big three automakers.
Yeah, a revision to the auto tariff regime, essentially changing the 25% tariff on auto part imports, which was set to go into effect next week, making sure these car makers can claim an offset. based off the value of a vehicle, 3.75%. Frankly, Joe, this seems a little bit complicated, but the White House is saying that this is in response to the concern from these companies. And you saw that concern evident in GM today, had to pull its guidance because of the uncertainty around the tariff impact.
It is interesting timing to be rolling into Detroit as GM puts up earnings and we look across the border with what happened in Canada yesterday. It's a curious moment. We are going to bring live coverage of that rally. It's expected to be a campaign-style rally, as I mentioned, in the suburbs of Detroit, 6 p.m. Eastern Time. Bloomberg's Tyler Kendall is already there. She'll have a live report for us straight ahead.
And we're going to get the perspective from the other side of the aisle. It's just what we have experienced in the last 100 days. As President Trump is likely to argue tonight, things are going great. Promises made, promises kept. But the Democratic governor of Kansas will join us this hour for her take on whether or not these policies are moving the country in the right direction.
Voices from the heartland today on the show from Washington.
Indeed, but we're not just in Washington. We're in New York as well. At least Charlie Pellet is. That's where he monitors the markets for us here on Bloomberg TV and radio. Charlie, how are we looking on this Tuesday?
Right now we are looking lower, and that is a big reversal from our last update. Kaylee Lines with the S&P 500 index just dipping into the red, down by 2 points now. Little changed, yes, but giving up earlier gains. We've got the Dow up 114 now, up by about 0.3%. And NASDAQ, the composite index, lower by 36, down 0.2%. The NASDAQ 100 index also down 0.2%. The Russell 2000 index of small cap shares up by about 0.1%. Our Mag 7 index ahead of key tech earnings, lower by 0.4%. The 10-year right now 4.16%, with the 2-year 3.64%. Gold down $15 the ounce, 33.28, down 0.5%. West Texas Intermediate crude down 2.7%, 60.35 a barrel, and Bitcoin right now up by about 0.4%, 94,875 on Bitcoin. GM shares are lower by 2%. General Motors withdrawing its earnings guidance for 2025, also putting $4 billion in share buybacks on hold because of uncertainties surrounding tariffs. Honeywell International raising its full-year guidance for earnings per share, expecting to offset $500 million in tariff exposure with price changes and other actions. Honeywell up by 4.6%. Business of sports. Sources tell Bloomberg former New York Giants quarterback Eli Manning is putting together an investment group to bid for a piece of the NFL team. Manning led the team to its last Super Bowl victory in 2012. Again, recapping, little change for the U.S. equity market right now, giving up earlier gains. S&P right now down by 0.5 point. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at trading about 3.5 hours since the opening bell rang at 9:30 a.m. Eastern Time. And we're seeing a new trend here in Washington this week, which is a pre-opening bell briefing here in Washington from the White House press secretary, Caroline Leavitt. 2 mornings in a row, 8:30 a.m. Eastern Time is when these have been called, and she's been joined by other officials in the administration. Yesterday it was Tom Homan, who of course is the borders czar. Today it was the Treasury Secretary, Scott Bessent. As tariffs, as always, remain in focus, specifically tariff negotiations with trading partners, and the ongoing question as to whether or not those negotiations are even happening with China at the moment. This was the Treasury Secretary earlier.
I'm not going to get into the nitty-gritty again of who's talking to whom, but as I said, I believe for the Chinese, these tariffs are unsustainable.
And very quickly, 2 days ago, you said you didn't know if President Trump had spoken to Xi Jinping. Do you know now?
Again, I would say Caroline and I have a lot of jobs around the White House. Running the switchboard isn't one of them.
Running the switchboard isn't one of them. Maybe Tyler can help us with the switchboard. She's made her way to Michigan, where President Trump is going to be speaking later in what's being billed as an achievement speech marking 100 days. Bloomberg's Tyler Kendall in Warren, Michigan. It's at a community college. Tyler, set the stage for us.
Yeah, hey, Jim. So Warren, Michigan, we're in Macomb County. You can probably hear the crowd behind me. We're going to show you what the scene already looks like. For our radio listeners, you can see people are already starting to line up here as President Trump is expected to take the stage at 6 p.m. Eastern. This is an auto industry hub. In fact, a county official tells me the area has 338 vehicle manufacturers that employs about 22,000 people. And it comes as President Trump is expected to sign those executive orders on Air Force One on his way over here to Michigan that you've been talking about that could give some reprieve to automakers. That includes preventing the stacking of levies for automakers so that they wouldn't be subject to that 25% tariff on steel and aluminum, for example. It also would potentially modify how we see auto parts tariffs end up being tariffed by allowing companies that make the fully assembled vehicles in the United States to get an offset of up to 3.75% of the MSRP value for the next year. Now, administration officials, and we should be clear, this is not changing the actual 25% tariff rate that automakers are facing, but administration officials say that this should give them at least a little bit of a boost, a little bit of a reprieve to reshore manufacturing to places like Michigan. Here's what the Treasury Secretary had to say about it earlier today.
I can tell you that it will go substantially toward reshoring American auto manufacturing. And again, the goal here is to bring back the high quality industrial jobs to the U.S.
I was on a press call earlier today with senior commerce officials who told us reporters that ultimately it really was the talks with the big three automakers that made the difference here, that ultimately spurred the administration to make these changes, because the White House says that they have gotten commitments from these companies to reshore production, and they just needed a little more time.
Well, and Tyler, obviously no surprise that this is likely to feature heavily in the president's speech tonight, given where he is speaking, and we can already hear the excitement of the crowd that is gathering hours early. What are his other primary messages going to be tonight for those who are assembled to see him?
Well, the administration really is focusing on the two prongs of its economic approach today, with Scott Bessent this morning touting progress when it comes to tariff negotiations, although we have yet to see any more concrete details about exactly where those stand. And then the other priority is that they are pushing, that they are moving very fast to get his tax agenda through. In fact, President Trump told Michigan Republicans not to come here tonight because he wants them to stay in Washington to get done the reconciliation package. We heard from the Treasury Secretary yesterday that they would like to see the entire package done by July 4th. It's something that Senate Majority Leader John Thune said was an aspirational goal. Instead, we're really thinking that that X date is going to be the hard deadline for lawmakers. But it is clear that this White House is pushing to get more cash into consumers' pockets, quickly try to turn the attention there as they deal with the fallout when it comes to the tariffs from retailers and consumers alike.
All right, Bloomberg's Tyler Kendall live in Warren, Michigan, where it is already loud. I can't imagine what it's going to be like this evening when President Trump speaks at 6 p.m. Eastern time. Thank you so much, Tyler. And for a kind of taste as to what we might be able to get from President Trump tonight, beyond what we just heard from Tyler, let's hear from the president himself, some of the highlights of his first 100 days in office.
The golden age of America begins right now. I will sign a historic executive order instituting reciprocal tariffs. My fellow Americans, this is Liberation Day. China, 67%. They're sending fentanyl to Mexico and Canada.
You're not in a good position. You don't have the cards right now.
One of the most important initiatives is DOGE.
We're going to be cutting taxes, and it's possible we'll do a complete tax cut.
I have a great relationship with President Xi. I hope it's going to stay that way. We are finally going to be able to make America great again, greater than ever before.
Words from the Republican president of the United States. And we want to get the other side now from a Democratic leader of a state, the state of Kansas specifically. Its governor, the chair of the Democratic Governors Association, mind you, Laura Kelly, is joining us now here on Bloomberg TV and radio. Governor, thank you very much for being with us here on Balance of Power. I would imagine it will be several times tonight. We might hear some iteration of promises made, promises kept by President Trump, and hear those words from his lips. He argues, Governor, that what we have seen over the last 100 days is him fulfilling the desire of the voters who elected him. Is he fundamentally wrong about that?
I don't know if I would say he is wrong. I mean, certainly in his mind, he feels like he said he was going to do all of these things, and he's doing all of them. And there are actually some of the things that he proposed doing that I think everybody would agree could be very good things. You know, certainly we're all cognizant of the fact that we had an issue at our border and that needs to be cleaned up. I would agree. I think, though, we can't leave it just at cleaning up the border and deporting people who may or may not be criminals. I think it needs to go further than that to deal with the entire immigration issue and come up with, finally, a comprehensive immigration reform package that works for our states. Every state I know is facing workforce shortages, and by deporting potential workers, we are not working towards resolution of that. We really need the administration and Congress to sit down and finally come up with a real solution that would resolve the border issue, but also resolve our workforce issue.
Governor Kelly, we're lucky to talk to a lot of elected officials on this program, but it's always different when you speak to an executive. Governors and mayors simply have a different reality than a lot of elected officials here in Washington who play the partisan game and do a lot of talking. You have to deal with things like balancing budgets, making sure services are delivered, making sure roads are paved, actual things that impact constituents' lives. And so I'm curious what your pragmatic view is of this waiting period, this sort of limbo that we're in right now, and how much time President Trump actually has to set the record straight and deliver a clear message on tariffs. You're talking to voters every day about this. Is that window about to close?
Well, I think we're past time. I think the first 100 days of this administration has just sown chaos and uncertainty all across the country. And all across issues and industries. The tariff issue is obviously the one that's most prominent and clearly creating issues for our economies in our states. In my state alone, we have worked so hard over the last 6 years and been very successful in growing our economy, in bringing in new and different industries into our state, creating 75,000 jobs, bringing in $22 billion worth of new capital investment, which is huge for a state like Kansas. All of what we've been doing is getting put up in the air as the companies that we have recruited, the companies that are here, are dealing with all of this chaos and uncertainty on the tariff issue, and they don't know where to go or what will work as they move forward. So everybody's getting to a standstill kind of position, which is not good for the companies, and it's certainly not good for our states. So, while I recognize that every new administration has the right and responsibility to, put into place policies and procedures that they think are necessary to move the country in a way that they think appropriate, but doing it in this way where it's just willy-nilly, one thing one day, another thing the next day, isn't helpful. Not to move their agenda forward, but certainly not to help our states stay on a path.
Well, and your state specifically, Governor, has more than 50,000 farms, and I wonder what you're hearing from farmers specifically about the impact of tariffs on them and whether they're going to need to count on subsidies from either the state government or the federal government to offset the impact.
Well, we have two major industries here in the state of Kansas. Aviation is one of them, and as has been in the paper, there are lots of issues going on with the aviation industry as a result of these tariffs and these sort of international battles that are going on right now. But certainly in agriculture here in Kansas, but then across the country, the tariffs create absolute havoc and real concern for our farmers. I was the very first, maybe the only Democratic governor who signed on to the USMCA, the trade deal that the Trump administration put together in his first administration. dealing with our relationship with Canada, Mexico, and the United States. I signed on to that because I thought it was in the best interest of Kansas, and now that's all being thrown out. Nothing's really replacing it. But what has happened is that our relationship, particularly with our two biggest trade partners, Canada and Mexico, are in a shambles. Our farmers very much depend upon the potash that they get from Canada to fertilize their fields. A lot of our produce and stuff, which we can't grow here, is brought in from Mexico. Our exports, for instance, when the USAID was sort of shut down, moments after he took office, we had, I don't know how many millions of pounds of milo that was sitting in silos here in the state of Kansas. Their only customer was the USDA. They were growing this specifically for them to use. So my farmers are stuck with this stuff, and the market has been completely shut down. So there are a lot of problems, and we absolutely have got to come to some resolution very quickly. And they don't want, a handout. They got that the first time around. Remember that tariffs were put in place in the first Trump administration, and they did backfill that with cash. The farmers don't want that. That's a Band-Aid that doesn't do anything for them going forward. And I think their biggest fear with what's going on right now is that not only are they not able to sell their product right now or export their products right, but that they will ultimately lose their markets. That countries aren't going to wait forever. They're going to go find somebody else who can supply what Kansas farmers have been supplying. So it is a huge concern, and one that I hope this administration will wake up to and finally deal with, because
Governor Kelly, we only have 1 minute left. I want to give you an opportunity to pre-butt what we're going to hear this evening. Donald Trump carried your state by more than 16 points in 2024. What's your message to voters on this 100th day of the Trump administration?
Well, there's not a lot to say to voters right now. We don't have an election. Midterms aren't until 26. Another presidential election is not till 28. But I would say to all citizens that they need to make a lot of noise about how this is really impacting them and their lives. And they need to make that noise so that their congressional representatives hear them. Because what's happening right now is impacting people all across this country, whether they're talking about what they're thinking about doing with Medicaid, what's happening with tariffs, and what's happening in our higher education system. Lots and lots. They need to get loud.
We're glad you could be with us. Laura Kelly, the governor of Kansas, chair of the Democratic Governors Association.
121 on Wall Street. We do check markets all day long here at Bloomberg. 6 in a row for the S&P 500 index. Stocks are pushing higher as investors digest today's economic data, and some industry giants are pushing their earnings outlook amid trade uncertainty. We have got pausing their outlook, I should say. We got the S&P up 16 right now, up by about 0.3%. S&P 500 index at 55.45. The Dow Industrial is up 232 now, up by about 0.6%. And NASDAQ higher by 31 for the NASDAQ Composite Index, again right now of 0.2%. 10-year 4.17% with the 2-year 3.65%. Spot gold down $21 the ounce, down 0.7%. The precious metal now at 33.22 the ounce. Crude oil 60.55 a barrel, down 2.5%. And Bitcoin up $700, up 0.7%. 95,207 right now on Bitcoin. Amazon says it never planned to widely display the cost of President Trump's tariffs on products after the White House blasted the reported move. Amazon shares, they are trading lower today, down by about 0.6%. Economic bellwether UPS expects to cut 20,000 jobs this year and close dozens of facilities. Amazon down now by 0.7%. Rival FedEx lower by 1.3%. Sources tell Bloomberg former New York Giants quarterback Eli Manning is putting together an investment group to bid for a piece of the NFL team. Recapping, stocks higher. S&P right now up 15, up 0.3%. Balance of power continues now. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at trading on this Tuesday. Thank you so much. Not just any Tuesday, of course, the day in which President Trump is marking 100 days back in the White House. And of course, over the last 100 days, we've seen a lot of action emanating from the executive branch, from President Trump himself, the signing of hundreds of executive orders or memoranda, the implementation of tariffs and the like, things that he hasn't really needed Congress to go with him on, and Congress hasn't really expressed much interest in countering him on that. But the problem, Joe, is for the next portion of the president's agenda, the next 100 days, he's going to need Congress.
That's true.
To get a lot of what he would like to achieve across the finish line.
Well, if you think about it broadly, too, I mean, that's when trade deals would need to be announced, right?
True.
That the 90-day period would be wrapped up. We have to deal with Trump tax cuts, and we could get an X-date this week that lands a debt ceiling in the early summer. So, yeah, the second 100 days could be really interesting here. And it's where we start our conversation with our panel as we round the first 100. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Rick is partner at Stone Court Capital. Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. So happy 100 days, everybody. Rick, how much does President Trump have to show for the first 100 days, but also how much news does he need to make? Because there is an expectation he's going to make an announcement, no mystery that he's in the suburbs of Detroit here, to make an announcement on auto tariffs that we just heard from the White House. The auto industry will be happy with the announcement, some relief on tariffs that will prevent them from being stacked on top of each other here. Rick, does he need to bring the goods to Michigan?
Yeah, first of all, I'm not sure it's a happy 100 days. I mean, it's a pretty sober 100 days. You know, what everybody thought was going to be open season on, you know, investments and mergers and IOPs and, you know, less government regulation and more entrepreneurship has turned into exactly the opposite. Real serious questions about global trade, attacking the Fed's independence. I mean, this has had a real salutary effect on the economy, and S&P down 8%, worse than any president since Gerald Ford in his first 100 days. And we know what was going on back then. So the reality is that I think today he's got a chance to try and start peeling some of that back. Obviously, they are forecasting release of some of these tariffs on parts for car manufacturers. Good start. You kind of scratch your head and go, okay, well, why did we do that to begin with? Why? I mean, like, you know, these are parts that all go into automobiles that are going to be made in the U.S. ultimately anyway. Why did we put tariffs on them to begin with? And so I think there's going to be a lot of that head scratching, because hopefully this is the beginning of a whole series of things, including, as you point out, deals that we're making with other countries that will lower the reciprocity tariffs reciprocal tariffs that were already put on. Well, if we're going to cut those deals, why didn't we just reach out and say, hey, we're going to cut a new deal with you before we put these reciprocal tariffs on? I honestly don't really get the strategy, and it's not working with the American public, but tonight maybe we see the claw back on some of that.
Well, and I wonder how much tonight will focus not just on tariffs, Jeannie, but the other kind of domestically oriented efforts that the president has undertaken, in part with Elon Musk at his side, like the dramatic reduction in the federal government, the complete dismantling of agencies like USAID or the CFPB, arguably. How much, Jeannie, is his 100 days actually marked by something that could be, if not a permanent change to the federal bureaucracy, something that would take years to unwind even once he leaves office, or rather than unwinding, perhaps rebuilding?
Yeah, much of what he's done can take a long time. Things he's done via EO, we usually say, well, a new president could walk that back. But that's harder in those areas you're talking about, Kayleigh, like the cuts in DOGE. How do you bring a workforce back if you want to do that? How do you rebuild departments? I mean, just take USAID as an example. That's going to be a big, big challenge. And, as I look at what the president is facing, he certainly is not going to want to focus on the economy tonight, because the economy, according to every poll you look at, is in disarray. So he's going to want to talk about things like immigration and DOGE, but he's not incredibly popular on that either. And so this is going to be difficult. Karl Rove got on Fox News and said the president has a huge problem, and that is, number one, his support as it pertains to the economy, both short-term and long-term, has all but plummeted and is in very bad shape. And Karl Rove, as we know, is no liberal. So how do you walk back from that? Very tough. And then I look at the Atlantic interview where the reporters asked him point blank, is there any red line, any sign of the U.S. economy plummeting where you would say, okay, enough is enough and I'm going to walk back from my commitment to tariffs? And he said, no, there's no red line. I've been committed to this for 30 years. Nothing could change my mind. So that is a very sobering reality as we look out there. And so I think it leaves him with a real challenge tonight.
Well, Rick, Democrats are counting the ways here. The top Democrats on the House and Senate Appropriations Committee are out with a letter here. They've even created a tracker to determine the billions of dollars in funding allocated by Congress that has been blocked or withheld by this administration. This is $430 billion, according to Rosa DeLauro and Senator Patty Murray. $430 billion for medical research, disaster relief, aid to farmers. I could go on here. It's almost like they're taking a page out of Elon Musk. Remember the wall of receipts? We now have a tracker to determine the money that's not being spent. Is this the type of strategy that works?
Yeah, I think it's important to realize there are kind of like three buckets that everybody's talking about. There's that DOGE bucket that went from we're going to cut $2 trillion out of the budget to now we're going to cut $150 billion, right? And these are cuts. These are things that will likely not come back. Then there's this $430 billion, which are things they're authorized to spend the money on. They're just not spending it. Those checks aren't going out. The funds aren't made available to the programs that have been authorized by Congress to do. And that's what Congress is tracking, saying, hey, this stuff is supposed to be done. There's a third bucket that Russ Vought's about to send to Congress, which is $9 billion of rescissions. That means here's money you gave us. We're giving it back. We're not going to spend that money. And so, like, there is a massive reduction in spending by the federal government going on, none of which we can really track effectively right now. And by the way, we talk as if the first 100 days is at the end of the administration. We have 3 years and 400 days left to this administration, and we're just getting started. So I think you can anticipate this fight continuing for a long time.
Well, it certainly is incredible to consider the more than 1,300 days that we still have left. But of course, the president may be thinking about a kind of more immediate deadline here, Jeannie, as he wants to make sure he can get a maximum amount done with control of both chambers of Congress. Right now, Republicans have control. That could change after the midterms next year, which is why they're trying to force through this budget reconciliation package with his tax cuts included as quickly as possible. The Treasury Secretary says now July 4th is really the target to get this done. It had previously been touted by the Speaker of the House as something that would be accomplished, at least in that chamber, by Memorial Day, knowing that the debt ceiling could be a factor in here as well. Is this really going to be something that can be completed by the August recess, given the difficulty of some of the subject matter that Republicans are going to have to tackle in the coming weeks?
Yeah, they really want to just ruin your summer, Kaylee. Forget about the beach. You're going to be working either Memorial Day, July 4th. It's going to be tough either way. I think in an odd way, the fact that the debt ceiling, they may come up to it, may light a fire under them. But either way, there is going to be a lot of inter-party squabbling on these issues because we've got these small groups of Republicans who are committed, and they, unlike Donald Trump when it comes to tariffs, they do have a red line that they won't go over. I mean, we were just talking about clawbacks, and you've even got a group of Republicans in Congress who say, we don't want clawbacks of the IRA. Quite frankly, we like those investments that Joe Biden made. Then you've got the other deficit hawks. And then, of course, you've got the folks on SALT, which, is one of my personal favorites. Then, you've also got folks who are saying, we're going to draw a red line as it pertains to something else. And so these groups are going to have to come together and figure this out. And it's going to be hard to do in a short period of time. And of course, Donald Trump is running right smack dab into a Madisonian government. It's all about divided power. Everything he's done this first 100 days has been unilateral executive power. Now he's got to deal with this other branch he's been able to run over for some time. But if they look at the same polls Karl Rove is looking at, they may decide it's not in their interest, and they indeed could lose their seats if they go along with what the president is proposing. So I think July 4th is ambitious, but Scott Bessen's a smart guy. Maybe he knows something I don't, but I think it's an ambitious timeline.
Does that unilateral approach, Rick, that Jeannie describes, the playbook for the next 100 days?
Yeah, I don't think so. Look, I mean, even though Donald Trump did a lot of things through executive order, which he'll continue to do throughout his presidency, all he has to do is pick up the front page of any newspaper and say, I'm going to issue an executive order on that today. That seems to be his MO. But remember, Congress gave him his cabinet. There were hearings, there were the votes in the House, in the Senate to confirm every member of his administration's cabinet, and the members had lots of opportunity there to hang people up and make it, quote, worth their while on a policy basis. But they didn't do it, and now they're all rallying around, the big, beautiful reconciliation bill, and I have no doubt that's what will become law.
All right, Rick Davis and Jeannie Sheehan Zaino, our political panel, thank you so much joining us as we mark 100 days in office for President Trump and look ahead to his big speech in Michigan tonight, again slated for 6 p.m. Eastern Time. We'll have full coverage of that for you, but there's still more ahead here on the early edition of Balance of Power. This is Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks trading at very close to session highs right now. The S&P's up 24 at 55.53 for the S&P 500 index. That is an advance of 0.4%. The Dow up 292 points, now up 0.7%. Nasdaq up 51. That is a gain of 0.3%. While the Bloomberg Mag 7 index ahead of all those tech earnings this week. Big tech earnings up by 0.1%. The 10-year 4.16%. The 2-year is currently yielding 3.65%. Spot gold is down $18 the ounce now, down 0.6%. 33.24 the ounce for the precious metal. West Texas Intermediate crude down 2.5%. 60.47 a barrel on WTI. Bitcoin is up 0.8%. Bitcoin now at 95,224. Pfizer is cutting at least another $1.2 billion from its spending while the company searches for its next big hit after the failure of its obesity pill. Pfizer shares, they're up right now by 4%. Hims and Hers Health is surging after Novo Nordisk said it would sell its popular weight loss drug Wegovy for a reduced price on several telehealth platforms. Hims and Hers up now by 26%. Novo Nordisk up by 4%. Eli Lilly up by 1.3%. And sources tell Bloomberg former New York Giants quarterback Eli Manning is putting together an investment group to bid for a piece of the NFL team. Manning led the team to its last Super Bowl victory in 2012. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Bailey Lyons.
Many thanks, Charlie Pellet, watching Wall Street for us every day here on the fastest show in politics. Thank you for being with us on the Tuesday edition here on Bloomberg TV and radio. Find us on YouTube as well. Search Bloomberg Business News Live. With uncertainty being the key word at the IMF spring meetings last week here in Washington, certainly when it came to tariffs. And we're expecting to hear a little bit more on tariffs from President Trump when he speaks at the big rally in Michigan later, marking 100 days. Kaylee, it's entirely likely that that uncertainty around tariffs will be featured prominently in the next 100 days. For this president, because we're talking about a lot of the potential for a lot of trade deals that could take months, if not years. The idea of a trade deal with China, 2 to 3 years, according to Scott Bessent. Maybe there's some lower hanging fruit between now and then.
Yeah, they're looking at Asian countries in particular, Japan, South Korea, India, getting the primary focus right now. But we also heard from the Treasury Secretary when he joined the White House Press Secretary Caroline Leavitt at the briefing this morning, specifically about trade conversations with the European Union and what the holdups are.
My observation would be, goes all the way back to Henry Kissinger's statement, when I call Europe, who do I call? So we're negotiating with a lot of different interests. Some of the European countries have put on an unfair digital service tax on our big internet provider. France and Italy, other countries, Germany and Poland, don't have that.
I'm not sure who the Treasury Secretary would call, Joe. I do know who we're not calling, but having live from our world headquarters in New York, and that is Josef Sikla. He is Commissioner for International Partnerships at the European Commission, joining us now on Bloomberg TV and radio. Commissioner, thank you for your time. You're, of course, in New York now, in part attending the Bloomberg NEF Summit. You also are meeting with private businesses after being here in Washington last week for the IMF World Bank spring meetings. And I wonder, based off the conversations you're having here while in the United States, if you're confident that some of these issues between the EU and the U.S. will be bridgeable in short order.
I'm confident that finally we will turn to common sense, because basically this instability is not a good message for business, because business is always looking for safe havens, for predictability, for stability. And this is something we want to offer, to remain the reliable, stable and predictable partner. And I have a good feeling that we will solve the issues to a mutual interest.
Well, Commissioner, I'm curious your thoughts on what the Treasury Secretary said this morning, that the European Union has some internal matters to work out. He specifically pointed to the tax on digital services. Is that an accurate read on the current state of affairs inside the EU?
tariffs are basically the bad things. I think for business it's better to build bridges and gateways rather than walls and obstacles. And based on our analysis, basically the tariffs, if will be implemented and if there will be escalation, will basically decrease the GDP growth in both parts of Atlantic, in Europe, but maybe even more in US. And I think that the biggest hit will be on the world trade. Based on our analysis, you know, the world trade can drop by 2% plus already this year and even more, like a 3% plus next year. And of course, the more vulnerable countries, the weakest countries will basically get the biggest hit. And this is something we have to avoid. We have to rather focus on bring basically the stability back. So we are negotiating. There are tangible offers from our side, like I do not now to comment on details, and then finally I believe that we will find a solution to a mutual benefit, as I already mentioned.
Well, even if a solution can be found, obviously the fact that these negotiations have to happen at all, Commissioner, is evidence of the U.S. taking a bit more of an inward tilt, isolationist, if you will, protectionism perhaps comes along with that. And I wonder if you see that as opening an opportunity for Europe to fill the void that could be left by the U.S., not just when it comes to markets for trade, but also leaders in investment or in development finance throughout the world, as the U.S. seems to be turning away from those things as well.
I think that the investments in development are basically the base for global stability. And we very much regret the decision of the U.S. administration basically to decrease the involvement. Of course, this is an opportunity. This is opportunity for Europe. But what is, I think, even worse, this is also opportunity for our economic and political competitors or even rivals. So we should not leave space in other continents for more Russia or more China. And as I already said, Europe has been by far the biggest provider of development assistance with more than 90 billion. This is 42%. This is by far above our share on the global GDP. We will remain to be a predictable state partner. We stick to our commitments, and of course, we want to use this opportunity selectively to basically even increase our presence and our visibility. However, I have to be very honest with you. The gap is too big to be closed just by European Union and the member states.
Okay, so let's just have you finish that thought, Commissioner. Is the vacuum being created by the U.S. or potentially being created? Will that be filled by China?
It is one of the scenarios which can happen, and I don't think that this is the good scenario for basically democratic world. I think, you know, we have been for decades the main partners protecting democracy, protecting rule-based order, basically contributing to the world stability and providing the development assistance. And basically we still have our responsibilities in this area.
Well, and the public sector is one thing, Commissioner, but what about the private sector? As I understand, that's what you're focusing specifically a lot of your energy on this week.
This is of the utmost importance because basically with the current gap on sustainable development, the goals, which is more than 4 trillion, we will never, ever be able to close the gap just with the public spending. So basically to create conditions on the partner country side, basically to create more investment friendly environment, to create e-governance principles, to basically help to implement more friendly tax environment, and on our side, basically to come with a de-risking, with a blending schemes is one of the ways how to close the gap. And this is basically what we want to do with the global gateway strategy, to team up with private capital in sustainable development, sustainable energy production, sustainable electrification, sustainable industrialization, connectivity, to allow to invest in the job creation and in the value chains on spot, and to allow also these countries to access to the world markets by creating transport corridors.
Speaking for the European Commission, Josef Sikala, Commissioner for International Partnerships, with us from World Headquarters in New York. Thanks for joining us today on Bloomberg. Of course, we're a day after the big election in Canada. And as we try to unpack everything that happened and the remarkable changes that we saw politically in the weeks leading up to this contest, Mark Carney, indeed, the victor here, and more specifically, his Liberal Party. He spoke after the votes were counted.
Our old relationship with the United States, a relationship based on steadily increasing integration, is over. The system of open global trade, anchored by the United States, a system that Canada has relied on since the Second World War, a system that, while not perfect, has helped deliver prosperity for a country for decades, is over.
Let's bring you live to Ottawa right now, where Bloomberg's David Gura is still on the scene, having spent a couple of days covering this contest. David, I'm sitting here in Washington and supposed to ask you about the role that Donald Trump played in all of this. The fact is, you can't avoid it.
You can't avoid it. We learned from Radio Canada a few moments ago that the two leaders are scheduled to speak this afternoon, so we'll have to get a readout of that in short order. But the big open question now is, when are these two leaders going to meet? If you go back to what Mark Carney said over and over again on the campaign trail, he was eager to go to the White House and sit across from Donald Trump and make the Canadian position known. Of course, Donald Trump has infused himself into this election in two ways. The first, of course, is on the issue of trade and security. The second is on the issue of sovereignty. And as you heard there from Mark Carney, the Prime Minister, he's really couching this in historical terms. What he said last night in that victory speech is this is no longer a surprise to Canadians. They were surprised at first, but they've moved beyond that now, and they have to plot a way forward. And you look at the way that Prime Minister Mark Carney has approached the job since he assumed it a couple of weeks ago. He's taken trips to Europe and to the United Kingdom. He's had calls with all manner of foreign leaders. He's trying to find new allies with whom Canada can work going forward here. He's trying to find new ways for this economy to work internally, looking at the ways that these provinces can trade with each other more than they have in the past. He's clearly turning the page here. And again, Joe, the thing that we're waiting for is some indication of when these two leaders are going to meet. When that happens, Mark Carney says he's going to be forceful in his messaging about trade and the economy. He's also going to be forceful that sovereignty is not something that's negotiable for this country.
How much, David, will he be constrained, though, by the parliament that he has to work with? As we consider that this election system is a bit different than ours, the number of seats actually matters. Is that going to hinder Carney as he tries to counter the U.S. and do all of the things you were just mentioning?
This will be fascinating to watch. He has a mandate, but he doesn't have a majority in Parliament, and he narrowly got one. He didn't get it. So he's going to have to work with these other political parties, some of whom have issues of their own. The NDP, for instance, saw its leader resign after a poor showing in the polls yesterday. So it'll be interesting to watch somebody who's an avowed and proud technocrat, somebody who was a central bank governor for most of his career, now approach the politics of the job and have to assemble that coalition, assemble those agreements to make those pieces of legislation get through Parliament here. Again, just fascinating to watch that unfold, and that's definitely high on the agenda here over the next few days.
All right, David Gura, Bloomberg correspondent, live in Ottawa, where clearly, as we can hear on Bloomberg Radio and see on Bloomberg TV, the weather seems to be not as ideal as it was when David was reporting for us on Election Day, but we appreciate it all the same. And of course, I'm not sure the extent to which, although we very likely could hear about it given the proximity and the issue of the auto sector, Joe, we'll hear from President Trump about the election results in Kearney when he takes the stage in Michigan tonight, knowing that auto specifically and the transit of parts across Canada's borders, Mexico's borders is an issue as he visits Macomb County, which is an automaking stronghold.
That's for sure. He's going to be in the suburbs of Detroit talking about auto tariffs and a bit of relief that will apparently exempt automakers from dealing with tariffs stacked on top of other tariffs. Thinking of aluminum, for instance, on top of reciprocal. He's going to try to iron this out. Getting headlines as well from the Commerce Secretary saying that he's got a trade deal pending approval right now. He's not naming that country. We've heard a lot about South Korea, our other Asian partners, as well as India, though, and it could be one of those.
Yeah, and perhaps the president will have something to say on that further this evening. We'll, of course, have special coverage of that. As long as the president's talking, we'll be on the air here on Bloomberg TV and radio. It begins, though, at 5 p.m. Eastern with the late edition of Balance of Power.
We'll see you back then. And we'll be here for the duration, as Kayleigh mentioned, throughout that rally. So join us a bit later today, right here on Balance of Power on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is a Bloomberg Business Week. A very good afternoon, everybody. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. I'm Tim Stenivek. Emily Grafeo of the Bloomberg News Cross Asset team is in for Carol Masser this afternoon. Emily, welcome. Good to have you. How are you?
Doing well. Markets are higher, at least for today. So
yeah, it's interesting. They're seeming to kind of look past this weak consumer confidence and labor data to send the S&P 500 toward its best 6 days, going all the way back to March of 2022. It's up more than 7.5% just in that little bit of time. We're going to have more from Charlie Pellet in just a minute. And on that consumer confidence data, we're going to be hearing from Mike McKee, too, in just a minute. Also, following everything out of Washington, D.C. and out of Michigan, where President Trump is headed, the latest on auto tariffs as the president makes his way to the heart of the U.S. auto industry to mark his first 100 days in office.
And what's going on with Amazon and those tariffs? Matt Day will clear it up for us. And that government work is costing him as Elon nears the end of his 130-day Doge stint. He's $113 billion down, Tim.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
Well, hello there, and here's what's going on. The Dow, the S&P, NASDAQ all pushing higher right now, with the S&P up 36, up by about 0.7%, on track for its 6th day of gains. The S&P now at 55.65. Dow Industrials up 364 now, up by about 0.9%. We've got NASDAQ up 103 for the NASDAQ Composite Index. That is a gain now of just about 0.6%. The Bloomberg Mag 7 Index ahead of all those tech earnings this week, up by about 0.4%. The 10-year, 4.17%. The 2-year, 3.65%. Gold now down 0.9%, 33.14 the ounce. West Texas Intermediate crude down 2.4%, 60.59 a barrel. And Bitcoin now up 0.9%, 95,360 on Bitcoin. General Motors is withdrawing its earnings guidance for 2025 and putting $4 billion in share buybacks on hold due to uncertainty around U.S. tariffs. General Motors shares today, right now, we do have GM trading lower by 1%. Again, recapping, stocks higher, S&P trying to make it 6 in a row, up 37, up 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Let's talk cars, because President Donald Trump is scheduled to sign an executive order easing the impact of auto tariffs, preventing duties on foreign-made vehicles from stacking on top of other levies and lessening charges on parts from overseas used to make vehicles here in the U.S. U.S. automakers did gain as details of the tariff relief came into view, though they've since given back some of those gains, bouncing around a little bit right now. Also, General Motors pulling earnings guidance for 2025 and putting $4 billion in share buybacks on hold. This is until it has more clarity on the impact of U.S. tariffs. So, yes, a lot to get to, and we got a great group of folks joining us now. Keith Naughton is Bloomberg News auto reporter. Mario Parker is Bloomberg News managing editor for U.S. economy and government. Keith is in Detroit. Mario is in Washington, D.C. Keith, I do want to start with you. The auto tariff story is obviously a very interesting one. It's one that you're keeping a close eye on. What is the latest update and details that we have from the White House as to what actually will be removed? And a reminder that President Trump did impose these in the first place.
Right. So what we had was auto parts tariffs that were coming, Tim, this Saturday, May the 3rd. And President Trump has given sort of a partial reprieve on those. The tariffs will go forward on auto parts, but then companies can apply for a reimbursement, essentially, an offset, which starts at a certain level immediately and then goes down the following year and then goes away the year after that. So the idea is to encourage the movement of production to the United States, but to give the companies time to get that done. He's also providing some relief on what's known as tariff stacking. You might recall there's also a 25% tariff on aluminum and steel, and cars use a lot of aluminum and steel. Well, now, if you're an automaker, you don't have to pay that tariff too. You just pay the 25% tariff on imported cars. You don't stack the aluminum and steel tariff on top of that.
What is offset? Like, you use this term offset. How does that work, and how is it measured, and what exactly is that?
Yeah, so it's complicated. I actually need to look at my screen to give you the correct numbers, Tim, but it starts at 3.75% worth of your U.S. built car. You can apply for reimbursement on after you've paid that 25% part tariff. That goes down to 2.5% in the second year and nothing in the third year. So You get some reimbursement. I think we're still trying to gain clarity on what that actually means in dollars and cents, but the companies are responding positively. So I think it's significant.
Mario, can you talk a little bit about just where we are now in the process of Trump raising tariffs? I mean, how much relief is this causing for the automakers, and how expected was this for the industry after all of the headlines that we've gotten out of this presidential administration?
Has welcomed it. The CEOs of the big three issued statements on the heels of the announcement being reported, the reduction or the relief, if you will, being reported, lauding the administration for the move. We know that behind the scenes, of course, obviously automakers were lobbying the administration for quite some time. President Trump has said this several times over the last several weeks, that he hinted, if you will, telegraphed that he would give some type of off-ramp or some type of relief to automakers with the promise that they'll onshore more manufacturing going forward. Now, that's from the White House, at least, that he said that that's the reason. He said things like they need more time, et cetera. So on the balance, this seems to be positive for the big three U.S. automakers based off the statements that we've gotten. And for the White House, they get to both claim a victory, saying that there could be onshoring of manufacturing later on, but also that he's been, in some ways, benevolent with the tariffs.
I think one thing that is interesting to me is that we're getting some news about foreign automakers as well that do business here in the U.S., Keith. And the reason I bring this up is because the president has touted companies such as Hyundai coming to the U.S. to make vehicles. But if my understanding of this is correct, these foreign companies that are manufacturing vehicles in the U.S., which I think is what the president's goal is, they could also be hit?
Well, I mean, you know, the one thing to keep in mind is that foreign manufacturers have been building cars in this country for over 40 years. Your Toyota is coming from Kentucky, your Subaru is coming from Indiana, your Honda is coming from Ohio. The biggest importer of cars to the United States is General Motors, America's #1 automaker. They import more cars to the United States than Toyota, Mercedes, any other company. So the notion that, you know, it's a zero-sum game, that cars that come into the United States are foreign, well, those cars have names like Chevrolet and Dodge on them. So they're not foreign. They're U.S. brands. They're built outside of the United States.
But at the same time, there are companies like BMW and Mercedes that look foreign to American consumers, but those cars are built, some of those vehicles are built here in the U.S., Keith.
Absolutely. Alabama, Mississippi, throughout the South, Volkswagen, you name it, just about anybody. Hyundai has said they're going to double their U.S. production. Hyundai Kia is one of the biggest importers. After GM, it goes Toyota, then Hyundai Kia. So they're going to double their production, investing $21 billion in the United States. President Trump is looking for more announcements like that.
Okay, well, speaking of announcements, Mario, the president is set to deliver remarks tonight from Michigan, the heart of the U.S. auto industry. The messaging here, I think there are outside analysts who would argue that he's essentially going back on what he's imposed or what his administration has already talked about. What's his messaging around this going to be later?
Well, his messaging will be that he's done all of these things in his first 100 days to benefit the blue-collar worker, even as polls show that the president is losing support and the confidence of Americans, specifically on his economic plan, as they've been rattled by the tariff rollout. He's going to tout, I mean, he's going to Michigan to announce what we're talking about right here with some of the tariff relief, and again, to characterize it as saying that he's there for those working class voters. And one thing that is striking is that we haven't seen, this is the president's first real rally since he's won the election. So we see the White House starting to get him back out there in order both to sell the tariffs, to pivot toward this reconciliation package, this tax bill that he wants that he's billed as the second prong of his economic relief to Americans. And and then also to interact with voters again and try to raise his standing and his political capital.
Keith, we got some news from General Motors earlier today that they're pulling their earnings guidance for this year. It's a theme we've seen across industries, but for autos specifically, how have the tariffs thus far affected this industry, and is today's change going to kind of change the future of that at all?
Well, the automakers are certainly hoping that this relief will make the future less dire. They were very, very concerned that full tariffs on parts would really break the bank. But it is already affecting things. What has happened is there's been this rush to dealerships as consumers head out and try and get cars before the tariff prices hit, which are expected to come this summer. So there's this big surge. March sales were up 11%. They're running high again this month. There was this big surge in sales that is expected to then taper off when the tariff prices hit this summer.
Hey guys, gonna have to leave it there. Thanks to both of you for joining us. That's Keith Naughton, Bloomberg News auto reporter, Mario Parker, Bloomberg News managing editor for U.S. economy and government. As I mentioned, the president making his way to Michigan to mark his first 100 days. The backdrop to that visit is a consumer that's feeling a little bit less confident. U.S. consumer confidence fell in April to an almost 5-year low. This on growing pessimism about prospects for the economy and the labor market due to tariffs. Michael McKee is Bloomberg News economic and policy correspondent. He joins us here in the Bloomberg Business Week studio. Mike, I'm going to get to the consumer confidence numbers from the Conference Board in just a minute. But first, I want to just pick up on some comments that we heard from the Commerce Secretary, Howard Lutnick, earlier on CNBC. He said that a trade deal is pending approval. We don't know the details, who that would be with. But there's also some confusion about who actually can make a trade deal. Just clear that up for us.
Well, it depends on what you're talking about. If you're talking about an agreement to continue negotiating, sure, they can do that. Agreement in principle that if we cut our tariffs, you'll cut your tariffs. But any kind of detailed trade agreement is going to have to be ratified by the Senate, any kind of treaty. So I doubt that in the last week or so they've gotten that far on anything. So this will just be sort of public relations and sort of maybe a step forward, but not real progress.
So should we think about that in the context of a big deal with China that ostensibly could get done during this administration? It would have to be approved by the Senate?
Well, it depends on the kind of agreement that they make. There is something called an executive agreement, which the President Trump made with China in the first term that you didn't have to have it ratified, basically, but it was just a series of promises. It wasn't a treaty that would be enforceable. And of course, as we know, the Chinese did not live up to their promises.
We got a lot of economic data today. We still have more coming up later this week with payrolls, but I want to start with consumer confidence, because we know that sometimes what consumers say they are feeling is not exactly what they're actually doing. There was a recent Fed study about this. But what did you make of the data out today from the Conference Board? Decreasing, consumer confidence decreasing for the 5th straight month, the longest stretch going back to 2008. Is it all due to tariffs?
It's pretty much all due to tariffs and the kind of surrounding confusion and chaos in the administration. The interesting thing is that current conditions didn't really move all that much, went down just a little bit, but expectations for the future really cratered down to the lowest since 2011. People are hearing that the import taxes are going to go up, and they're hearing that we might have a recession, and they're hearing that we might see unemployment rise, and so they're getting worried about it. But as you pointed out, the Fed Fed has always said we watch what they do, not what they say, and they just came out with a study last week saying that what they say doesn't really match up well with what they do. People have been complaining since the end of the pandemic that they feel lousy about the economy, but not only are they spending more, but they're buying more things. So they haven't cut back on their spending because of that. Now, we haven't had a recession since then, so maybe what the consumers' confidence numbers are telling us now is going to turn out to be different, but you have to take with a little grain of salt in terms of trying to predict the future.
Okay, well, speaking of data, we did get some data today that showed that U.S. merchandise trade deficit unexpectedly widened in March. This to a record. Companies continued importing goods to get ahead of tariffs. What did this data tell you?
Well, this is one where you can predict the future because we get the GDP numbers tomorrow, and this is probably going to put us into a contraction. The deficit was so wide, and it's largely because people were trying to front-run tariffs. The biggest increase in imports was in consumer goods, up 27%. Biggest increase in exports for the U.S. was in automobiles, as people tried to get them out the door before tariffs made them too expensive. So you could really see the tariff impact. Now, because it's so wide and imports subtract from GDP. Most analysts think that we're going to probably now, they've plugged in the numbers to their spreadsheets. They think we're going to see some sort of contraction. You get different numbers from different people, but the Atlanta Fed GDP now, which everybody follows, is looking at about a 1.5% contraction in the first quarter.
The cross-asset team on Friday did a whole story about alternative data and how Torsten Slok from Apollo, he was one economist, but we had other people that we interviewed, investors, economists, looking at things like TSA, checkpoint data, amount of people driving for Uber, shipping data was one point. I'm wondering if in your side of the world of economics, you're looking at alternative data to kind of discern some signal about the economy that maybe the more hard data, more traditional data isn't telling us yet?
We look at all kinds of data, and this has been going on for a very long time. It really kind of ramped up during the pandemic when the government was mostly shut and we weren't getting complete data sets from the government, and everybody started looking at things like open table. Are people going out to eat?
Or the subway turnstile.
The subway turnstile.
Info, which you can get on the terminal.
Yeah, all kinds of things that people call alternative data. Now, there are alternative data sources being used by the government, the BLS for prices, and in retail sales, they get data from private providers, and they work that in. ADP's numbers go to the Fed, and they massage those to put into whatever they're doing. So it's not something that's particularly new. The thing that is getting a lot of publicity these days is the shipping numbers. The folks from the Port of Los Angeles have been out talking about how there's no ships coming in, et cetera, and a lot of people are worried by that, and they think that we're going to possibly see some empty shelves. So that's gotten some traction. But it's not a completely new thing. Although I heard the Fed is asking for your credit card statements.
Yeah, I had to book a bunch of flights. I have weddings coming up. I was telling Mike McKee.
All right, so you're contributing to the economy.
Yes.
Mike, before we let you go, 10 seconds on JOLTS.
JOLT's kind of meaningless right now at this point. We know that we still have more job openings than we had prior to the pandemic, but nobody's hiring. So do they really count as job openings? It's not something the Fed is going to be particularly concerned with at this point.
All right, Michael McKee, Bloomberg News economic and policy correspondent. Stocks higher, the S&P up by more than 0.7%. Up next, Amazon and tariffs. Matt Day is going to clear it up for us. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, Nasdaq. They're all advancing right now, very close to session highs on the S&P 500 index, up 32 right now at 55.60 on the S&P. That is a gain of about 0.6%. Dow Jones Industrial Average up 313 on the Dow, higher by 0.8%. The Nasdaq Composite Index up 0.6% right now. Nasdaq up 97. We've got the 10-year yielding 4.16%. With a 2-year, 3.65%. Spot gold down $28 the ounce, down 0.8%, 33.16 the ounce. West Texas Intermediate crude down 2.5%, 60.48 on WTI. And Bitcoin up 0.8%, 95,283 on Bitcoin. Amazon says it never planned to widely display the cost of President Trump's tariffs on products after the White House blasted the reported move. We got a whole lot more on the controversy coming up in just a moment. Amazon, though, on an update for the rest of the market. Amazon down 0.2%. Economic bellwether UPS expects to cut 20,000 jobs this year and close dozens of facilities as it dramatically reduces shipments for e-commerce giant Amazon.com. UPS down 0.1%, rival FedEx down 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Amazon said today that it will not display the cost of U.S. tariffs on products after the White House blasted the reported move and President Trump called Jeff Bezos to complain. The White House earlier Tuesday seized on a brief Punchbowl News report that Amazon would, quote, soon begin displaying the cost of U.S. tariffs on individual products next to the total listed price. White House Press Secretary Caroline Leavitt blasting the purported plans.
I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. It's another reason why we are onshoring critical supply chains here at home to shore up our own critical supply chain and boost our own manufacturing.
That was White House Press Secretary Caroline Leavitt earlier today. Matt Day joins us. He's Bloomberg News technology reporter. He covers Amazon. He's out there in Seattle. Matt, clear this up for us. What's going on here?
So Amazon says there's nothing to see here. What they say is they do have a program that kind of like Temu will ship parcels cross-border from China and Hong Kong
This is
to the US.
Amazon Haul.
Amazon Haul, that's right. This is kind of a little-known service compared to their retail site. They launched it last year. So what Amazon says is they were considering for a time, putting import duty notices on those products, right? Those products, today are exempt from duties. That's a loophole that the Trump administration is planning to close as soon as this week. Temu has already, shown customers and shoppers, some version of what the import duties would be. They were considering doing that. The report out this morning from Punchbowl that you referenced earlier didn't make that distinction, and that's what the White House was responding to. Amazon comes back to us today and says, listen, we were never thinking about anything for our wide retail site. They also say they're not going to implement this for Haul either.
So, Matt, Amazon's response, was it directly because they were, responding to the White House, or does your reporting show that they really weren't ever planning on doing this?
It's not clear to us how far along these talks were. I mean, it is worth noting again that, people have been throwing around screenshots on Temu for a couple of weeks now, showing that for folks getting things cross-border after the de minimis loophole, as they call it, gets closed, they were showing them duties. So it would make a whole lot of sense for Amazon to be considering something like this. We don't know how close it was to rolling out. And to take Amazon at their word, this was not something most shoppers would have seen. It wouldn't have been on their main retail site.
Well, what could shoppers... Sorry, go ahead, Matt.
It definitely looks like they were responding to the White House.
Yeah.
Once the before Seattle was awake this morning, the press secretary, accused them of a hostile and political act. So they definitely had to pick up the microphone on this one.
Yeah, maybe gets the attention of a certain Jeff Bezos who spends time in Florida these days. Matt, I'm wondering specifically about the de minimis tax and like what consumers might see as a result of these tariffs going into effect. Like, our prices on Amazon for stuff that we buy that is imported, how much are those prices going to go up?
It really depends. With Amazon, they buy things and they get things to consumers in a whole lot of ways, right? In addition to the direct, Temu-style shipments, they're also a classic big old retailer. They buy in bulk, just like Target or Walmart or Home Depot might. They import things themselves. Some things their sellers import. So it is all a big mess. We reported that Amazon in some cases has asked some of its vendors in China to do the importing themselves, right? Which seems sort of a first sort of negotiating tactic to maybe pressure them into eating some of this cost, but we just don't know what the bottom line is going to be for consumers. There's a lot of estimates out there.
When we were speaking earlier with Mike McKee, Emily, you brought up this idea of looking at container shipments and ships that are going into the U.S. Matt, at this point, are we starting to hear of concerns with regard to empty, quote unquote shelves, empty storefronts on Amazon as a result of a slowdown in shipments from China?
Nothing specific to Amazon, kind of beyond those broad reports we've all seen about, hey, container sailings are way down from, this point a year ago. I think that's probably still too early for an Amazon-specific story, given that, we haven't seen the calendar roll into May, which is really when the first glimpses of this might appear. It's worth noting, too, that Amazon hasn't said a whole lot about tariffs one way or the other. They really don't want to stick their neck out on this. And so that's part of why today was so interesting, is that they're in the conversation whether they want to be or not.
Matt, I'm sure the folks at Amazon today were hoping that we'd all be talking about something else Amazon related, and that's Project Kuiper. It's their first batch of production satellites that reached low Earth orbit, and it's a step in the company's effort to establish a broadcasting internet connectivity from space. It sounds a lot like SpaceX. Is it a viable competitor to SpaceX?
A lot of people are hoping so. A lot of businesses have dreams that it's not just going to be Elon Musk's Starlink with an internet from space outfit. A lot of government entities as well have banked on Kuiper, Amazon's satellite offering coming online at some point. So this is much delayed, but it's welcome news for the folks at Amazon who are plugging away on this. They got plans to launch something like 3,000 more satellites here in the next few years.
How far ahead of Amazon is SpaceX right now with Starlink? And also, I'm curious about who actually did the launch here, because Starlink has its SpaceX satellites, which can do the launching. Bezos, of course, has Blue Origin, but who got these satellites into orbit?
So these ones were sent by United Launch Alliance, a workhorse Boeing Lockheed joint venture that accounts for a ton of U.S. government business. But you're right, because SpaceX has its own sort of captive launch arm that is the most successful rocket launch outfit in the world right now. They've been able to get out to a huge lead with their Starlink constellation. They've got more than 7,000 satellites, I think it is, in orbit. Amazon's sitting on 27, so they got a whole lot of catching up to do just before they're in the same conversation as Starlink.
And I know that retail customers, like individuals, households...
Like Carol Masser.
Carol Masser's using Starlink?
She's got Starlink.
So is this project supposed to also gear towards just regular, everyday people getting internet connectivity from space from Amazon?
It will, yeah. They plan to offer a regular consumer business. It's going to vary market to market. In some places, you'll be working with a cellular service provider probably, and others they're going to sell direct to consumers. We don't know a ton about the business plan, but they've already kind of showed off the little terminals you can put on your garage or on top of your house.
All right, Matt Day, going to leave it there. Thanks for clearing all of this up for us. We do appreciate it. Matt Day covers Amazon. He's out there in Seattle. He's Bloomberg News technology reporter. Let's shift gears a little bit and talk sports and sports business, because former New York Giants quarterback Eli Manning is putting together an investment group to bid for a piece of the NFL team. That's according to people with knowledge of the matter. Randall Williams is part of the team with The Scoop. He's U.S. sports business reporter. He joins us here in the Bloomberg Business Week studio. Randall, Eli wants a piece of the Giants. What do we know?
Exactly that. I mean, he's putting together a group. He's long expressed interest. He said it on CNBC earlier this year. He's told me privately. He said it publicly. If there was one team that Eli was going to own, it's going to be the team that he plays for.
How much money is this worth? Like, what? Give us a sense of the numbers that we're talking here.
So I think we don't know right now, but if you look at the previous two transactions, or two of the three transactions that the NFL had, the Philadelphia Eagles are valued at 8.3. Philadelphia is obviously smaller than New York. And then the Miami Dolphins were valued at 8.1 when Aries and Joe Tsai bought a piece of it. So when you think of it in that aspect, I would imagine that the Giants could go for more. But also when these teams are being sold, sometimes owners have a little bit of soft spot in their heart for former players. And like, all right, I'll sell you a little bit less, and we'll have to see.
They're also business people, though. I mean, we're talking about the Mara family and the Tisch family.
Yeah.
Where would this piece of the asset actually come from? Would it come from the Mara family? Would it come from the Tisch family? Would a little bit of each kind of give way here?
So it's my understanding they're selling 10% total. That could be 5.5, but that's what makes the most sense. When the Tisch family bought 50% some years ago, I believe in 1991, they bought 50%. So if it's 10, I would imagine that it's 5.5, but I'm not so sure.
That 10% number is for a reason, though, right? It's this new rule that allows private equity to buy a piece.
Yeah, most of the teams that are considering selling stakes start at 10. Now, the Buffalo Bills sold 10 to Arctos, and then they sold another 10 to limited partners. Joe Tsai bought 3%, and then Aries bought another 3%. So we're seeing these NFL teams shed small pieces of stakes, and they're not controlling stakes. A lot of times these partners are coming in and being like, I'm happy to own a piece of the team. It's a prideful thing, and the teams move on from there.
What's the precedent here for former sports players bidding for their own teams?
There's been a lot of them recently. I mean, when Rob Penner brought the Denver Broncos, Lewis Hamilton was part of that group. You have Venus and Serena Williams, who are sort of like the original former athlete owners. You have, of course, Dominique Dawes and the Atlanta Falcons, Tom Brady and the Raiders, along with Richard Seymour. You have Vince Carter, Tracy McGrady, and Josie Altidore with the Buffalo Bills. So there's a little bit of a precedent here. But Eli and the Giants would obviously be a big deal because they have not had much success lately.
In general, are the controlling owners using this as an opportunity? And I don't mean the Tisch families or the Morrow families right now, but when they sell a piece such as this, are they using this as an opportunity to kind of gain on the asset appreciation that we've seen in recent years and get some cash as a result of that?
It really depends on the group. There are some owners who are using this money towards stadium development and training facilities. There's other owners who have succession issues. I'm not so sure that the Mara family or the Tisch family have either one of those. They could just be looking to add owners. If you look at what Mark Davis did with Tom Brady's helping along with the football operations thing. He's not, I mean, the Raiders have a brand new stadium. They have no need for that specifically, but Mark Davis is trying to have more success. So you bring in the greatest quarterback of all time, and surely Tom Brady's going to help with that. Eli won 2 Super Bowls. Maybe this will look something similar.
That's what I wanted to ask about. Like, what would you expect Eli Manning's plans to be here as an owner? Would it be more just to earn an investment return or to actually get involved with the operations of the team?
Well, if you're a limited partner, I think that the NFL's business has proven to be invincible in some aspects. I mean, when you think about the Super Bowl that just happened, it had 127 million viewers, and that was a blowout game. At one point, it was 40-6, and that's the pinnacle of things. So the business of the Giants is going to continue to grow, but for Eli, as far as his role with the Giants, that's going to have to be negotiated with the Mara and Tisch family. These limited partners, it depends on how sensitive a controlling owner is. Sometimes these owners will be like, yes, absolutely help me. I have no idea what I'm doing. But the Mara and Tisch family have won 2 Super Bowls in the last 20 years and 4 in the last 30 or 40. I think their first Super Bowl was in '87. So they've had some success.
We only have like 10 seconds, but the business of sports in general doing very well as we've seen other assets move lower in the last few months?
Absolutely. Sports is fun.
Okay. Everything's fine. You heard it from Randall Williams, U.S. Sports Business. For now, that's the caveat. He's U.S. Sports Business reporter. Check out his reporting and the team's reporting on the Bloomberg Terminal and, of course, at Bloomberg.com. Coming up next, we're talking Elon because as he nears the end of his 130-day stint at Doge, he's down to the tune of $113 billion. President Trump moments ago answering a wide array of questions outside the White House ahead of his trip to Michigan. Let's go listen now to tape playback.
Well, I think we've done everything or it's in the process of being done. For instance, the border is in great shape. 99.9% came out again today. 99.9. That I would say that was my number one thing. The economy would be certainly right up there, and I think it's doing great. We were losing billions and billions of dollars a day with trade, and now I have that down to a very low level, and soon we're going to be making a lot of money. We're going to be reducing people's taxes, and we're going to get the big, look, a very important element that we're working on now, maybe more important than anything with the border in good shape, is the fact, is the fact that we want to get, and very importantly, the big, beautiful New Deal. If we get that done, that's the biggest thing, what's happening in Congress right now. And I think we're going to get it done. We have great Republican support. If the Democrats blocked it, you'd have a 60% tax increase. I don't think that's going to happen. We have great support from Republicans. So the big, beautiful deal, that's what we want, the bill. I think the next period of time, I think my biggest focus will be on Congress with the deal that we're working on. That'll be the biggest bill in the history of our country in terms of tax cuts and regulation cuts and other things.
Canadian election.
As Pope? I'd like to be Pope. That would be my number one choice. No, I don't know. I have no preference. I must say we have a cardinal that happens to be out of a place called New York who's very good. So we'll see what happens. Go ahead.
Yes, Mr. President, you are doing so much for Africa. You are the first president that in the first 100 days focused on Africa for the first time in the history of this country. Are you planning maybe in the future visit the continent?
Sure, I would do that. I would do that, absolutely.
Mr. President, what's the biggest challenge? Do you want Angola, Mr. President? Mr. President.
Yeah, go ahead.
Will you speak to the Prime Minister of Australia at all? Mr. Trump, the Australian Prime Minister is having an election this weekend.
Yeah.
Will you speak to him about trade?
They are calling, and I will be talking to him, yes.
Did you happen to do something with the tariffs and automobiles? Were you worried about the automobiles?
No, not at all. We're just giving them a little chance because in some cases they can't get the parts fast enough. So this is just a little transition. It's 15% for 1 year and just 10% for another. It's a little bit. And it has to do, that's only the percentage of parts on the car. So it's a little bit of help for people that will be doing a great job. And these are all people, for the most part, that are building plants and will be working here. So it's a little transition. Go ahead, what? India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens. Thank you. Thank you.
Well, there you have it. President Trump making remarks as he made his way to Marine One to then head to Joint Base Andrews, where he heads to Michigan for a rally tonight to mark 100 days in office. A few headlines there. We joined that in progress, but earlier he said that Jeff Bezos was a good guy. He said that he's going to be reducing people's taxes. He also said, as you heard just now, we'll be talking to the Prime Minister of Australia about trade, and India's coming along great. We're going to have more. If he does make additional comments throughout the duration of our program, we'll bring those comments to you as we get them. Well, speaking of President Trump and Washington, D.C. and the White House, Elon Musk really bounded into Washington as a special government employee earlier this year. He joined the president in his meetings with foreign leaders and cabinet secretaries. He weighed in on defense and tariff policies, and perhaps most notably, gutted dozens of agencies as the public face of DOGE. But in terms of Musk's personal wealth, that alliance has cost him quite a bit of money, $113 billion, his fortune tumbling 25% since January 17th. That's according to the Bloomberg Billionaires Index. Dana Hull is a Bloomberg News senior technology reporter. She's also a contributor to the Elon Inc. podcast. She joins us from San Francisco. Dana, talk to us a little bit about how you measured this wealth decline. Is it just within Tesla because that's the publicly traded company, or have his private investments also taken a hit?
So Musk, obviously has 5 companies. Tesla is the largest source of his wealth, but SpaceX is actually pretty important too. And his net worth typically tracks Tesla and how Tesla is trading. So as you saw our story today, kind of two bar lines, Elon's net worth, and one is Tesla's shares, and they really track in parallel. So when there are big swings in Tesla's stock, there are typically big swings in Elon's net worth. And what we discovered, everyone knew that there was this big public backlash against Musk and Tesla because of Musk's work with Doge, but we hadn't really quantified it. And then when we actually started looking at the data, it was like, oh wow, like he has lost $113 billion since inauguration. Wow. That is 25% of his net worth. Granted, things change every day. The stock market has been gyrating wildly because of tariffs. So, this could be moot 3 weeks from now, but it has cost him quite a bit to be so publicly aligned with the president.
What about his private companies, though? Because there has been news that those companies would be set to receive some type of funding from the government.
Well, SpaceX, for example, is a long-time government contractor, and they, bid on proposals and they win because they are a very good company. They are a low-cost launch provider. They have long-standing relationships with the Air Force and Pentagon and NASA. They stand to gain even more contracts going forward. So SpaceX has an incredibly high valuation. I believe the last we reported, SpaceX is worth $350 billion, which makes it the most valuable startup in the US. And I imagine that SpaceX's valuation will continue to rise. But I don't want people to have the impression that SpaceX is somehow getting contracts that they are not, that are not valid. I mean, they have always had a lot of government contracts. They have long been a government contractor.
Talk to us about Jared Isaacman, who you mentioned in the piece, Dana, who now has a role at NASA.
So Jared Isaacman is a billionaire in his own right who led a payments platform, and he has twice paid to fly on SpaceX rockets. He has been nominated by President Trump to lead NASA. He had his Senate hearing. He has not been confirmed yet, but this is someone who just sort of knows SpaceX really well, and obviously is well positioned if he leads the agency to work hand in hand with Elon on projects going forward.
What do we know about when Musk is set to leave Doge? And then I'd love to get your take, Dana, on just what you think Musk's legacy and his role in the U.S. government is going to be in the future.
Yeah, so first I want to kind of push back on this idea that Musk is leaving Doge. The truth is that Musk is a special government employee. So by law, he's only allowed to work for the government 130 days out of the year. If you started the clock on Inauguration Day, that 130 days ends at the end of May. But the White House has a lot of discretion in terms of how they count the days and the hours. If Musk is tweeting at 4 o'clock in the morning, is that working for Doge or not? So they have some discretion about that. But what Musk did say on the most recent Tesla earnings call is that he's going to be reallocating his time kind of away from Doge and back towards Tesla. This was clearly designed to kind of help Tesla shareholders feel better. But Musk has sort of always worked in this way where he will focus very intently on something and then kind of ratchet back a little bit. So, he's going to continue to balance his responsibilities with Doge, with his companies. I don't think you're going to see him be quite as public as he has maybe in the early January, but at the same time, he's still tweeting about Doge a lot. He tweeted out something about being the Doge father with this badge. I mean, he's still very much the public face of Doge, even if we maybe see a little bit less of him going forward.
Dana, $2 trillion.
You asked a really good question about his legacy.
Oh, go ahead. I think we're having a little trouble with Dana's connection.
You asked a really important question about his legacy. I mean, sorry.
No, you're good, Dana. It's just a little bit of a delay, so go ahead. Yeah, go ahead with the legacy.
Okay. You asked a little bit about his legacy, and I think unfortunately the legacy is that he will forever have cemented Tesla's brand with the Trump administration. You saw President Trump selling Tesla cars on the White House lawn. And for the company going forward, it's going to be very difficult to ever disentangle that. A lot of people are, they see Tesla and Trump now as one and the same, and they are kind of punishing the company by not buying cars, having all these protests. And it's like a real brand issue for Tesla going forward.
All right, Dan, I'm going to try one more question with you. If it doesn't work, we're going to have to go. $2 trillion is the number that Elon promised in wasteful government spending that he would cut. But now it's just a fraction of that. What do we know?
Well, one question is whether the promise was over a 10-year period or annually. The most recent thing that Elon said was that they would cut $150 billion from the budget in fiscal year 2026. That is much less than the $2 trillion initially promised at Madison Square Garden. I think there's some nuance in terms of how that figure is being accounted for. But the other thing is, you can't just look at the promised cuts. You have to look at the cost of laying off all of these people, the cost of the litigation, the kind of brain drain and the institutional knowledge that has left a lot of these agencies. That comes with a very real cost that is often not accounted for on the other side of the ledger there.
All right, Dana, appreciate you joining us. Check out her story along with Kurt Wagner. It's on the Bloomberg terminal and, of course, at Bloomberg.com. Dana Hull, Bloomberg News senior technology reporter and contributor to the Elon Inc. podcast. Well, Goldman Sachs CEO David Solomon says activity in M&A and public listings will find a comfortable level despite uncertainty. That's led to a slowdown in activity across investment banks. He spoke exclusively to Bloomberg's Francine Lacroix at the Norwegian Wealth Fund's annual investment conference in Oslo.
We're 100 days in, and I would say there are a handful of policy initiatives that are being put forward. Some of them certainly are very, very interesting and intriguing to the market. But what's been put forward on trade so far has raised the level of uncertainty very significantly. And so I'd say 100 days in, we need another 100 days to kind of see where the policy directives are going and to try to have a better understanding of how what's talked about so far, particularly with respect to trade, is ultimately going to be put in place, how it's going to play out. But the policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. And I think it's going to be important that we get more clarity on the direction of travel from here.
What, for the markets? So if you look at markets, there's been a sell-off, a pretty dramatic sell-off in U.S. assets. It's somewhat come back, but has it been too drastic?
Well, it's not just for the markets. First and foremost, it's for businesses, it's for individuals. When there's a high level of uncertainty, people tighten their belt. They invest less, they spend less, and all those things slow down growth. And so, one of the things that has happened over the course of the first 100 days is that the perspective on forward growth has been decreased. And so when you decrease, that perspective on forward growth, that changes investors' perspective of equity values. So what we've seen is a relatively orderly kind of repricing of equity assets. And what's unusual in the context of this repricing is generally when you have that kind of equity market stress, people run to treasuries or safe haven, but here we're seeing a slightly different rotation because of the nature of the policy. We've seen a weakening of the dollar, at the margin, and so that's been different than I think what people expected.
Well, are treasuries still a safe haven?
I think U.S. treasuries absolutely are a safe haven, but you can reprice a safe haven asset as people's preferences shift slightly. I think at the margin, we've had for a long period of time a trend of capital flows into U.S. assets. And, at the margin, people are looking at their portfolio constructions and saying, given the uncertainty that's been raised in the U.S., do we want to rebalance that a little bit? And I'd say the rebalancing so far has been at the margin. Investors can rebalance their portfolio in two different ways. If you're over here in Europe and you have a European investor, they can sell U.S. assets, but also if the relationship between the dollar and the euro changes, that rebalances their portfolio weighting too. And so we've seen that over the course of the last few weeks.
Well, there you have it. Goldman Sachs CEO David Solomon speaking exclusively with Bloomberg's Francine Lacroix at the Norwegian Wealth Fund's annual investment conference in Oslo. For more of that conversation, head on over to Bloomberg.com or check it out on the Bloomberg terminal. Well, let's get a check on some stocks that are on the move today. With us is Bloomberg News cross-asset reporter Isabel Lee. Isabel, what are you watching?
American Tower. So shares are edging higher by almost 5%, and that's after the company reported earnings that beat expectations and gave an outlook that is seen as positive. So American Tower is a wireless communications real estate investment trust. So that took me a while to really understand. So for the first quarter, the adjusted EBITDA was higher than estimates, as was the revenue. And for the year ahead, it was the same story. We have KeyBank Capital Markets saying the results are positive, and the better than expected on key metrics results was great. We have Citi saying the same thing, the results are positive. And we have Moffett-Nathanson saying that these are strong results, and they said that this bodes well for the growth over the coming periods.
You're also looking at shares of Honeywell, right? Gaining almost 5% today.
Yes, lots of green on the screen. So Honeywell, it's an industrial conglomerate. They raised their full year guidance for their EPS. So the company, which plans to split the company into 3 separate companies, also said that they will use a multi-pronged approach to offset around $500 million in tariff exposure. So this includes targeting pricing moves and finding alternative sources for supplies. And still, the outlook for the demand remains uncertain. We have JP Morgan giving a nuanced comment. They said that, quote, "It's a solid quarter, though not quite as strong as the headline suggests, with most of the upside from the below-the-line items for the first quarter." They also gave a nod. They said that raising the EPS outlook and offsetting the $500 million of tariff exposure reflects agile operational execution.
All right, you're also watching shares of Pfizer in the pharma space. What's going on with Pfizer?
This is also edging higher by nearly 4%. So the company is cutting another $1.2 billion from its spending while they really search for the next big hit. We know that their obesity pill failed. In an interview with Bloomberg, the CEO said it expects to pull off 2 or 3 deals totaling as much as $15 billion this year, really just to replenish the pipeline after, again, the failed obesity pill. So the company's first quarter revenue also fell short of estimates, but they did maintain their 2025 outlook. So we talked about this earlier, and it's interesting that investors are choosing to focus on the positive because sometimes they choose to focus on the negative. The company didn't give details, though, on how existing tariffs will impact their business. So that's another ambiguity right there.
Up for 4 straight days.
Well, it's pretty remarkable. I mean, I'm zooming out on the chart right now. I'm looking at its high back on December of 2021. This is, remember, at the height of the COVID pandemic, when it was one of the well, I don't want to say one of the 2, but one of several shots that were approved, one of the 2 mRNA vaccines that were approved here in the U.S., down 54% since then.
So they've really struggled amid the declining demand for COVID vaccines. Like, I mean, who was even... Maybe some people are actually still taking those shots, but what's the next big thing for them? I mean, it can't be a one-hit wonder, and they have a series of multi-billion-dollar acquisitions, and that still really hasn't panned out.
Yeah, and the weight loss hiccup, too, that they had, especially competing with a company such as Novo Nordisk and Eli Lilly.
Yes, so we'll see what happens to them, but for now, it's looking like they might have something after that failed obesity pill, but you're right, 5 years with that time horizon, they're down 30%.
Okay, Bloomberg News cross-asset reporter Isabel Lee. And for more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Taking a look at markets right now, we're off our best levels of the day. The S&P 500 still up 0.6%, as is the NASDAQ Composite. The Dow Jones Industrial Average is higher by 0.8%. Taking a deep dive into the S&P 500 and looking at those industry groups, we see quite a bit of green in there, Emily, but still year-to-date down just about 5.4%.
I think investors are waiting for those big tech earnings that come a little bit later.
Yeah, who do we have this week? We got Meta Platforms.
Microsoft.
We got Amazon. We got Microsoft.
What's
Apple.
the other one? Apple.
Yeah.
That's right.
On Apple, you know, Howard Lutnick saying earlier that Tim Cook wants to make iPhones in the U.S. We talked to Mark Gurman yesterday. He said on the call, Mark said, I don't care about any of the numbers. I want to hear the commentary. I want to hear the Q&A because there are going to be a lot of questions about supply chains and about those tariffs. All right. That is going to do it for us on Bloomberg Business Week Daily on TV. If you're sticking with us on Bloomberg Radio, we got a great program. The close is next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump is marking his 100th day in office by traveling to Michigan and giving automakers a break of sorts from tariffs. CBS's Stacey Lynn at the White House.
According to senior Commerce Department officials, the executive order will include offsets for automakers who finish cars in America and an exemption from stacking tariffs on parts. The relief is designed to allow all the domestic auto manufacturers to grow their plants, employment, and build more factories in the U.S.
While the Trump administration is touting its economic policies, consumers are still wary, as Kelly O'Grady of Money Watch reports.
New numbers today, consumer confidence. People are not feeling good, and that expectations index, how people feel about the next 12 months when it comes to the economy, the labor market, and their personal financial situation, has dropped to the lowest level since October 2011. And particularly in the labor market, 32% of people surveyed think that employment is going to fall over the next 6 months.
Job openings have fallen to their lowest levels since September. UPS says it's cutting 20,000 jobs globally, partly because it expects fewer Amazon shipments due to tariffs. Immigration and Customs Enforcement says it carried out more than 66,000 arrests in President Trump's first 100 days. It claims 3 out of 4 of those arrests involved unauthorized immigrants with criminal records. The Trump administration has fired the authors of a key report on how climate change is affecting the nation. Allison Keyes has that.
The last national climate assessment came out in 2023 and found that climate change was already transforming every region of the nation. But getting rid of the authors puts the report at risk, and an email sent to authors says the scope of the report is currently being reevaluated.
As measles cases surge, Mexico has issued a U.S. travel alert. It's reporting more cases, mostly in an area that borders Texas. Sean McKenna is a pediatrician in Richmond, Virginia, where cases have been reported now.
It's really one of the most contagious viruses we've ever been able to identify. And so if we get into situations where measles is spreading in communities, bringing it back under control becomes incredibly challenging.
Once again, much of the nation's midsection could experience severe weather. Meteorologist Grant Gilmore is tracking a massive storm system.
We've got an enhanced threat for severe weather for parts of western Pennsylvania up into New York, and it stretches all the way down into Texas.
Over 73 million people are under the threat of severe weather today. The Dow is up 331 points. This is CBS News. A British man has turned his love for gin into a spirited mission to save the world's whales. He's opened the gin library, collecting bottles, as Tina Kraus reports.
Ollie Bullock isn't just mixing drinks. He's blending passion with purpose.
With the largest gin barring collection in the world, with over 2,000 bottles.
His gin library is tucked away on a Portuguese island in the Atlantic. For each craft gin he produces, up to $20 goes to help save whales in the region. Another $5 is thrown in for guests who stay at the library's eco-friendly hotel. Tina Kraus, CBS News, London.
Social media giant Meta has unveiled its first standalone AI assistant app. CEO Mark Zuckerberg said in an Instagram post that 1 billion people are using Meta AI across the apps, so they made a standalone for everyone to check out. He's designed to be your personal AI assistant. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily on this Tuesday, April 29th, 2025. I'm Tim Stenivek, along with a Bloomberg News cross-asset reporter Emily Griffeo in for Carol Masser this afternoon. Emily, we're seeing some buying of U.S. equities today, but we are off our best levels of the day.
People are also buying Bitcoin, Tim.
What?
I mean, look at this, 95,000. There's been a lot of volatility. There's been a lot of headlines, but at least from the analyst notes on my desk, the general feel is that in the short term, it's risk on.
Okay. That's so interesting because on Bloomberg Crypto earlier, for the last couple of weeks, we've been talking about this idea as Bitcoin as a safe haven. It's even in this month, it's outperformed gold, which is up about 6%. It's outperformed stocks, which are pretty much flat since so-called Liberation Day. It is like the outperformer. So there's this conversation happening or debate happening about whether it is indeed a safe haven. We're not talking about that today, though.
We're not talking about that, no. But, you know, it was just an aside, just a note on markets,
it's a perfect
Tim.
aside. It's a perfect aside. Hey, something we are talking about are trains, planes, and automobiles. What is up with UPS and Amazon? We're going to get the latest from Lee Klaskow over at Bloomberg Intelligence.
And inside the upheaval at 60 Minutes, we'll get that with Lucas Shaw.
Also, earnings after the bell today, Starbucks, Booking, Visa, Snap, and more. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. Indeed, 53 minutes to go until that closing bell clangs on Wall Street. With the Dow, the S&P, NASDAQ all pushing higher right now. We are on track for our 6th day of gains on the S&P 500 index, up 33 points right now, up by about 0.6%. The Dow up 337, up 0.8%. NASDAQ right now up 99, a gain there of 0.6%. The 10-year 4.16%, with the 2-year 3.64%. Gold now down 0.6%, 33.24 the ounce. West Texas Intermediate crude down 2.8%, 60.40. Emily mentioning Bitcoin up now by 1%, 95,453 on Bitcoin. Sizing up President Trump's first 100 days. Goldman Sachs CEO David Solomon told us investors are craving certainty.
Even if we have a slower economy, or even far worse, we have a recession, ultimately, when the market adjusts to that and resets, people need to transact, they need to raise capital, they need liquidity for their investments. And so part of this is just a reset of expectations, and we're in the process of that happening.
Goldman CEO David Solomon speaking with our Francine Lacroix. General Motors withdrawing its earnings guidance for 2025 and putting $4 billion in share buybacks on hold due to uncertainty around U.S. tariffs. On an update for the rest of the market, General Motors down now by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. I'm looking at shares of UPS right now. The company did report earnings early this morning, bouncing around quite a bit today. Right now, down about 0.5 percentage point. In the news, the company does expect to cut 20,000 jobs this year and close dozens of facilities as it dramatically reduces shipments for Amazon and e-commerce. Well, Amazon's e-commerce, I should say. UPS earnings per share came in above analyst estimates, though the company did back away from its full-year financial outlook, saying it wasn't giving an update, quote, given the current macroeconomic uncertainty. For more, we bring in Lee Klaskow. He's Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Lee is also the host of the Talking Transports weekly podcast from Bloomberg Intelligence. You can get that at Bloomberg.com or wherever you get your podcasts. Lee, I want to start less with the numbers that we got from UPS in terms of the top and the bottom line and focus on this 20,000 jobs and the dozens of facilities that it's going to close. We knew that there was this relationship with Amazon that was sort of, I don't want to say breaking up, but that was kind of on the rocks here. Did we learn anything new with these numbers today?
I just think we learned a little bit about maybe the pace of when UPS is going to reduce its overall exposure to Amazon. And they said that, which they've said before, by June of next year, they plan to have about 50% less of Amazon's business than they did today. And that's going to ramp up over time. They expect around volumes from Amazon to decline around 16% in the first half of this year. That accelerate to 30% in the second half, and then obviously move even higher in the first half of 2026. And the reason why they're doing it is, the business just didn't make sense for UPS. It wasn't a good margin business. The ROI wasn't there. And so, what UPS has decided to do is really focus on its network and do what's best for its network. And so it's not only laying off people, because obviously if you're doing a lot less business with your largest customer, you need less people. Also, they're going through a transformation of increasing the automation of their overall network, which is also reducing the need for people. So, they said they're going to reduce the number of employees by around 20,000. They're around 490,000 globally. So, it is, call it roughly like 5% of their workforce that they're looking to lay off over time.
So, Lee, I know Tim said that he knew about the relationship between UPS and Amazon, and that he said you also knew about it. But excuse my ignorance, I did not know that much about the history. So maybe just very quickly, you could give us the quick background on, is this Amazon related, or it's more UPS related that this relationship is now breaking up?
Yeah, this is more UPS related. I'm sure Amazon would like to have a carrier like UPS to deliver their goods at very low prices, and that's kind of what UPS has been doing. UPS will still do some of their more profitable moves, specifically returns. Returns are very good business for UPS and FedEx. FedEx used to deliver a lot of Amazon packages, but they, a couple of years ago, decided to step away from that business too. So, this is not unprecedented, and it's just really allowing UPS to free up their network to be able to create capacity to take higher margin business from small to mid-sized shippers over time. Obviously that might be at risk nearer term just because of the uncertainty around tariffs and what that might do to volumes.
Well, let's talk a little bit about that, because you and the team at Bloomberg Intelligence out with a new note, Lee, that says the U.S.'s more protectionist policies have put a wrench in UPS's outlook as the company must navigate increased demand uncertainty, which also may raise execution risk of its network transformation. What do you expect to happen in this environment, with the caveat that, look, uncertainty is the key word here. Nobody knows what's happening, but also that UPS and FedEx, another company that you cover, these are kind of seen as bellwethers when it comes to how the economy is doing.
Yeah, UPS's management team on this morning's on their earnings call, they alluded to the fact that they're seeing a lot of their customers just working, beginning to think about working through their inventories rather than going out there and buying new things. We've seen the number of bookings out of China to the U.S. on liner ships down 30 to 40%. So you're definitely seeing a slowdown in demand, and some of that slowdown is due to the fact that there was a pull forward effect ahead of the tariffs, and so you're definitely going to see a slowdown. And for the UPSs and the FedExes of the world, getting rid of the de minimis exemptions, which will happen here in early May, will also have an impact on volumes as well.
Lee, what do you make about the company's decision to not update its annual forecast? Is there any signal that we can get in terms of the health of the company UPS, or is that just something that we're seeing basically every company do this earnings season?
Well, actually surprising in my space, in planes, trains, and automobiles and trucks, a lot of the freight providers have maintained their guidance, which is pretty interesting. I think what UPS is doing is probably the right move, because at the end of the day, no one knows what demand's going to be, because the tariffs have increased the amount of uncertainty that's going on in the marketplace, and shippers really can't plan at all for their businesses. And so a lot of them are just taking a wait-and-see approach. And if you're the grease that moves commerce, which is what UPS and FedEx and other freight providers, what they do, are, you're definitely impacted by this paralysis that we're seeing in the supply chains. And oh, by the way, happy Supply Chain Day. It's
I didn't know.
Supply Chain Day.
What are we
Yes,
supposed to do for Supply Chain Day?
I do not know, but I just read about that earlier this morning. So I just wanted to wish everyone out there a happy Supply Chain Day.
Well, thank you. I can tell you're the first person ever to do that. So I think that's very kind of you, and I appreciate it. I love this, Lee. I love this. Hey, you really got me thinking about Amazon and Amazon's own supply chain. I promised we'd talk planes, trains, and automobiles as we do with you. It used to be this uncommon sight that you'd be on 95, here in the Northeast, and you'd see an Amazon semi tractor trailer. Like, that used to be a thing. Now you see them just as often as you see those from Walmart, or perhaps even more. It used to be kind of like interesting when you were at an airport to see a Prime Air plane. That's no longer interesting. That happens. It used to be notable for me to see a Rivian delivery van that is Amazon branded in my neighborhood. That's just a daily occurrence now. Lee, what portion of Amazon's own logistics network does it have under its Amazon brand right now?
Well, a lot of these, trucks and delivery cars that you're talking about actually aren't owned by Amazon. They're third-party providers. I mean, they outsource a lot of this. So, they use owner-operators in the truckload market. They use what they call DSPs to do the final delivery. It's kind of like a similar model that FedEx has, where UPS is different, where they're owner and operated. But, UPS is doing more and more, trying to take more of their deliveries in-house. And the reason why they're doing that is they're trying to not only control costs, but also control the service that they're able to provide.
Lee, we only have less than a minute left, but you had mentioned that the company is looking to more profitable business lines. What are some of those?
Right?
UPS, yes, not Amazon. UPS.
Well, so there's a couple avenues. So the healthcare industry is one. UPS, FedEx, and others are really getting aggressive and getting into or building those businesses. UPS wants to double that business and make it a $20 billion business for them in a couple years. And what they're doing that is through acquisitions. They actually just announced an acquisition, I think late last week or early this week. The days are kind of blending in with earnings season. But they just announced a deal recently, and we expect more deals to come. And they're also focused on the smaller to mid-size shipper, which just tends to have better margin business.
All right, Lee, you're going to have to leave it there. Really appreciate you joining us. Lee Klaskow, Bloomberg Intelligence Senior Transport Logistics and Shipping Analyst. He's the host of the Talking Transport's weekly podcast from Bloomberg Intelligence. Get it wherever you get your podcasts. And Emily, our first supply chain day. We did it.
We're going to have to celebrate
after this. Yeah,
we're
going to have to celebrate. We will. Hey, we're going to talk to Lucas Shaw in just a few minutes. He's standing by. He's got everything that's happening over at 60 Minutes. That's next on Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, and this Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. The Dow, the S&P, NASDAQ all advancing. 38 minutes to go now ahead of the closing bell. S&P 500 set for its best winning run since March of 2022. We have got the S&P on track for its sixth day of gains, up 35 right now at 55.64, up by about 0.6%. The Dow up 362, up 0.9. NASDAQ higher by 104, up by 0.6%. The 10-year 4.16%, with the 2-year 3.65%. Gold now down $6 the ounce, 33.22, and West Texas Intermediate crude down 2.8%, 60.28. Bitcoin up 1% right now, 95,454. So right now, U.S. stocks are pushing higher. As for the overall market backdrop, Anastasia Amoroso is chief investment strategist at iCapital. She was interviewed this morning on Bloomberg The Open.
If you zoom out from the day-to-day or the intraday market volatility, I do think you have a more constructive setup right now where technicals have corrected, and at the same time where I do think we've seen peak tariffs, and there's likely a path lower from here.
Anastasia Amoroso of iCapital. Royal Caribbean Cruises raising its profit outlook. Shares of RCL up now by 0.5%. Rival Carnival Corp is lower by 0.8%. Norwegian Cruise Line Holdings down by 0.5%. JetBlue Airways, the latest U.S. carrier to pull its full-year financial outlook. JetBlue shares today, they are advancing. JetBlue shares right now up by 3.5%. And Hilton Worldwide Holdings lowering its earnings forecast for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. By now, many of you have seen or heard or watched what Scott Pelley said on 60 Minutes on Sunday evening. It was in reference to longtime executive producer Bill Owens announcing to his staff last week that he's leaving, citing corporate interference at the most watched TV news program in the U.S. Here's what he said, quote, "Paramount began to supervise our content in new ways. None of our stories has been blocked, but Bill felt he lost his independence that honest journalism requires, the independence that honest journalism requires. No one here is happy about it." Joining us now with an inside look at everything happening at 60 Minutes is Lucas Shaw, managing editor for Media and Entertainment. He joins us from Los Angeles. Lucas, I feel like everything at this point is political, but truly, this story is political. What's going on here?
Well, it's all tied up into the ongoing saga at Paramount Global, which has been in talks to sell itself for 18 months. But Scott Pelley's comments and the resignation of, or I should say the departure of Bill Owens, because he didn't technically resign, I think is the result of, or the culmination really of months of tension between Sherry Redstone, who is the chairperson of Paramount Global, whose family controls the company, and her news division. And that started with frustrations related to kind of Gaza coverage, because Sherry is very passionate about the state of Israel. That started on CBS This Morning, continued on 60 Minutes. And then as she realized that Donald Trump's suit against 60 Minutes, which was related to the editing of a Kamala Harris interview, might jeopardize the sale of the company, it just escalated. And so you've seen her both publicly and privately clashing with that news division, ultimately leading in the news of the last week.
Lucas, tell us what your reporting has shown about those public and private clashes, and just how unprecedented this is to see the chair of a parent company of a news organization intervene in coverage like this.
Well, there was a CBS This Morning segment in late September, I believe, might have been early October, but right around there, where they interviewed Ta-Nehisi Coates, who is the author of a new book called The Message, and a particular anchor, Tony Dockapil, was kind of aggressive, shall we say, in talking to and questioning Ta-Nehisi. The news division ended up scolding him, and then Sherry Redstone came out publicly and said that they made a mistake in doing so, and she didn't think that his questions were over the line. in January, 60 Minutes did a piece on members of the State Department resigning in protest because of the kind of U.S.'s support for Israel and some of the violence in Gaza. She didn't like that piece. And that was when she started sort of privately saying, maybe we should make a change at 60 Minutes. And it's really it's continued from there. I mean, you asked unprecedented. I don't know that it's unprecedented. I mean, people who own news companies tend to like to influence what their news outlets say. Now, some of that is just in the opinion, some of it's not. We had John Malone, who was one of the largest shareholders in Warner Brothers Discovery, talk, I think, pretty openly after he helped orchestrate the merger of Time Warner and Discovery about how CNN had maybe tilted a little too far to the left. So it's sort of an evergreen topic, but people do seem particularly perturbed in this case, partially because 60 Minutes is such a storied brand and has operated with a tremendous amount of independence over the years, and partially because most people think that Trump's suits against 60 Minutes is completely meritless.
Hey, Lucas, there's a lot of directions I want to go here, but I want to know about 60 Minutes and the future of 60 Minutes without longtime executive producer Bill Owens. And with Scott Pelley making these comments on Sunday night, I mean, is this, in your view, going to be a news program that will continue to have the influence that it's had over the last few years, many years?
I think so. Yeah. I mean, look, I view what Bill Owens and Scott Pelley have done as more warning signals. There's nothing that has changed about the programming of the show, right? Even though Sherry Redstone wanted to know about upcoming stories about Trump, they did a piece on Trump on Sunday, right? They're not changing their programming. Now, will this be different in the new regime? Are they going to hire some new producer of 60 Minutes who is more pliant as part of getting their deal approved by the FCC? Are they going to eliminate some of the journalistic independence that it has enjoyed? Those are possible. None of that's happened yet. So I think what you're seeing is a lot of news people concerned about what could happen. And so it's very hard for me to project out what it will, because at the moment, I think the brand of 60 Minutes is fine, and the average person has no idea that any of this is happening.
It's a good point.
Lucas, just quickly, what did the 60 Minutes employees have to say about Bill's departure?
I mean, they're all spooked and very sad. We spoke with one of them on the record, many of them off the record or on background, and yeah, they all revere Bill as a journalist. And kind of stand behind him and don't like this idea that their owner is meddling in what they're trying to do. I think, 60 Minutes, as I said earlier, has long had a really strong degree of independence. And that has meant sort of ignoring what their owners and bosses want to say. And this notion that anyone is trying to take that away from them, is frightening and concerning to them.
All right, Lucas, going to leave it there. I know you got to run. We appreciate you joining us today. That's Lucas Shaw, Managing Editor, Media and Entertainment for Bloomberg News, joining us out there in Los Angeles. Well, as we mentioned, stocks higher on this Tuesday afternoon. Still up, but off their best levels of the day. The S&P 500 up 0.6%. We could be on pace to see the S&P 500 have its best 6-day streak going all the way back to March of 2022. The S&P 500 up more than 7% just in the last 6 days. Joining us now is Eric Weiner. He's Bloomberg News Senior Editor, Equities America. He's here in our Bloomberg Interactive Brokers studio. Why is everybody buying?
There's a bias to the upside. And it's sort of like what we were talking about yesterday when I mentioned JP Morgan's trading desk talking about how there's this sense that although things will come unglued, like there's this cloud on the horizon, it's pretty far off. So you have, say, 2 months before anything really is going to show up in data. We've paused tariffs for another 75 days, and he could pause again. So right now, if you're a portfolio manager and things are rising, you need to buy into this, even if you see things coming, because it's all about timing. So it's like you're looking at a cloud and you have a game going on, and you're saying, okay, that storm is coming in 4 hours. We can get this game in 2.
I love this.
And
Finally,
that's where we are. That's where we are. We're looking at the cloud and we're saying we can get the game in.
What's that cloud? Sorry, Emily.
Well, the cloud is everything. Okay. I mean, the cloud is the.
It's hail. It's sleet. It's snow. It's rain.
Exactly. It's the 10 plagues. No, but it really is the idea of the economy coming unglued, and it's showing up in earnings, because we have not gotten outlooks that really are definable. So the companies that are affected by tariffs right now are simply saying we don't know. So you have to guess. And when there's this upward trajectory in the market, you buy, but that does not mean that over the long term you are looking at company X and saying, okay, this company is going to do well, because we really don't know. We just know that we just have a sense that they're going to survive the next couple of months, but eventually this will show up in earnings, and that's when individual stocks start getting hit.
What about for tech earnings this week? Because Bloomberg News' Tech Watch, the headline is Big Tech's earnings problem is estimates may be way too high. That kind of sounds like a cloud.
Okay, so on that story, that is actually true and scary in that they could miss. However, the question is how much traders are actually looking at the current results versus the forward results. And it's the same kind of thing. So now tomorrow, this is all going to kick off, and we'll start hearing about, what people think about Microsoft and all the other companies, Apple, that are reporting. But at the same time, what we're talking about is what their outlooks are. So it's what's your supply chain going to look like? How hard is it going to be for you to build iPhones or chips or whatever it is? And what they're going to say is we don't know. And as long as they say we don't know, you can put on it whatever you think. And that enables you to keep buying. Because if they were to say, things are going to look bad, and that will eventually come. They will eventually have certainty of where they are. Right now, all we have is reports of ships staying in China and, threats of either empty shelves or higher prices, but nothing concrete is happening. So that's where people are.
We only have about 10 or 15 seconds left, but if we are, can you continue with that weather metaphor? How far away is it?
I would say 2 to 3 months.
Okay. It's interesting that we're hearing more uncertainty from companies and less of the idea of this is going to be bad. We haven't heard that really from companies at this point,
and the other thing is they don't want to scare everybody.
Yeah. Hey, well, we appreciate you joining us and giving us that
the weather report.
I like that. I was going to say that. That's perfect. The weather report. Eric Weiner is Bloomberg News senior editor of Equities America, is taking a look at the S&P 500. In the green right now, up close to 0.7%. The Dow up 0.9%. Coming up next, we're driving to the close with Michael Green over at Simplify Asset Management. It's Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all advancing right now. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks trading in the green right now with the Dow currently up 350 points. S&Ps are higher by 33 and NASDAQ rises by 0.5%. The U.S. 10-year yield falls to 4.17%. Gold and oil are in the red, but Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, leaders were materials and real estate. Only energy was in the red, and leaders to the upside in the Dow after earnings, Sherwin-Williams and Honeywell, while UNH fell 2% and led to the downside. Also after earnings, Pfizer rose 4%, Regeneron fell 8%, and among the financials, Wells Fargo is buying back $40 billion in stock. Regarding the tariffs, the FT reported that Trump to unveil more tariff relief during his trip to Michigan today. And wrapping things up, some of the names pointing after the bell tonight include Visa and Starbucks. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
The funky music will drive us till the dawn.
on Bloomberg Radio.
It is Bloomberg Business Week. We just got an update from Bill Maloney and Charlie Pellet. The S&P 500 up 0.6%, but off its best levels of the day, up more than, Emily, what is it, 7.5% in the last 6 days?
It's been a run of risk on. As Eric Weiner said, at least in the short term, investors are riding the momentum upwards, even if there are risks building in the background that maybe will come to fruition later on once we get more certainty about tariffs.
Well, curious about some of those risks that Michael Green has his eyes on. He's portfolio manager over at Simplify Asset Management. He joins us out there in California. Hey, Michael, you've got an interesting note that you sent to our producers ahead of this conversation, and it makes me think of something that Emily brought up earlier, and that's alternative data, because you're saying that real-time indicators of business activity like trucking are slowing rapidly. What are you seeing out there?
Well, that's absolutely what we are seeing. We are seeing forward-looking metrics, things like rail car bookings, things like trucking indicators. Those are weakening very rapidly. We're already seeing ports slowing down, in particular Los Angeles, which is going to be the first to feel the impact associated with the Chinese tariffs. That's the first destination that you hit. It takes longer to get to the East Coast locations. We're absolutely seeing something that looks very similar to the initial COVID shutdown, in which basically activity just came to a grinding halt. The key difference this time around is, unlike the COVID events in which we knew that going outside and being in physical proximity to other people meant that we were potentially putting our lives at risk, we're not seeing that type of slowdown of economic activity. It's just this slow rumbling boil that's effectively occurring underneath the surface that is painfully apparent. It's a little bit more like the stage of COVID where we were watching the events in Italy or in China and beginning to think, is this possibly going to make it here?
So how do you square that kind of like bubbling of alternative data that looks concerning with the fact that, as Tim had mentioned, the S&P 500 is up something like 7% over the last just few days here? We really have had a risk on moment. Does that all make sense in the context of what the data is telling you?
Well, it doesn't make sense in the context of what that data is telling us, but it makes perfect sense in the context of another alternate data set, which is just the very simple observation that very few people have lost their jobs yet. And so if this economic slowdown persists, if we do see the impact of this carry through, we are likely to see that show up as job losses. But for the past 5 years, most businesses have struggled to attract and retain qualified employees. That means that if something like tariffs that could be removed with a tweet or a speech are revoked, they're terrified that they're going to wake up and suddenly find that they are back behind the 8 ball and they are faced with not enough employees to meet the potential rebound in the economy that could occur. That's causing basically companies and their planning departments to freeze and say, well, let's try to reduce hours a little bit. We saw clear evidence of that in the Dallas Fed manufacturing survey, I think it was yesterday, in which we're seeing the expectation for hours begin to fall. If this persists, if it does actually manifest, and again, unlike the COVID experience, this time there's not the sense of national emergency. There's not the sense that this is a unifying event. Instead, this very much feels like it's a fracturing event where half the population is saying, I told you so, and the other half of the population is saying, well, we had to do this. Under these conditions, we're looking at a situation where that stimulus is likely to arrive much later, and only after we've begun to see the impact of it. If people start to lose their jobs, then their contributions to 401ks begin to decline. Then their contributions to their IRAs begin to decline. Then they begin to tap into their 401ks or IRAs for additional spending power. We're starting to see the first elements of that, but it really has not hit in a meaningful fashion yet. And this is one of the paradoxes of a passive dominated world. All that matters is, do people have jobs and are they contributing to their 401ks? The answer so far is yes.
And yet, I'm seeing over the last 7 days, the S&P 500 up 5.2% over the last 7 trading sessions.
Yeah, well, the simple answer is that people still have their jobs. They're still contributing to their 401ks. And anyone who is trying to trade in advance of this has already sold, right? We've seen the de-risking from Europe. We've seen the de-risking from systematic strategies like CTAs or vol targeting funds. We've seen the active managers move to rapidly de-risk their portfolios. This is particularly true in the hedge fund community. Once they've sold, they've got nothing left to sell. So the pressure on the market then becomes upwards.
Mike, have you made any recent portfolio changes in light of the tariffs post-Liberation Day? Have you added any specific hedges or taken risk off the table?
Well, we were fortunate in being positioned for this. So we actually saw this as a COVID-like event that was unlikely to lead to a slow and gradual decline. Instead, it was likely to manifest itself very much on the event. And so we were fortunate in the high yield fund that I run that carries credit hedge protection to have positioned ourselves well ahead of this event. That allowed us during the event to actually re-risk. And now we're in the process again of putting back on hedges, positioning ourselves for what we think will be the second leg down on this. Now that could be wrong, right? We could see a reversal of tariff policy, but it does very much feel like significant damage has been done, and that will ultimately have to be reflected in the flow dynamics that I was referring to before. As I start to add back hedges, I'm sure other people are doing something similar, whether they are re-risking and contributing to that rally, or whether they are taking this opportunity to add back hedges is their individual choice. But the simple reality is that we've seen much of that impact already. And so I'm looking to actually reduce risk as the month comes to a close.
I have to ask about Bitcoin because it's doing so well over the last few days. It's up 95,000 now. Is that a hedge that people are using? Are people using Bitcoin now as a safe haven?
Well, that certainly is the dialogue, right? That's the narrative associated with Bitcoin. The reality of Bitcoin is the same reality that exists for any financial asset. If people buy it, you have to find people willing to sell it. If they are less willing to sell it, the price will move higher. That is what we are seeing with Bitcoin. Just like we've seen a return to buying of stocks once the selling was done, we largely have seen a reversal of the outward flows in Bitcoin. We've seen positive inflows into the ETFs and other avenues in which people buy it. And that obviously creates a self-fulfilling mechanism, right? We're on the radio talking about, is Bitcoin a flight to safety instrument? I'm sure somebody out there is suddenly now looking at the screen and saying, gosh, it might be. Maybe I should buy some Bitcoin. If it were to start to fall, that process would likely reverse itself and you would see the flows reverse and ultimately the price would fall to reflect that. Bitcoin is just a fantastic illustration of the inelasticity in markets that I often highlight in my writings and in my speeches.
Hey, we appreciate you taking the time to join us today. We got to have you back soon. Michael Green, he's portfolio manager over at Simplify Asset Management. Speaking of the markets, on the equity side, we got about 10 minutes to go until the close. Stocks pretty much near their session high, up 0.7% on the S&P 500. Coming up next, our cross-platform coverage.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo of the Bloomberg News Cross Asset team. She is in for Carol Masser on this afternoon. We got a lot of stocks, or companies, I should say, reporting. We're going to be watching the stocks after the bell. Emily, Booking Holdings, Caesars Entertainment, Mondelez, First Solar, Visa, Edison International, Starbucks, Frontier Communications, and Snap.
So I don't think I remembered all those names that you said, but a lot of them.
Well, I just read them off the chat that Finley posted, so I cheated.
They all sound, or at least many of them sound like we'll get a read on the health of the consumer.
Yes, that is absolutely true.
Are people booking
Mondelez,
travel?
Starbucks.
Are people eating cookies?
Yes. yes, and yes. Are people buying coffees? What's going on with Brian Nickel at Starbucks? Is he Chipotle-fying Starbucks?
The Starbucks?
Yeah.
I gotta admit, I haven't been in a Starbucks in a while.
Neither have I.
So we'll have to trust these
Charlie
earnings.
Pellet, huge start every day to
Really?
Starbucks. Yeah, every day.
As a Bloomberg employee, we
I know,
get the best coffee in our
really good
office.
coffee in the office, and he still goes.
And he's still,
I know.
wow.
I don't know why he does it. We'll get an explanation from him, perhaps. Hey, there are some stories on the most read that are really piquing my interest right now. I want to start with this one from Harvard, this crossing during our program this afternoon. Janet Lauren writing about how Harvard has released its long-awaited reports on anti-Semitism and anti-Muslim bias, presenting a scathing critique of how its students treated each other in the aftermath of the Hamas attack against Israel on October 7th, 2023.
President Alan Garber said in a letter Tuesday, "I'm sorry for the moments when we failed to meet the high expectations we rightfully set for our community. And this letter also offered recommendations for the university covering admissions, handling complaints, and how it teaches. I'm sure that admissions office did get a number of complaints after, of course, all of the upheaval on college campuses.
Yeah, the federal government slammed Harvard over anti-Semitism after the October 7th attacks. The critique, though, under the Trump administration has really morphed into an attack on the university's governance, its promotion of diversity programs, and its perceived liberal bias. On Monday, the government opened another investigation alleging discrimination, this time at the Harvard Law Review.
So, Tim, this is Harvard, you're saying maybe bowing to the administration now, trying to
I don't know.
Cover their tracks?
I think that they're an example of a university that has come out forcefully against what the administration wants. You could, we could speak to Janet Lauren about this, who has really been reporting on higher ed finance and over the last couple of years on everything happening on college campuses. But I think it's welcome news, not just the administration, but many observers who say that they do perceive this liberal bias on this campus. But Harvard has made clear, I think, that it is not going to give in to the demands of the Trump administration.
Yeah. There's another story out. It's not about colleges. It's about the CIA.
Oh.
And it's by Gregory Corte. Is that how you
Gregory
say it?
Corte.
Gregory Corte of Bloomberg News. The CIA won't acknowledge whether it runs a secret Northern Virginia complex that appeared briefly on a list of, quote, non-core federal properties that the Trump admin tried to sell.
I'm just reading ahead. I'm just reading ahead of the story.
Please.
This is hilarious.
Yeah. This sounds like when you accuse like a partner of like watching a TV show before you do. Go ahead.
Like cheating on Netflix is what you're saying? Okay,
yes.
Netflix cheating. Quote, the CIA can neither confirm nor deny the existence or non-existence of records related to the sale, the agency said in response to a Freedom of Information Act request about the proposed sale of the Par Franconia warehouse complex, which is a reputed CIA facility. The spy agency frequently uses such language called a Glomer response after the secret 1974 operation to recover a Russian submarine to avoid having to say whether classified records exist.
Yeah, I mean, what are we supposed to glean from this? We can't confirm or deny the existence or non-existence. Great. We learned so much.
All right. Well, Bloomberg News did request records related to the buildings after the GSA put them on a list of properties the Trump administration was considering for sale. Hey, we're going to be joined by our Bloomberg TV team for our cross-platform coverage. The closing bell, it starts right now.
Sequential earnings after the bell, including from Mondelez, Starbucks, Booking, and Corvo. Full market coverage, that begins right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through that closing bell. It's a global simulcast, and it starts now. Scarlett Fu in the TV studio, Tim Stenovic in the radio booth. Carol Masser has the day off. Emily Grafeo filling her shoes for the day as we welcome our audiences across all of our Bloomberg platforms. Tim Stenovic, 6 straight days of gains for the S&P 500. A pretty decent rally over those 6 days into what's about to be a fire hose of earnings over the next 3 days.
Yeah, the question is, do the earnings that we get over the next few days change the tune? Because we have seen a lot of buying, Emily, over the last 6 days. The S&P 500 up close to 8% just in that period of time.
Yeah, I mean, the word on the street, at least if you look at what JP Morgan's trading desk is saying, is that the near-term momentum is risk on. The direction of travel is up. No matter what happens later, at least for right now, there's green on the screen.
And it's also worth noting that at least for today, the indexes hit their intraday highs when there's some comments from Trump surrogates, Howard Lutnick, Stephen Miller, suggesting that deals are closer to getting done. And that's certainly helping to support sentiment, at least.
And at least we heard from the White House as well that an executive order that Trump signed tackles the cumulative effect of overlapping duty on cars, which goes to the point that Jay Woods was just making on air with us, that maybe that bottom is actually in. But now, what is that top that we need to be looking for?
Yeah, and that's the question, though, too, right? I mean, it's easy to sort of look at the big gains that this market has made just over the past few days and really the last few weeks here. But, of course, you have to remember the starting point of where we were at the beginning of this year, or at least at the beginning of this administration. Still a lot of room to go in order to claw some of that back. We should point out, over this 6-day stretch, you are looking at an S&P 500 that's actually up 8%. That includes 8%. That includes a gain of 0.6% here on the day. It's going to close out right around 55.60. The NASDAQ composite up about 10% over that stretch, is up 95 points today, or 0.6%. The Dow Jones Industrial Average adding 300 points, or 0.8% here on the day. And the Russell 2000 getting in on the action with a gain of 0.6%.
All right, well, the gain's pretty broad-based. 3 stocks higher for every 1 stock that was lower in the S&P 500. 370 to the upside, 133 remain to the downside.
All right, let's get to Qorvo, a maker of special components that go into smartphones and other devices. The company reporting revenue for its fiscal fourth quarter, adjusted revenue of $469.5 million. That does appear to be a beat. The street on average was looking for roughly $851 million. Adjusted EPS also a beat, $1.42. The street on average was looking for 99 cents a share. Not really seeing any guidance jump out at me at the moment here, but you are seeing a slight move in the shares higher, up 5% in the after-hours trade.
All right, and let's also get a read on travel here from online booking company Booking, reporting first quarter revenue beating analyst estimates, $4.76 billion, higher than what was anticipated, which was just under $4.6 billion. Gross bookings also beating analyst estimates at $46.7 billion. First quarter room nights sold, 319 million, better than the expected 316.6 million. And first quarter adjusted EBITDA also topping the $1 billion mark, $1.09 billion. Analysts were looking for 849 million. So that stock right now marginally higher in after-hours trading by about 0.25%.
All right, taking a look at Caesars Entertainment. So for the first quarter, they had a loss about 54 cents a share on net revenue for the first quarter, about $2.8 billion. And their same-store adjusted EBITDA came in stronger than estimated, and their same-store net revenue sales came in bang in line with estimates. Remember, they had a tough comp period because of the Super Bowl in Vegas last year. They do point out the 2025 free cash flow will show significant improvement.
Yeah, also going to be listening on that call for any commentary about what's going on in Las Vegas. We've seen some anecdotal reports of decline in visitors to Las Vegas. In the meantime, I'm watching First Solar and seeing what's going on with First Solar. First quarter adjusted earnings per share coming in way below estimates, $1.95. Estimates were for $2.48. The first quarter EPS missing estimates. The operating income coming in below estimates as well. First quarter net sales coming in shy of estimates. Shares down 6.66%, Emily.
All right, Tim, I'm looking at Trivago. The first quarter coming in at a loss per share. The first quarter revenue also looking just actually beat estimates here, 1.24.1 million euro versus estimates of 110.7. That's all we're getting from Trivago right now.
Kind of interesting, too. I mean, when we talk about the sort of the consumer spending, and you take a look what we're learning out of Booking, what we're learning out of Caesars, and then you take a look at Trivago, and then you overlay that with what we learned earlier today out of Royal Caribbean. It's kind of interesting to see that this might not necessarily be the type of economy and the type of read on consumer spending that is going to be sort of cohesive and all as one. You're going to see layers, and you're going to see pockets of that, and I think that's reflected in the numbers.